Morning. Robin, how are you doing?
Good, sir. How are you?
I'm good. Which city are you in?
Right now in Bangalore, sir.
Good. Are you where do you live?
I live in Delhi. I'm here for work.
Devika, Prerna, I'm here.
Morning, sir. We're live now. Robin, please.
Sure. Let's start. Huh?
So start now. Devika, what are we waiting for? Prerna, what are we waiting for?
Hi, Ravin. We are live, so I request you to kindly begin the notes of the show, please.
Sure. All right, ladies and gentlemen, very good morning and thank you so much for joining in virtually. My name is Robin and it is an absolute pleasure to be your host for today. I'm honored to kickstart the day one of prestigious BW Festival of Fintech 2021 in association with BW Disrupt, the inaugural event which exclusively tracks all the aspects and conversations of fintech in India and worldwide. Launched 4 decades ago, BW Businessworld today is fortnightly magazine that has been renowned amongst the largest and most respected business magazines. BW Businessworld, led by Dr. Anurag Batra, Chairman and Editor-in-Chief, is the fastest growing business media house in the country, with a thought leadership bent in the domain and network spanning across 15 niche communities and 8 magazines. BW Businessworld is proud to be entrenched in various verticals in the domestic as well as global business ecosystem. We also curate and conduct close to 100 IP of our own throughout the year in a focused attempt to keep our communities meaningfully engaged with each other and our rapidly growing customer base across industries. BW Festival of Fintech brings together all facets of leadership in innovation driven by fintech that contribute to sustainable economic development at scale. The innovation landscape is a living showcase of bringing clarity and progress within a seemingly chaotic and confusing environment. The fintech industry is instrumental in catalyzing the overall innovation ecosystem to solve real problems and make meaningful impact in unique ways. Embracing the diversity of needs and challenges across the subcontinent. Fintech is not only about finance and information technology, but it is a complete paradigm shift of methodology. And today's event will be enlivened by a series of panel discussions that will inform us of various topics that will cover, of course, the impact of COVID-19 on global as well as Indian fintechs, challenges to move brick and mortar to brick and click, and of course, latest disruption and innovation in fintech world, along with a lot more. To begin the day's proceedings, I would request for you to come and have a look at this AB. Can we please have the invite Dr. Anurag Batra, Chairman and Editor-in-Chief, BW Businessworld, to kindly open the dials for us. Dr. Batra, over to you.
Thank you, Robin. Morning, it's my honor and privilege to be at the first edition of the BW Business World Festival of Fintech. Fintech as an industry and fintech players are really changing the landscape of how the financial services business works. If you talk of innovation in startups, if you talk of innovation that is making an impact on Indian consumers, fintech industry is at the forefront of it. The Indian fintech industry in the last 12 to 18 months has seen players that are addressing every part of the ecosystem, right from players that are addressing financing needs for education, um, players that are addressing, you know, uh, needs of SMEs, players that are addressing needs of merchants. So across the value spectrum of fintech, there are new players that are emerging from time to time. Also, the last 11 months of COVID have been a time of fintech coming into play and stepping up the game. A lot of innovation has happened in the last 11 months in the fintech industry. The fintech industry continues to grow and innovate. Every day we see new fintech players coming up. We see existing fintech players that are growing, raising more capital. And again, there are interesting models that each of them is pioneering. There are overlaps among certain players, but in almost every category and subcategory, there are players that have a differentiated business model. These are early days for Indian fintech. I know that fintech sounds simple, financial technology, but in the way fintech is using technology, it is using deep tech in a very, very real way. Looking at the consumer behavior, looking at trends using technology, AI, machine learning. Also, fintechs continue to build brands because at the end of the day, fintech platforms and fintech players need to be trusted by consumers. So fintech companies and fintech platforms are building trust amongst users. We are a very underpenetrated country, but look at the stock market. In the last 11 months, the stock market has gone through the roof. And, we had almost 2 crores invested in the stock market. They have become 4 crore investors. And it continues to grow. A part of that revolution has happened through fintech players. There are many players that are active in the stock space, in the market space. So, we at BW Business will track fintech. As editorially, it's an important domain for us. So we created this festival fintech. This is the inaugural year, first year. It will grow. Hopefully, the next one will be fully physical, and we'll be able to sit across and have a conversation. Today and tomorrow, we have thought leaders from the fintech industry uh, talking about developments, talking about the future of fintech. And in the evening, we have our BW Business World Festival of Fintech Awards. As we do with all our initiatives at BW Business World, these are awards that have been decided by a high-powered jury who has knowledge of this domain, who spent time with entries, who spent time with candidates. So tomorrow we celebrate the excellence that is happening in the fintech world and award these fintech pioneers. Because in most of the fintech domains and subdomains, I can say that the Indian companies are pioneers. We have global and Indian speakers. This is a domain that I want to learn a lot. Me and my editorial colleagues want to learn a lot and report on. So we look forward to 2 days of power-packed content and tomorrow's evening of celebrating the excellence in fintech. So all the best. We've just started. I know the fintech revolution has just started. It will only grow from here. And there are 2 domains where capital is coming in uh, to support the growth of the industry. One is edutech, the other is fintech. These 2 domains have grown in the last 11 months. Fintech enables every part of the ecosystem, as I said, right from your purchases on e-commerce to your school loans that in some cities, students and parents are using to use as a bridge for their education needs. So fintech players are finding niches where they're building businesses. So you'll see a lot of specialist businesses that will emerge in the next few months as leaders in their categories. And the future is about super specialization. So I'm sure as the fintech players march on their journey, they'll find new business model and new sweet spots. Thank you so much for being part of the first inaugural edition of the Festival of Fintech. Like all our initiatives, I'm sure it will become an industry standard and a marquee initiative that the whole financial services and the fintech industry looks forward to. So I'm equally excited as you, and I look forward to learning from you, all the stakeholders, and I'm sure my editorial colleagues will report on it very aggressively on our side. So all the best. Back to you, Ravin.
Thank you so much, Dr. Batra. Thank you. With this, ladies and gentlemen, we'll start with our first presentation. I would like to invite on the dais Tanya Ziegler, Head of Global Benchmarking, Cambridge Center for Alternative Finance, Cambridge Judge Business School, on impact of COVID-19 on global and Indian fintechs.
Hi, thank you. Thank you so much. It's really lovely to be here. I do have a slide deck that I would like to share. So if you just give me a moment to I think the host needs to enable sharing so that I might share my slide deck.
You can do that, Natanya.
Okay, wonderful. All right, here we go. Please do let me know if you can see the deck. Yes, you can?
Yes.
Fantastic. Well, first of all, good morning, and thank you so much for this opportunity to come speak with you today. My name is Tanya Ziegler, and I lead the global benchmarking activity at the Cambridge Center for Alternative Finance. The Cambridge Center for Alternative Finance is housed at the University of Cambridge Judge Business School, and we're a research center that's dedicated at looking at the evolutions of financial technology and how financial technology is really shaping digital financial services. Last year, in response to the COVID-19 pandemic, we conducted a study with the World Economic Forum and the World Bank to try to understand what the impact of this pandemic has been on the global ecosystem, but also quite critically on certain key jurisdictions and key markets, of which India is quite critical. So I'm going to spend some time today walking you through our entire study, looking at the global perspective, but then also really honing in on some key figures that we've derived from the participants that responded in India as well. And I think that should allow us to really get a good overview of kind of what is happening with respect to financial technology as a result of the COVID-19 pandemic, how firms have had to evolve their products and services, how they've had to engage with regulators and those that supervise them, and certainly what the impact has been for those firms with respect to their market performance as well as operational activities as well. So with this in mind, this study really allows us to understand, how the industry is adapting, reacting, and enduring since the pandemic. We based this study on firm level responses that came from nearly 1,400 financial technology firms from over 160 countries and jurisdictions. 22% of the surveyed respondents actually are headquartered or operational in Europe. This is then followed by the Asia Pacific region with 21% of the respondents, 14% coming from Latin America and the Caribbean, 10% from Sub-Saharan Africa, and then just over 5% from the Middle East and North Africa. Around 43% of all of the respondents that participated in this study actually reported having operations in one or more countries or jurisdictions. And on average, when we see these multi-country, these multi-jurisdictional firms, they tend to be operating in anywhere from 4 to 5 additional countries in addition to their headquarter country. When we go to the next slide, sorry, I didn't realize I was controlling my own deck. If we just hone in on India, what we were very pleased to see was that actually this was the third largest country in our study, after the United States and the United Kingdom. We received responses from 142 firms that had operations in India. And then we noted that 83 of those firms had their primary headquarter within India. We also noted that there's a very big prevalence towards firms that are retail facing. And we're going to talk about what we mean by retail facing in just a moment. But as you can see from this map, we really are now thinking of fintech as a true global phenomena. Oftentimes, much of the dialogue around fintech has been very isolated to Europe or isolated to the United Kingdom and the United States. Actually, what our study has found, and a number of studies have found as well, is that India is a very quickly growing market, one that is quite substantive, and has had a very big role in this study here as well. So if we look at the kind of verticals that we're looking at within this study, we covered 13 different, what we're referring to as primary verticals. And as you can see, we saw a lot of these coming from digital lending. This is then followed by payments and by digital capital raising. Not surprisingly, these top 3 verticals are also the top 3 verticals that we saw coming from India as well. So in India, it was 39% of those respondents were digital lending, 18% were capital raising, 17% were digital payments. When we look at just these 3 verticals, globally, this sample is over 50%. In India, this is over 70%. And though within each of these verticals, we see ample representation from each jurisdiction, we actually note that around 30% of all digital lending firms do seem to be headquartered in the Asia Pacific. And around 21% of payment firms actually are coming from sub-Saharan Africa. So we do have some concentrations. If we look at where, one of the things that we really pride ourselves at the center is that we always try to do globally comparative research. And so here we're going to start looking at, one of the key metrics that we are considering, which is that of transaction volumes. In this case, we're looking at the difference of transaction volumes between the first half of 2019 in comparison to the first half of 2020. And this is reported data from firms. Now, what's important to note is that we're not saying, for example, that fintech firms saw a value of 40%. This is not a comparative chart saying that MENA had more activity than, say, Europe or North America. But what we are noting here is that the firms that were headquartered in, say, MENA noted a much more substantive increase in their transaction level volumes. So it's just the one nuance that's important to note. So from a regional perspective, most regions are seeing growth in their transaction volumes in the first half of 2019. The only outlier really here being the United Kingdom, which actually sees a decline of around 3% on a year-on-year basis. And again, we're now doing a comparison here of, overarching region by region or significant geography against significant geography. When we look at this specifically at the Asia Pacific, where we've included India, we saw that India's overall market, and this is all of the different verticals that we noted in India, actually saw a slight increase of around 1%. Now, I know that 1% doesn't sound so significant, but actually the fact that you have such a prevalence of digital lending in the country, this is actually quite a remarkable and positive outcome. When we look at the different indicators, we look first at, again, market performance in terms of transaction volumes. So what we're doing here is comparing those transaction volumes now against those verticals. Now we've continued putting our verticals, by like lending, payments, capital raising, all the way through in the order of their largesse globally. so that we can really see, where these large impacts have come from. Overall, the global fintech market has grown in 12 of the 13 verticals, reporting year-on-year growth. So if we look at digital payments, for instance, this is where we're seeing a 21% increase in transaction volumes in the first part of the year. And this was in particularly noted, in MENA, in sub-Saharan Africa. We do note that there's an outlier, and that's very clearly digital lending, where actually we see a contraction of digital lending overall, where firms that were reporting indicated an overall decrease of around 8% in their transaction volumes. It is worth noting, however, that this performance is going to be quite dependent on your jurisdiction or your country. So we do see that some of the most dramatic drops reported are coming from the Asia Pacific, whereas if you recall earlier, MENA had a fairly high increase in their overall transaction volume changes. Now, in the case of places like MENA, we're starting off from a far lower fintech activity base. So that might help explain some of the things that we're seeing. If we hone in now just on India, and we're looking now at those top 3 verticals: digital lending firms, digital payment firms, and digital capital raising firms. And when we talk about digital lending firms, we're referring to, your peer-to-peer business lending models, your crowd lending models. When we're talking about digital capital raising, we're talking about your reward, donation, and equity crowdfunding models. What you see is that those debt-focused models, with respect to both volume and the number of transactions, actually does have a drop, 28% with respect to the volume, 29% with respect to transactions. Digital payments on balance stay around there for transaction volume around that 1% mark. And then you actually see a dramatic increase of around 42% in all of those digital capital raising activities. And this is quite significant. This is what helps us bring that average back over. And certainly we see similarly, an increase in the number of transactions. Now, interestingly, what we do note is that for digital payments and digital capital raising, we also saw a marked increase in the number of new customers that were coming onto these platforms, as well as a high proportion of retention of customers. So existing users that have come back to the platform to utilize that fintech service again. On the flip side, digital lending, we actually see a contraction of new borrowers. We see a contraction of repeat borrowers as well. Now, this is again not altogether that surprising, considering that we are in a pandemic. But what you really notice that where you have high levels of new users coming in, it really is marked how it is quite obviously correlated with higher levels or increased levels of transaction volume. Turning back now to a more global perspective, we looked at what we're referring to as the lockdown stringency metric. And what we're looking at here is how a fintech performed by the COVID-19 lockdown stringency within their specific country. So to determine this, we leveraged the Oxford COVID-19 Government Response Tracker. This tracker rates countries on lockdown measures that those countries are taking, and it accounts such factors as restrictions on mobility, school closing, any kind of government or policy mandated lockdown on the general public. We assigned each of our respondents with a corresponding rating from this Oxford stringency metric, and we created 3 equal quantiles for each of the fintech firms. So this is really allowing us to create a policy proxy for the severity of lockdown. Now, it's worth noting that India itself actually ranks in that high stringency arena. So when you're looking at this globally, India falls very much within that within the countries that fell into the high stringency. So what we see here is that the largest increases in transaction by both volume and number in markets with greater lockdown measures is higher. The higher the COVID-19 stringency, the higher the adoption of financial technology services. This increased adoption is not necessarily caused by the pandemic, but there certainly is a correlation between that stricter lockdown and that increased adoption of fintech services. And this trend is mostly consistent across all of the verticals. So not just, lending, payments, and capital raising, but also insurtech, wealth tech, so on and so forth. What we note is that, what we're trying to show here is that, it's not to say that these firms are not facing challenges, but the fintechs that are in jurisdictions with stricter lockdown measures do have, you are seeing that actually there is a greater number of individuals that are utilizing these fintech services. And it is very likely that because so many of these fintech firms are frankly just inherently digitally enabled, they're well positioned to deal with the circumstances that come around a lockdown stringency. So what we are seeing is that these adoption rates suggest that fintechs are able to adapt and help their users transact in that digital environment when in-person activities is just not possible. And again, increased adoption it's not necessarily caused by the pandemic, but we do see this correlation for sure. We also looked at the differences between countries or jurisdictions that can be categorized as emerging markets and developing economies versus that of advanced economies. And in separating these advanced economies out with emerging markets or developing economies, we do see differences in the performance by transaction volume, as well as differences in the percentage of new customers, retention rates of existing customers. And I think here what we really note is that there's a clear story that, EMDEs are having slightly higher transaction volumes, but they also have greater instances of customer acquisition, as well as markedly greater instances of retention or renewal of existing customers. And this theme of that customer engagement becomes very important as we look at the rest of the analysis and start to see, how different financial technology firms are reacting to their products and services, and certainly, what kind of regulatory needs they might have as well. So with that in mind, the fintechs that have responded to this study, and again, this is these 1,400 financial technology firms, they're fairly responsive when it comes to implementing changes to their existing products and services, and also to their terms and policies. And in fact, what we note is that just over 2/3 of the surveyed firms report making at least 2 or more changes to what we would refer to as their core offering. And this has been in a direct response to the pandemic. We also see that a further 30% of all of these firms are in the process of implementing a change. When we think of these retail-facing fintechs, and again, when we talk about retail-facing, we're looking at, fintech firms that are facing or providing services to households, consumers, MSMEs. These retail-facing fintechs, and in particular, the payment firms, the lending firms, the digital banking firms, are among some of the most nimble when it comes to implementing changes to their offering. What we saw here is that around 78% of these firms are actively making multiple changes. So you're going to see from this chart, we've presented key overarching changes that firms are undertaking, and that's the first sort of 4 columns is all fintechs. And then we also have a handful of additional changes that we see, but that are a little bit more vertical specific. So for example, deploying additional payment channels is very specific to digital payment platforms. You'll note suspension of new loan origination is going to be very specific to a digital lending or a digital banking firm. But when we look at the ones that affect everybody, these all fintechs, what we see is that there's a big emphasis on changes to qualification or onboarding. And this is quite important because this is really around that influx of new customers. It's not surprising that you're going to have an emphasis on onboarding and changes to criteria when you also are seeing this huge huge increase of customers coming to you. What we also noted is that actually around 50% of all digital lending firms are also actively making changes to how they qualify borrowers before they can actually make a transaction on that fintech firm's site. After qualification criteria, we see changes to the way that firms are positioning, their pricing. And this is really among one of the top tweaks. You can see that fee or commission reductions, payment easements, fee waivers, these are all being adjusted by at least a quarter of the different fintech firms that are responding to this study. Now, if we hone in specifically onto India, now we're looking at the top 3 verticals. So again, I'll just remind, that's the lending, the capital raising, the digital payments. And we see that this is not altogether that surprising, right? Onboarding is still the most important thing for these firms, but now we see they've made changes by about 50% of those firms have already come in and said, hey, no, we've made a change here. And then you see 8% that are doing this in progress. We also see an emphasis on payment easements, on payment holidays, really all of the things that are around the cost, right? The cost of using the platform. So there's a very big emphasis on making this more accessible for existing and potential customers, as well as thinking about, the most appropriate way of onboarding these new clients. Now, of course, it's wonderful to see fintech firms making adjustments to their existing portfolio, but it's also really important to think about how reactive fintech firms are becoming. So what we wanted to look at here is to understand the variety of the kind of new products, new services, the new features that firms are implementing when they're facing challenges that were presented to them by the pandemic. While we've seen firms very readily, pivoting existing activities, as we've seen in the previous slides, what we note here is that around 60% of all of the fintechs that responded to this study are also introducing a new product or service as well. So interestingly, what we see here is that value-added non-financial services is among the highest new category. And this is especially for firms that could be that are categorized as retail-facing, and in particular, the lending and the payment firms. In this case, what we see is that fintech firms are introducing a variety of information-based services with an emphasis on financial education and literacy. And this is, again, particularly around the digital lending firms that are placing a very significant emphasis on that product category, especially when you look at all the other verticals that we looked at in the study. I'd like to give you an example, actually, of one of the firms that responded. They responded from India. It's a digital lending platform, peer-to-peer lending platform in India. They actually recently created an add-on portal that helps low-income female entrepreneurs understand the financial products that are being offered on that platform. And so you see a number of these additional value-added services. We also then note that there's other verticals that are, emphasizing other products. So for example, when we looked at digital capital raising, around 40% of all digital capital raising firms specifically had also hosted a COVID-19 specific funding or relief campaign. And this was really noted in those donation-based crowdfunding platforms. Okay. The second thing that you see here, is really the enhanced fraud and cybersecurity features. Now, I've kind of saved this discussion for last because it's arguably one of the most critical changes that we've seen at a global level, and one that has regulatory and policy making implications, as well as implications on the day-to-day operations of the firms. So this chart is telling us that just shy of 30% of all of the fintech firms that responded to this study have made an enhancement to their cybersecurity features, with a further 12% in the process of doing so. This is, again, particularly relevant for all of those retail-facing firms that are, whose customer is a consumer, a household, an MSME. And so while it's encouraging to see that there are a lot of firms that are focusing, it does kind of beg the question, is enough being done? And actually what we know is when we hone in just on India, we actually see that in terms of enhanced fraud and cybersecurity, this drops all the way to the bottom, with only 8% of firms having implemented this change, and 4%, going through the process of making a change like this. Where we do see a great emphasis of activity from Indian firms is around that disbursement of relief or assistance funding, and in particular from lending, but more so from digital payments. We also see an increase in insurance-related products for COVID-19. We see an increase in emergency working capital, and this is quite important because we see a very active peer-to-peer business lending environment emerging in India. In India, we've seen, a very big emphasis on those MSMEs, on supporting MSMEs as they go through their funding journey. And what we build, we don't have. We're doing a study that looks at some of this in a more granular level now. But one of the nice things that we've noted over the last few years is that there has been a big emphasis on that business-focused lending, that business-focused debt activities. And so that kind of tracks with what we see as those new products and services that are coming from India. Now, when we think about, the government actors, government actors have responded to this pandemic with a myriad of policy measures. So to support the various COVID-19 related socioeconomic relief measures, fintechs are playing an active role in the delivery or implementation partners. And we've seen that, again, in this previous slide, disbursement of COVID-19, very, very important in India. What we're looking at now is that this study wants to understand, the extent to which fintech firms are engaging in or supporting activities or their willingness to do so. Now, at a global level, sadly, to date, there's limited involvement in fintechs in delivering COVID-19 related relief, despite a very high level of willingness by the firm. So more than a third of the fintechs reported a willingness to participate in the delivery of one or more COVID-19 relief measures or schemes. So this is demonstrating a fairly strong interest despite low participation rates. Certainly, there are some high-profile examples of fintechs that do function as a delivery partner. Notably, you do see a select few lending firms that have issued loans, in the United States in the United Kingdom under the United States under the SBA payroll protection plan. We also see in the United Kingdom the coronavirus business interruption loan scheme. Yet fewer than 10% of firms globally have had the ability to serve in a similar fashion. And really at a global level, only around 7% are MSME focused, only 6% are consumer focused. Now, low uptake from corresponding governments in positioning those fintechs as a delivery partner, it might relate to the fact that many governments just face, general supply issues. So it is maybe not a lack of wanting to utilize fintechs, but more a lack of capacity or resource to provide relief or stimulus funding. So it's important not to just say, oh no, governments are ignoring the fintech arena as a delivery partner, but we also need to think about the larger contextual situations within each country or each jurisdiction. Now, when we look at India specifically, when we've asked these firms, this top three, to really think about, okay, are you already actively engaging with NGO-led relief? Yes, 14%, 5% in discussion. And again, very heavily, we're willing across the board. You also see industry relief, you see, and you do see the delivery of government-based stimulus funding as well. So compared to the rest of the world, India is actually punching above the average generally. Certainly, fintech firms, they require assistance from their primary regulatory or supervisory relationship. And so in this report, we wanted to understand those key regulatory support mechanisms that fintech firms need in order to weather this pandemic. It's worth noting that many of the measures that are listed here, they're not fintech exclusive, but they're more generally applicable to financial services. And so in this context, we can begin to uncouple how financial technology firms are utilizing regulatory measures or interventions in the systems that they operate within. So when we look at the fintech responses in aggregate, and again, this is the full panel, we see that core regulatory activities relating to their customer or client onboarding onboarding are of paramount importance, with firms reporting the use of interventions related to EKYC, with 17% of respondents, simplified customer due diligence, support for remote onboarding. Not surprising given the emphasis that we've already seen with respect to how they are adjusting their existing activities and with respect to the number of users that are coming onto a platform. So it's not surprising at all that actually there is a big uptake of focusing on that onboarding side, of focusing on that customer facing activities. But what we do note is that on balance, most fintech firms are not yet recipients of regulatory support. Now, there's caveats here and there where you see maybe digital payment firms in sub-Saharan Africa that have reported higher utilization. But on balance, actually, most fintech firms are in that we urgently need, or we need in the longer term, rather than being able to say, no, we're utilizing these support mechanisms already. So an urgent need for regulatory support is far more pronounced, with overall firms reporting urgent needs in authorization for new activities, followed by streamlining of products and services, and then of course anything really that's client facing. So that again, customer due diligence, the support for remote onboarding. When we consider some of the additional nuances that are related to regulatory uptake, we found that, firms that were headquartered in, say, SSA, in MENA, in LAC, overall, these are, indicating more acute, urgent needs for additional regulatory support. Now, where India, and we're going to talk about India specifically in a moment, but where we see, some interesting trends is around that split between emerging markets and advanced markets. And what we see is that emerging markets tended to already utilize regulatory support more than firms in advanced economies. However, they also were reporting a markedly greater urgent need. So what we're seeing is that around half of all the firms in an EMDE country urgently need support, with particular emphasis on that authorization and streamlining of approvals. And lockdown stringency, and again, keeping in mind that India is a high lockdown stringency country, we see that lockdown stringency was another useful way to measure regulatory usage. For firms that are located in high stringency markets, they were reporting, at a higher level, already utilizing regulatory assistance, but also again, around 45% of those firms are saying that they urgently need assistance in EKYC, in due diligence and onboarding. So you might have instances where there's greater uptake, but there's also a much greater need coming from, countries that are either EMDE or countries that are high lockdown. Now, if we look and we hone in specifically on India, it's the same story. You have a good uptake or good utilization already of key things like EKYC, due diligence, remote onboarding, but then you also have, over 50% of the panel saying that they urgently need or need in the longer term those customer facing things. And if we look at, streamlining products and services, extension of permissions, less burdensome reporting requirements, these are kind of above the average of the global. So there is a significant urgent need from those fintechs that are based in India, that really saying, to their regulator, to their supervisor, actually, we need help in order for us to weather this storm. So it's not just what the fintech can do for the public, but also what can government, what can regulators do to support these fintechs quite specifically? What is it that they need? Now, interventions that are related to regulatory innovation has captured the imagination of regulators, policymakers, and definitely researchers like myself. And so what we wanted to do is we wanted to seek to understand how governments might be able to enhance or enable that fintech ecosystem through things like, innovation offices, regulatory sandboxes, so on and so forth. And what we see here is that, we did another study in conjunction to this one, which was also with the Cambridge Center for Alternative Finance and with the World Bank. And in that study, we found that just shy of 40% of regulators were bringing forward fintech-specific interventions, but those were mostly as they related to an innovation office, to a sandbox, or to a hackathon. So when we consider the overall fintech environment, what we do see is that actually, by and large, retail-facing firms really are focusing more on those core activities, less so than than maybe a market provisioning firm like a digital identity platform or an enterprise technology firm. Nevertheless, when we look at those EMDEs versus advanced, this is where we do see, again, yes, a bit more activity with currently utilizing, but definitely an urgent need for sure. Now, this works out quite well because, in 2019, we had seen the first regulatory sandbox, in India, that was really focused on that retail payments theme. By November of 2021, the RBI decided to establish an innovation hub. So now we've seen the setting up of the governing council. We've seen, the sort of the initial policies. Although as far as we can tell as of right now, this has not become a fully operational innovation hub yet. Where we're noticing that this becomes quite important is that, there are a number of fintechs based that are headquartered or fully operational in India that do say, actually, hey, we do need assistance with a regulatory sandbox or with an innovation office. So that's not to detract from the importance of these kinds of innovation initiatives. I just want to really emphasize, though, that what firms really are actively needing right now, more so than innovation initiatives from their regulator, is those core regulatory activities. Okay. When we look at the different operational challenges, as these financial technology firms are dealing with day-to-day operational challenges, we really wanted to understand how firms were dealing with the endogenous and exogenous factors that are impacting their platform operability, their costs, and the associated operational risks. So in aggregate, and again, this is the entire data set here, in aggregate, we see that fintech firms are noting a slightly higher increase in things like platform downtime, agent downtime, number of unsuccessful transactions. But what's important to note here is that look at your differences between the low, the medium, and the high. Those firms that are in higher stringency areas actually saw an increase in their downtime, as opposed to firms in lower medium that actually saw a decline. So it's a little, you have to kind of sort of do the mental math here a little. But what you note is that actually firms that are in those high stringency arenas, they are seeing a handful of circumstances that have made their operations more difficult. Greater platform downtime, greater agent and partner downtime, greater number of unsuccessful transactions. And then certainly when it comes to key costs like data storage expenditure, onboarding expenditure, where actually for onboarding expenditure, it's almost double that, or it is double that of the low or medium stringency countries. And this is again, where places, where we're seeing, these firms putting quite having to spend quite a bit more. And then the last, of course, is that of cybersecurity risk. And here what we're seeing is that firms that are in those higher stringency places do see a slightly across the board, we see that cybersecurity risk has increased markedly. But we also then note that this is less strongly felt in low stringency and more so in medium or high. Now, an increase of 17% in your perceived cybersecurity risk is substantial. And this tracks very well with what we've seen regulators being really concerned about. In fact, we saw from our regulatory study that, sort of 3/4 of all regulators are very concerned around cybersecurity issues with financial technology firms. And then when you look at how these firms are now looking at cybersecurity as it has impacted their own companies or their own operations, it tracks very much with what regulators are seeing as well. Now, if we look specifically at our models from India, what we actually see is that downtime has not really been too much of an issue, actually. Firms have been able to see, at the platform downtime has actually not been as bad. And this is in particular for those capital raising firms where they've actually seen their platform downtime. Again, so this -10 is really almost like a increase by 10% rather than a drop. However, their agent or partner downtime, so their ability to rely on their service providers or their vendors has increased. And this has been increased significantly for payment firms. And for payment firms, we also see that there's been a very big increase in that number of unsuccessful queries, transactions, or access requests. Now, when we think about onboarding expenditure, we saw that actually onboarding expenditure dropped for digital lending platforms, but keep in mind that they also really shrunk their new use or new borrowers or existing borrowers. On the flip side, you look at capital raising and digital payments, and this is where we see a market increase. And then everyone across the board saw an increase in their data storage costs, and then quite critically, cybersecurity. Cybersecurity is an area where that cybersecurity risk has increased. As we kind of come to the end of my presentation, in general, financial technology firms globally are reporting, downward revisions of their fiscal year turnover. In this case, globally, it's a downward revision of around 4%. Firms in advanced economies have revised this target down by 7%. However, firms in emerging markets have only reported around a 1% decline. Now, keep in mind that this is going to be different for the different verticals. So if you look at the sort of bottom right hand of the screen, what you see is that for digital lending firms, they're saying actually our annual turnover has decreased substantially. This also is in parallel with what we've noted around their capital reserves, where these firms have indicated that their capital reserves have also been impacted quite negatively as a result of the pandemic. Now, on the flip side, though, we look at digital capital raising and digital payments, and we actually see that here's where you actually see a revision upwards of 5% for capital raising, 8% for payments. And when it came to the number of full-time equivalent employees, we see a drop in the digital lending firms, but we see an increase in payments, and we see a slight increase in digital capital raising. If we look at the lockdown stringency, here's where you see, in particular places that have those low stringency countries, they've revised down quite a lot. Whereas actually high stringency markets overall, and keep in mind, we're talking about all fintech verticals here, have really been able to sort of maintain their fiscal turnovers against the previous year, or they've not had to do too much revising of their turnover targets. However, what we really note is that firms that are based in high lockdown stringency jurisdictions, they have actually really added a number of employees to their operations. So, I'd be remiss to say that, when you look at this, it's kind of like, well, what does this all mean? Are fintechs doing well? Are fintechs doing badly? I think what we can really say is that this is a mixed bag. The fintech ecosystem is growing fairly rapidly as a result of COVID. We see this because you see this influx of new employees coming on. It's one of the few markets where actually where there are furloughs, but actually we're seeing that there's growth. However, certainly, even though you have a number of new customers, even though you have greater retention of your customers, the costs, those operational costs have increased substantially. Cybersecurity costs have increased. Expenditures around your onboarding, expenditures around your data storage, those things have increased as well, markedly. And so this really can impact that fiscal turnover targets. And when we look more broadly, at capital reserves or their fundraising outlook, when we think about their financial positioning, despite seeing increases in, the high stringency places or specific specific verticals in, say, India, we're still seeing that, rising operational costs are impacting those firms' profitability, and that actually the pandemic has negatively impacted capital reserves. Around 21% of firms globally were saying that this has been a significantly negative impact. 40% of firms have indicated that they feel their current valuation has declined significantly as a result of COVID-19, and a further third of all firms have indicated that they feel that their ability to fundraise in the future has been negatively impacted by COVID-19. So although we've seen a lot of opportunities, we've seen a lot of these fintechs, and in particular in India, these fintechs being able to react to the COVID-19 pandemic in a way they can service their clients better and more easily, it has also been a hardship in many ways. And so it's very important not to just think of the opportunities, but also some of those critical challenges, and where government and where policymakers and where regulators in particular can help those fintechs weather the storm. So as I know I've gone over a little bit, so if you can just indulge me for 90 more seconds, I do want to invite digital lending and digital capital raising platforms to participate in our current study that is ongoing. So on an annual basis, the Cambridge Center for Alternative Finance conducts a time series transaction level project that looks at those lending firms, capital raising firms, so peer-to-peer lending, crowdfunding firms, where we try to understand, how at a more granular level, those two verticals have changed. So we are currently collecting data for 2019 and 2020. We felt that it would be relevant to collect the two together because obviously from one year to another, COVID has created a market change, and you can't really talk about one without the other. For some of you that might be familiar with our research already, we've actually been running this program for coming on to 6 years. So we have data going all the way back to 2011 in some cases, but mostly 2013. So if you are a digital lending platform or a digital capital raising platform, I really urge you to come to this site, to our link, to please, contribute 20 minutes, participate in this study. Your responses are fully anonymized and aggregated, but it's quite critical because it's an evidence base of information that not only allows us to really understand what's happening in your specific country, but how it compares globally. And it is a meaningful public resource. So with that in mind, thank you so much for the time. I know I've gone over, so I apologize.
So thank you so much, Tanya, and we are right on time. So thank you so much for joining in and setting the context for the day. It was a pleasure to have you here. Thank you. With this, ladies and gentlemen, we would bid adieu to Ms. Ziegler here and move on to the first panel discussion that we have for you. We'll be talking about India and its digital stack, including JM Trinity. The panel consists of the moderator, Mr. Prasad Sharma, Strategic Initiatives, BW Businessworld. I would also like to invite the panelists, Mr. Ganesh Rangaswamy, Managing Partner, Guana Capital, Mr. Naveen Kukreja, CEO and co-founder, PaisaBazaar.com, Mr. Avatar Monga, Managing Partner, Stride Ventures. So that's your first panel, ladies and gentlemen. I'll hand it over to Mr. Sharma. Prasad, over to you.
Hi. Thanks, Raveen. I appreciate you introducing us, and thank you for the panel for joining. As Raveen said, we're talking today about India's digital stack and specifically touching upon the JAM Trinity. As we are all aware, this initiative started in 2010 with Aadhaar, and over the last few years with the JAM Trinity and the India stack coming in, it's leapfrogged. As I was reading some in one place, we have now moved from financial inclusion to financial integration. We've got an esteemed panel with us. What I do is, just to kick off, ask them to just, introduce themselves to the audience and say, just give an introductory thought, a set of introductory thoughts that they have about this topic. And so then we can jump into the discussion. So, maybe we can start first with, and I'm just going to go by the order I can see on my screen. So let's start with Mr. Avatar Monga.
Hi, thanks, Prasad. Morning, everyone. My background is I'm a banker. I've been in banking, both foreign and domestic markets. And more recently, after completing my stint, I have been involved in a few things in the startup world. And the primary role is actually being a member of Stride Ventures, which is a venture capital firm. And it's a venture debt firm, actually. and we've been investing in the startups for a while. So coming back to, you want me to continue with the comments or stop at the introduction at this stage?
No, I think some introductory comments on the topic.
So I have watched this space very closely, being a banker. In fact, have been involved because my last stint was running and building a grounds up bank, IDFC Bank. And during that period, we saw a very drastic actually adoption and evolution of what is called India Stack. To my mind, this has been one of the most visible innovation the India as a country has seen in the last 70 years, because it not only has changed the way we conduct business, it also has removed a lot of friction, which used to be one of the significant problem area for the country. In fact, if one was to kind of look at this in a total sense, you can say that this is very productive. It plugs leakages, it cuts down the time window, it also enhances the visibility and understanding of what's happening, because there's a fair amount of traceability. And in future, my sense of this is that it's just a beginning. What I think so far we've seen a significant amount of work done in both Aadhaar Jan, and we talk in detail later, but more specifically in the payments world. What we will see in the future is more around how the credit gets done in the country. So it is still not, it easing the credit process, but credit itself being available will be the next game. So I think we are in a very, very strong position. And somebody asked me this question saying, is this a unique thing for India? Yes, the answer is yes, for multiple reasons. One, India has taken this call to build this at a national level. And then with the time and the improvement, they've also actually looked at other areas. So for example, there are three significant parts of this. The original part is Aadhaar, of course. That's the crux of the whole infra bit. Then the NPCI being pushed into a lot of payment innovation. It's been very significant and it's still continuing. It's not stopping. And the next big thing we need to watch for is the GSTN and related outcome from there. So to me, I think this is a very, very good thing for the country. It's helping a lot of things. And then, yes, it started with the subsidy being given to the right hands. And now it's kind of not even talked about because that's taken for granted. So that's where I think it's going.
All right. Thank you, Avtar. We'll now move on to Mr. Ganesh Rangaswamy. Ganesh, if you could, please tell us a bit about yourself and your thoughts on this, on the topic.
Sure. Thank you. Thanks, Prasad. Thanks for inviting me for this discussion. Good to meet Avtar, and Naveen and I, of course, have been partners in crime before a few times. I co-manage a fund called Kona Capital. We are probably, we are unique in the sense we're probably the only emerging markets only fintech venture fund. So we invest across Asia, Africa, Latin America, and MENA in 14 countries. And our largest market is India, followed closely by Brazil, Indonesia, and South Africa. And our focus is largely or primarily on fintech for the masses and the underserved. So it's really backing entrepreneurs and solutions who are going after solving hard problems across the financial services or financial innovation value chain for unserved or underserved consumer segments or SME segments. Over time, we have seen, and I'll make one more comment, which is probably quite integral to the India Stack discussion as well. Over time, we have seen fintech evolve into a lot broader sort of a concept, and which is reflected in the investments we make as well, because it's not financial services as be all and end. It's not financial applications or innovation as be all and end all. It's more about financial services today in the context of solving real life problems for people, and in a significant way embedded in the context of people's lives, whether it's consumers or SMEs. So even in our portfolio, we see a lot of progression today over the last few years around crossover between retail and financial services, digital commerce, agri, healthcare, education, mobility, the crossover of a lot of these sectors with financial services. So we're seeing a lot more verticalized embedded financial solutions to eventually meet these end goals. And if you look, and again, fortunately, because of this wider angle and vantage point we have of multiple continents and countries, I think I'm able to appreciate how India's stack kind of stands out even more. And it's, and like Avtar, rightly said, we took a call a while ago to build a very foundational public infrastructure, which over time has taken a life of its own in a very positive way. And the reason I think this is game changing, just like so many other game changing things, is it's very hard to comprehend the full impact of it in the first few years or even the first 10 years. And this is going to take a life of its own in way different entrepreneurs will drive applications for it. Having said that, and I just love playing devil's advocate, so I'll anyway say it, the complexity of this, I think, is enormous for the across the ecosystem to be embraced by folks. And to that extent, I think we as an ecosystem, there are, we are still behaving, we do operate like the elephant and the eight blind men, where everyone sees their own view to this story. And so that's one challenge we are going through, where it's going to be a significant exercise to connect the dots across multiple use cases, and the use cases are just endless. And we'll talk about that, right? So that's one. The second is also, I think, as we pull this together, the public infrastructure is a phenomenal service that the government and volunteers have done for the country. But we also need to treat this public infrastructure, and Naveen has heard me say this before, with some more respect than letting it operate like a lean startup. I mean, we cannot make changes to this on an ongoing basis. We need to make changes, let it stabilize, seep into the system, and then go for a new set of changes. I also feel like it's a little bit more in flux than it should be if we want to really see strong applications succeed over a long period of time. So back to you, Prasad.
All right, thank you, Ganesh. I appreciate that. So we'll move on to our next speaker, Mr. Naveen Kukreja. Naveen, if you could also give us a little bit about yourself and your thoughts.
Thank you, Businessworld, and thank you, Prasad. Glad to be on the same stage as Ganesh and Avtar. I run PaisaBazaar.com, which is the largest platform and comparison marketplace for lending products. We're part of the same group as Policy Bazaar. So between Policy Bazaar and PaisaBazaar, we help consumers compare, access, and buy insurance and lending products. So I would say we have a decent view of what's happening in these two industries from a technology and a fintech perspective. I've been in financial services now 20 years and running PaisaBazaar for last 7 years. When I started, I used to say that it's possibly the most interesting time for financial services and fintech. And I think that holds true. That's the interesting thing about India, that every 3-4 years, the current time looks like far more exciting and filled with far more opportunities. Of course, there are challenges there. I think specifically about what's happened in the macro ecosystem, which is helping and potentially would transform fintech or financial services, is the infrastructure. And we are covering the public infrastructure today in the discussion, but even the private one, right? You look at what's happened to internet, you look at what's happened to smartphone penetration over the last 7-8 years. And then you look at the public infra, and India Stack is a key part of it, but you extend India Stack, JAM, UPI, what it's done to payments. And like Avtar mentioned, that GSTN, which is newer and has the same potential of building a beautiful infrastructure kind of ecosystem for the industry to take advantage of that. We've also had a very, very interesting last year where I think financial services, especially lending, has got a rude shock. I think it's been painful in the short term, but hopefully it will be one trigger which will help the entire financial services to transform when we look at it from a next 5 years perspective, whether it's digitization or whether it's hopefully democratization of the data. So very, very excited to be in financial services and really, really excited about what can happen in the country.
All right. Thank you, Naveen. Thank you, panelists, for giving that perspective. Now, see, I think you've all spoken a lot about how we've been able to leapfrog and how these are exciting times. I remember reading an article about 10 years back, which talked about the fact that Pakistan had more digital payments, mobile payments than India, and it's been the last 8 or 10 years that we've really leapfrogged. And now we have what people would call a world-class infrastructure. Obviously, there are issues in terms of like Ganesh was saying, it being treated as a lean startup and things changing rapidly, without all the stakeholders being taken into account. But I'd like to understand from you your perspective on what have we done really as a matter of DNA. What have we created into our DNA which has helped us leapfrog ahead of the other economies? What can we do to leverage this so that we stay ahead of them as we go forward? And just to kind of play on that point that had come up, how do we ensure that all the stakeholders participate so that this whole issue of sudden and disruptive negative changes is eliminated from the system, and we focus on disruptive positive changes? So anyone from amongst the panelists, if you all could start with your views, then we'll go around the table.
Let me go first, since I have been probably longest among these youngsters I'm sitting with. I'll tell you what typically is the dilemma, which you probably don't see, which I have seen being on the other side. Whenever something is initiated, it goes through a phase of uncertainty, like any startup does. We all have been there, done that, right? And in the initial phase, the question is, who's going to go through that pain? I'll give you a recent example of this. When the FASTag was being implemented, remember, behind FASTag is same technology, same stack, same consumer, same ID, and same transaction set. It was a royal mess. And I can tell you, every bank at some stage was saying, why am I in this? And I was one of the lead banks, by the way. And the reconciliations won't happen, the transactions will fail, the unreconciled amount will run to crores. And in my particular case, board gave a warning saying, you want to shut this or reconcile this? There are two choices, right? So the point I'm making is, there is this whole thing. And invariably, people who have larger stability, bigger capacity are the people who become guinea pigs for testing this. So if you do a roadmap of the deployment of Aadhaar, whether it's UPI or even GST in the future, you'll find that it starts on the top of the house, which is the big players, which in our system take it as a banking industry. And then it kind of percolates down, and then there are hierarchies. We don't want to accept it, but the fact is there are fintechs, and there are larger fintechs, there are NBFCs, then there are banks, and then within banks, there are three ranks, right? So this is the way it goes. And then it takes a little time. In that process, anybody who's trying to be the first has to be ready to be part of this fire building, right? But only if you want to be playing when it's kind of established and safe, then you little. But then this is a dichotomy, because you want to be innovative. So innovative means being fast, right? It can't be that you want to be 10th and still be innovative. So this is a fundamental thing. I agree with the overall comment that there are areas where things have been done. But I would say that even people who were doing things, their intent was pure, but they were also not fully aware of the side effects. And I have been party to, the first PDS system in one of the Krishna districts in Andhra Pradesh being made a horizontal, which basically meant that somebody has a ration card and now can go to any shop in the region and take a ration, right? It's a very simple requirement. But it's only now after the lockdown that government has actually exploded that small region into a national event, where now in the coming days, a ration card holder can draw ration from any of the shops, because they're all now integrated. So that's the kind of an example. So to me, I agree with the overall, this whole hurting sort of a thing which happens every time there's something new. But I also give them credit for the fact that they stick to what they need to do, and have actually shown in some cases, or most cases, that they have the willingness to learn and adopt to the new world. And obviously there are things. And by the way, we've seen only a small portion of what's possible. What we've been seeing is mostly financial services and payment systems. There's a huge portion of economy which is not related to only this. I'll give you examples. In the coming days, all the investing instruments will be the next topic. And we can talk about that when we discuss this.
Right. So thank you. So I think you're right from the perspective that yes, credit where due, right? And it's a difficult job, but I think the larger point is also that we have to compete with all the other economies of the world. We have to stay ahead, right? We have to be the number one innovators. We've got this great advantage that we built over the next 10 years, over the last 10 years. How do we, take it to the next step over the next 10 years? So maybe we can bring in Ganesh now for his perspective on that. Ganesh, if you'd like to add your points.
Sure, Prasad. Thanks for that. Look, again, having a fairly broader panorama of geographies, and this is my own learning. I'm realizing it's less about, especially in today's world, it's less about sort of a race or competition. Every ecosystem and economy is unique with its problems and unique with its opportunities. We are unique in terms of, frankly, having a society which has balance of openness and freedom with technology smarts and with its own challenges, of course, and with a scale and size where an opportunity like this, when experimented and implemented to success, like for example Aadhaar, if you look at the basic four layers of India stack, the paperless layer with Aadhaar and the transaction payments, 7-8 years ago, 8-10 years ago, it was impossible to imagine that we'll be where we are with digital payments and with the Aadhaar implementation today. Sure, I mean it all comes with the challenges of perfection and imperfections in implementation. But if you look at the future, I think this documents on demand or documents going digital, and then the whole permission layer required for various services, whether it's financial services, non-financial services, investments, which Avtar just touched upon, the whole bunch of use cases. I think that will have to evolve for us to sort of take this to the next level and keep maturing as a system. And frankly, that will ensure that we sort of stay smart and digitally ahead in kind of making this happen. Having said that, like, I'll go back to the first point, which is everyone is dealing with their own complexities within the ecosystem. And you touched upon Pakistan. We do have an investment in Pakistan, which is started by the founder who wrote the first digital payments paper along with the central bank there, right? And we know where sort of the challenges in implementation have been in Pakistan versus where we are in India. So I think, a lot of it is about execution and implementation as well. And I think the beauty is we have built the foundation on the back of which, like I said, these two services are reasonably well embedded, which gives us digital access to folks and to be able to get digital data. Security and fraud is something we have to constantly keep working on. But on top of that, this whole digital layer of data permission-based data access, which will succeed as digital documents become more a way of life, which hasn't happened yet. But I think those two are things which we'll see evolve in future. That's going to hopefully cement the digital smarts and sophistication of India.
By the way, on the point, this morning there's an announcement that now onwards you can see your insurance policies on the DigiLocker.
Excellent.
That could become another collateral, by the way, in no time.
Yes, absolutely.
It's a matter of days for the lenders.
Yeah.
So no, I think in terms of the stack, in terms of the infrastructure, we have a lot. So, when you log into DigiLocker, the potential to, for example, see my, mark sheets from engineering college or from business school or, my ration card, etc. But, the implementation is taking steps. And I think, while we've taken these huge strides and gone, ahead of most of the competitors, the question is, how do we stay ahead? And that's what we're trying to focus on. So I think, Naveen, since you're consumer facing, every day you have to face a lot of challenges from the perspective of not just customer service but also risk. How do you see us having developed, and how do you, what would you want in terms of ensuring that this advantage is maintained and more advantages come our way through this stack?
Sure. So again, to your question on what's kind of worked well for India, and I think both Ganesh and Avtar kind of covered it quite well. So I'll try and just add a couple of points from my perspective. And like Ganesh said, that India is in a unique position while population can't be said as an advantage in most of the things, but this is one area where the population, the demographics that we have is an advantage. So we are not essentially competing with anybody. We don't need to. It's a fairly large market. Everybody who's a player in India from a corporate perspective, the market is so large that we need to focus on solving the problems faced by Indian consumers and not necessarily worry about what's happening. Of course, we need to learn from what's happening around the world. I think the digital payment has been talked about in terms of how it's become evolved and become one of the best, if not the best, payment systems in the world, and how that has the potential. And potential is a key word in India, that there are so many things which have great potential. How does it get executed over a period of time is what decides what happens. And again, I talked about private infrastructure in the way it's got developed. Even though one hears that telecom industry is going through pain, but the manner in which the telecom infrastructure, the mobile infrastructure has got developed, the manner in which internet infrastructure has been developed, where we are now talking about 5G coming in India at the same time or similar time as any other country, any other developed country in the world. So we've just leapfrogged a couple of generations in some of those, which has been the strength and kind of brings the potential. And then coming to the public infra, whether it's the India stack, whether it's most recently the GSTN piece, whether it's the JAM, which tried to bring everybody into the financial ecosystem. So I think those are some of the strengths and the potentials that gets created for the market as a whole. And like Avtar was mentioning that on the flip side, of course, there are things which have high potential, and it's been there. And while we talk about good things about India Stack, what's unfortunate, for example, is that having such a beautiful infrastructure where the digital identity has been created for everybody in the country, the lending industry in general across the board almost cannot use it because of some legal complications, regulatory complications. And it is so unfortunate to see that you have a beautiful product that's got created and you're not able to use it to simplify the consumer's life, simplify the industry's life. And so those stay in a little bit of a potential zone, not an actuality zone. So it's a great, I think, mix in terms of having potential across pieces, but some of those needs to move forward. Again, we are talking about open banking, and there is conceptually it's already there. Account aggregators have been set, but we need to see how it becomes into a reality and really starts adding an impact at a meaningful scale.
Sure. No, thanks, Naveen. So I think just queuing from there, right? I think open banking with BBPS, we've got open billing also in a way that's come in. And most importantly, what's coming up now and what's a subject of great controversy is blockchain/crypto, right? And I think the way we play on these areas in the next few years is going to decide. I think Naveen made a great point that we're not in competition with anyone in terms of being an economy. Because of the scale and the size that we operate at. But I think in terms of our technological positioning, we still need to stay ahead, because it not just helps us develop as an economy, it also helps us, so for example, in a very lateral sense, the way the stage we are at, vaccine manufacturing has completely turned over India's position in the world over the last few days. Right. So how do we ensure, right? What's the roadmap ahead for stuff like open banking, open billing, blockchain and crypto? Your thoughts, maybe Avtar, we can come back to you and then move to Ganesh and Naveen on that.
So thank you. So on Bitcoin, I think we should leave it on the side. I don't think you've seen the announcement how it's going to be seen, and I agree with that.
I'm so sorry to interrupt you there, Avtar. I would like to keep the context broader than Bitcoin, right? To blockchain, right?
I'll talk about blockchain. Right. So I think blockchain has a huge potential, and you refer to the vaccination as the topic. Even within that topic, healthcare, blockchain has a huge. I mean, one of the significant X of this vaccination is traceability. And the way you can do traceability of each injection and who did it finally get into is using blockchain. And then there are people I know who are working on that, right? So that's one this thing. But if you look at the history of blockchain usage in India, it's very limited. And in one case where it's fully kind of utilized is in the bill discounting, the trades platforms. And there also it's being utilized mostly for the deduplication of the invoices so that there's no amount of fraud which is left, to be, gone through. But that's just a beginning. So to me, blockchain is for real is going to be another big push. And there will be an emergence of combination of the existing technologies from the India stack and combination of blockchain. And if you think about just the applicability, we've seen financial transactions, but if you think about investing transactions, whether it's investment in the bonds, if you have to float bonds to the retailers, and you don't have to throw so many things in the air, you can just put them in one place and do linkages. So there is already one place, there is somebody has placed commercial paper in the market using blockchain. I definitely see in the next less than 1 year, most of the instruments which are going to be placed in the market will have a component of blockchain, obviously combined with the other components of identification and authorization layer and all of that. So this is going to be a convergence of the India stack, the payment infrastructure, and the blockchain actually helping many other industry wherever there is a need to have a distributed information sharing, yet having a control and not having to send 30, 50,000, million copies of same instrument. So I think that's coming up very soon. That's my view.
Right. So I think great points there, Avtar. I think blockchain can help us go much beyond just Bitcoin. Risk control, fraud control, just making our currency much more safer. Right. About 18 months back, I wrote for BW saying that the safest way to go ahead, probably given the position that India is taking, is that RBI should launch its own cryptocurrency. And I think we're moving in that direction. But I think in the fintech space, there are far more advantages that blockchain can bring. I mean, even in open banking, BBPS, we have two other pieces of infrastructure that can revolutionize the way we make payments. I think moving to Ganesh, what do you think from that perspective?
So Prasad, I think both your questions both topics are extremely loaded, and it's hard to do justice to them in a couple of minutes. And they do converge at some point. We are not at that point anywhere in the world, but it will converge at one point. But at the core of open banking and at core of blockchain, by the way, just to go back, we have all had our apprehensions on BTC. Because there is fundamentally an underlying value, and we can debate that. But what we are seeing in the world today is really a shakeup between centralized and decentralized, right? People who are trying to break away and the rest. And as they say, they start as marginalized, then people make fun of them, then they start taking notice, and then folks are like, man, these guys are actually making this work. And by the way, I just noticed this morning, so that folks know, MicroStrategy, which is a $10 billion publicly listed company, put 1.1 billion of their treasury capital in BTC 6 months ago, which today stands at 3.3 billion. It might again go down, but the point is, this is for real. Why? And I'll come back to this being the foundation, this not being the be all and end all of the debate, BTC itself. Square put $50 million in BTC treasury, which is standing at 200 billion. Tesla, of course, we are hearing about it. So point is, Twitter is actually giving people an option to take part of their salary in Bitcoin and other currencies, not just Bitcoin. So the point is, the world is changing. This is how adoption happens. We are still questioning what is the underlying value. But I think, for example, if you go centuries ago, you could have questioned the underlying value of gold also. Right, and I've questioned BTC. But the point is, the world is at a fundamental inflection point, and this debate is between centralization and decentralization. So regulators creating a CBDC, right, is sort of saying, okay, the answer to the fight against centralization is one more centralized instrument. So at surface, it does not make sense, even though I do think that CBDCs are required. Russia, Philippines, China, India, bunch of countries are working on CBDCs, and they are required because they can remove the circulation of cash even from a lot of the public systems and make and hopefully make things more efficient, because we do not need currencies and coins floating around to the extent that they do today. So CBDCs are required, but a CBDC as a counter to cryptocurrencies, it's just it's disappointing that we ourselves are making it an impossible playing field for our economy and our country and private enterprises, when we have publicly listed large successful companies actually putting treasury in BTC. And by the way, Canada just launched the first BTC ETF. So the world is moving on, and I think we need to figure out how we manage fraud and control, as opposed to throwing baby out with the bathwater, saying just ban everybody, right? So something really for us to think about, because it's the first time I'm feeling that we are at the risk of taking a significant regressive step. We got to be careful, but not just say do away with everything. To your point on open banking, again, it's a debate on where finance and technology converges. And I think the challenge is sometimes the overeager tech folks go way ahead and create solutions which actually fall flat on the face, which lets people say that, look, you are flouting a lot of regulations on financial services side, which is right. But everything has a maturity cycle. I think we are getting to a point where we're actually starting to see more sensible folks and a lot more people with more fundamental financial services foundation, but with appreciation of technology getting into it. I mean, we have a few open banking companies in our portfolio across markets, but frankly, it's a lot bigger debate, because open banking is not one word, and frankly, in India, I think it's gone in a direction which I think is relatively disappointing, because there are 18 months ago, 20 months ago, there were 0 digibanks in India. Today there are 25 companies who claim they're digibanks. I'll tell you, 10 of them are going to shut down in the next 1 year. 3 of them are already shutting down. So
Right.
the regulator will never give a tech company coming in and creating some APIs a license to be a bank. It's a process. You have to earn your stripes to be a bank. When I invested in microfinance companies, 8 of the 10 of them are today SFBs. It's a long journey, right? And people just show up with some APIs and say, I'll create a digibank. I think again, the tech community there is doing disservice to itself. It makes RBI more scared when you do things like that. So it's a longer discussion, but I think I'll just leave it at that.
So I'm going to just say a few words. I completely endorse what he said. So people have to understand this neo and digi means really what. The bank is it's a very reserved word in the Indian system. You don't become a bank in fact, you're not allowed to be called a bank technically. So I think this is absolutely right.
Mm-hmm. No, so I tend to agree with Ganesh that banning anything is not the solution. I think also agree 100% that the biggest concern around crypto is the fact that there is no underlying asset. I think if the private sector can resolve that, we have a great game on our hands. As far as open banking is sure.
Prasad, sorry, I'll just make a broader comment, which again is maybe go into philosophical realm. But look, what in life has underlying value? Who decides?
Right.
Like I said, gold, anything that has been the underlying value, the value has been created over time. Now, suddenly faith is being built in something. We cannot be regressive to say, let's just ignore it, right? So we need to understand it better as to what's going on. That is my only point.
Absolutely agree, Ganesh. It's just, so even when I talk about it, I'm saying that, there should be some self-regulating mechanism that assures the public, that assures the regulator, because you can't just escape that and go away. As far as open banking is considered, completely agree on these neo and digi banks. But, in context of, for example, what Naveen does, right? Open banking can have great advantages in terms of being able to see a customer's credit profile, a customer's financial profile way beyond what a CIBIL or an Experian can do, right? Bharat Bill Pay, for example, can help, integrated bill payments. It can, help better financial lifecycle management for customers, and it can help, financial institutions understand the customer spends much better. So I think there is a lot of play there. I'd love to understand Naveen's point of view on that in terms of how we can scale that up going forward and still stay ahead.
Yeah, thanks. So it was very interesting to hear the comments around blockchain and crypto. And I have a slightly different, maybe controversial view, is that, India is in a place, you think about it, India's per capita GDP is $2,000. That's 1.5 lakh rupees per annum, not per month, per annum. Uh, and the people who are talking, the countries where this is becoming a big issue is have a per capita GDP of $50,000 and above. India has 60 million SMEs and they struggle to get access to credit. There was a survey which said that only 11% of them have access to formal credit. We have a hugely underdeveloped below prime lending. We have large, very, very reputed, very, very smart banks and NBFCs. They are very, very happy to lend salaried consumers in prime space. And it's not their fault. They're seeing 20% growth per annum in that segment only. So they're saying, okay, we are comfortable. Why should we risk going to an underserved, subprime, people who don't have experience of borrowing? So the challenges for the Indian market are at a very, very fundamental level on solving SME credit access, only from a credit perspective, solving how to give credit profitably to subprime, new to credit, low earning population, how to bring more people into the credit ecosystem. And hence the problems are slightly more fundamental at this stage, at least the way we look at it from a consumer perspective, is that how do we solve digitization problem? How do we make sure access to credit products becomes available to consumers and becomes economical to offer for providers, where they don't have to set up thousands of branches or distribution points or employ thousands of people to just reach out to the consumers? How do we get more and more data? And what's happened in the payment ecosystem over the last 5 years, there's immense amount of data. What's happened into the GST system over the last few years, there's immense amount of data. How do we build models? How do we encourage risk models being created on payments and flow data instead of only income or banking data? And how do you democratize data and making data availability in the hands of consumers first, and be just more seamless for providers to provide credit? And if you think about all of those problems, I cannot get my mind to spend time on cryptocurrencies. So I mean, it's a problem. It's an area to focus on for certain part of the ecosystem. In my mind, India has more basic issues, and the good thing is that in those basic fundamental issues, there are solutions either ready or getting ready, or there is learnings from the world to be had. And all it requires is clarity of how to implement it in India. Of course, taking into account what could be different for India in terms of challenges, etc., and then going out and executing. And from a regulators and government's perspective, encouraging the private sector to go execute and incentivize them to do that properly. So different set of problems as I see it. Of course, both crypto and blockchain are trends which we need to keep an eye on. So no doubt about that.
Sure. Thanks, Naveen. So I think great diversity of perspectives there, depth of perspectives as well. I think as I begin to wrap this up, I'd like to ask if the panelists could give a 30-second overview of what they think are the three key next things in the space that either the regulator or the industry or the business overall or the domain overall has to focus on. We'll start with Avtar, maybe.
Yeah, I think the first thing is it has to have the credit for all. This is what he was talking about earlier. So the MSME is a 20% of this country's population in terms of the manpower and the deployment of it. So that segment doesn't get credit easily. And that's because we still bank on the last 3-year income tax statement, which has no meaning today. So the cash flow based lending has to be one focus. The second focus has to be actually bringing together a more simplistic way of engaging with the network, because it's still very complex, as somebody else said in the beginning. And the last thing I would say is, even the participants have to have a little bit more clarity around what they want to be, because I also see a lot of companies want to be everything. So that's the other thing somebody has to actually bring to the table, saying you're not everything. So to me, these are the three things.
Wonderful. Ganesh, your perspective?
Yeah, I think Avtar hit on all good points. Not much to add. I'll say I've made a couple of these points already. One is we need to let the system mature to then go to the next level, which is sort of really becoming more permission based and digitized from the way we accept information, process information, and make decisions. And I think we need to focus on that going forward. And the other point, which I had made already is I would really like to see some stabilization in the system as opposed to constant experiments, because we've got something good going. Yes, we can drive it to perfection, but I think the idea is not to drive it to perfection and solve for corner cases. The idea is to democratize this more. And to Avtar's point, that will also happen only if stability comes in, and then there is education to people and to SMEs and to the ecosystem on, okay, what is the stable foundation on which you can you can pick your own strengths. And part of the confusion today in terms of people also trying to do a lot of things is coming from the fact that there is lots going on in the foundation, at the foundation level, in terms of opportunities and challenges it throws up as well.
Sure. Thanks, Ganesh. Appreciate it. Naveen, over to you.
Okay, thank you. Again, I think carrying on from what Avtar was talking about, uh, digitization is one way which can help improve, credit for all, credit for underserved segments by improving the distribution, which is a significant cost component in Indian market, and B, improving access and reducing the cost of processing. So digitization, I would say, is one, and we are at a cusp where there's infra actually ready. The industry has to responsibly use it, and the regulator has to encourage responsible usage. But overall, it has to just improve dramatically in terms of usage of digitization for offering credit. The second big thing, and I hope it happens, it's very, very early stage, is democratization of data, which, if you see, is the other big part of the whole process, whether it's just the cost part of it, whether it's just the creating so much friction part of it. And that includes what Avtar was mentioning about cash flow data coming in, the GSTN data coming in, maybe even the payments data coming in, of course, all with consumer consents and with adequate governance. And the third thing I would say is it's either of the two. So the capital access system is underdeveloped in India. So people who are not banks, who don't have access to consumer deposits, do struggle. Their cost of funds is higher. They do struggle to access funds if they wanted to expand. And those are the guys which have a good shot or good chance of expanding credit access and inclusiveness. So either something is done, and I don't have a solution, but something is done to develop that system further, or the regulator has to incentivize the most well-governed, the most reputed players, whether it's the banks or largest NBFCs, to incentivize them to do more and more credit for underserved and new to credit. I think one of those happens, then there'll be more inclusiveness. So these three for me.
Great. Thanks, Naveen. So with that, I'll wrap up the session. Thank you, panelists, for your time and your views. I think we've learned a lot. I've learned a lot, and like the Ganesh was saying, I think each of these topics requires a longer, deeper discussion. So I think we'll try and pull you all one-on-one over the next few weeks. For us, our fintech community is just something that we've launched. We'd love to stay in touch with you, and we'd love to understand deeper perspectives one-on-one. And we look forward to having you back on one of our platforms again very soon. Thank you so much for your time.
Thanks, everybody.
Thank you.
Pleasure.
Thanks everyone.
Thanks. Bye.
Thank you, gentlemen. Thank you so much, and some really interesting points there. So we appreciate your time for sure, and we look forward to have a conversation with you real soon again. Thank you so much once again to the panel. We'll move on to the next panel discussion now, and we'll be talking about challenges to move brick and mortar to brick and click. The transition to the digital world is going to be one of the key factors in how the coming years are going to go. And to talk about this, let me quickly call back upon the moderator, Mr. Prasad Sharma, Strategic Initiatives, BW Business World, joining in again as the moderator. Let me quickly welcome the panel as well. Mr. Subramanya SV, co-founder and CEO of Wisdom. Mr. Nitish Asthana, President and COO, Pine Labs. Ms. Bhakti Vitlani, founder and CEO of Big Spring. Mr. Yogendra Kashyap, MD and CEO, Rapipe. Ms. Leila Or Hashmi, CIO and VP Technology Business Operations, Black Hawk Network. So that's your panel, ladies and gentlemen. And I'll hand it over to Mr. Chandra.
All right. Thank you, Raveen. Thank you, panelists, for joining in today. I appreciate you taking the time. Our apologies for the slight delay. We've been running about 5 minutes behind schedule on all our panels. So thank you for waiting. Like with our other panels, we'd like to run it in a in an open format. We're talking about how with the emergence of fintech, businesses have started to move from pure brick and mortar traditional operations to either fully digital or brick and click, which is the focus of our discussion today. How traditional businesses which have a traditional physical footprint will be able to leverage fintech and the digital stack in order to scale up. To kick off, I would I just go in the order that I can see everyone in screen. I would request the esteemed panelists to please tell the audience a little bit about themselves and their thoughts in terms of how fintech is impacting the move of traditional brick and mortar businesses to brick and click. We'll kick off with Nitish. Nitish, if we could have your a little bit about you and your thoughts.
Hey, thanks, Prasad. I hope you can hear me, and thanks for having me on the
yes,
panel.
Yes, loud and clear.
Lovely to meet the panel as well. Look, I represent Pine Labs. We're what you would call a fintech. We work with around 500,000 businesses and help them run commerce and digital payments, right? And we've been at it, and of course we are going through our own transformation as well. But I think commenting on the topic, it's been a bit of a watershed year, right? 2020. And I think if you look at the narrative has also changed when it comes to how businesses are dealing with this whole brick and mortar model versus click, right? Till a couple of years back, businesses would say that, look, we are threatened by modern retail. And small businesses would say, it's the large format retailers who would eat their cake. And I think that the narrative has clearly moved to everyone really understanding that omni-channel is going to be a reality, right? And it's not because of their business models. I think they have a place in their business models, but consumer preferences changed over the last year. And consumer preferences change in a sense that, the consumer wants to discover online and buy online, sometimes wants to discover online, sometimes wants to buy offline. They go offline and then research online and then buy offline. And then, of course, there's this whole mix and match of, stuff that needs to get done right from discovery, right to delivery, and right to post-sale. I honestly think, from a Pine Labs perspective, we've seen the rates of digitization shoot through the roof. I mean, in October last year, we deal with a lot of small businesses, mid-sized businesses as well. And we saw the rate of digital merchants coming on board the digital channel has doubled. So we boarded almost like 25,000 new merchants in the month of October. We are seeing that trend every month. So that is one trend, which basically tells me that as consumer preferences are changing, every business has taken their head, like the head in the sand. They've taken their head out of the sand and said that we need to digitize. That's number one. Second, I think when we do research of small businesses, I think the top two trends that they talk to us about is that we want to sell online, right? And they don't want to sell just purely on aggregator or marketplaces. They actually want functionality to build their online presence and to be able to serve the hyperlocal marketplace. The second thing that they want to digitize is payments. And the third one that they want to digitize is procurement. So it's clearly a clear trend about small business saying that, look, I will move on to digitization first to accommodate consumer preference around paying digitally. Second, I want to connect with my customers hyperlocally and be able to sell to them online. And third, they want to have cost benefits through digitization, which comes in the form of supply chain digitization and getting offers. So I think the clear compartmentalization of businesses from the past is a thing of the past. The good thing to my mind is that technology is changing rapidly and that technology is available. It's really about removing the impediments to make access to that technology as quickly as possible. That's where I wanted to start with. Prasar, back to you. I think you may be on mute.
So sorry about that. So thanks, Nitish. Great insights there to kick off this. Subramanya, if we could move on to you a little bit about you and your perspective on how this is evolving and emerging and where do you see it going?
Yeah, thanks, Prasad. Glad to be here. We are a digital wealth management platform, slightly different from merchant-oriented businesses. But the way we work is Wisdom is a consumer app, but the way we distribute or reach customers is through large bank partnerships. So the businesses that I'm going to talk about are banks and how this whole digitization or brick to click is happening in large banks. As you know, we work with about 10 large banks, all the way from private sector banks to large public sector banks like Indian Bank and Oriental Bank of Commerce, Karnataka Bank, City Union Bank. Banks have been computerized for a long time. They've adopted core banking, many years ago, but that's where it stopped. When the computerization of banks stopped with our adoption of core banking. For many of the banks, other than the top 5 banks like HDFC Bank and ICICI Bank, the consumer-oriented tech did not take off really. So the internet banking, the mobile banking, they were all more tick marks key, I also have, as opposed to a focus area. So a large part of the business outside of these top 5 banks, if you go, still happens at the branches. The combined branch network of these, scheduled commercial banks in India is about 100,000, right? SBI alone has some 45,000 branches. And these branches are hub of economic activity. And thanks to COVID, the footfalls just dropped. Customers are no more interested in going into the branches for anything, right? So banks today are forced to digitize their branch operations beyond just the core banking, which just connects the whole backend, right? So for example, if you talk to any bank CEO today, making sure internet banking and mobile banking is an important strategic area for every bank CEO, whether it is small or large. That is just for the core banking. The next set of areas, I want to offer more products to our customers through digital ways, whether it is wealth products, insurance products, loan available on the mobile app so that they don't have to walk in and fill a form. So I think one of the big trends that we've seen in the last 1 year is across the spectrum of banks, from very, very large banks to very small banks, they've realized that the footfalls at the branches are lower. So hence they need to digitize a lot of consumer-oriented consumer interactions that have happened up the branches. In fact, if you go back a year ago, any customer who walks in, the default was the branch staff would give them a form, fill this form. Right? That's like the classic, click operation. The banks are connected on a core bank, but the real customer interfacing was on the basis of a form. I think the journey, what we've seen is, for most of them, they're looking for a digitization of that solution where even if you walk in, here is just download this app or just go to our mobile app and do this rather than creating that form, so that the customer also has a real-time sort of a feedback. So we don't work with merchants, we work with banks and customers. What we've seen over the last 1 year is this a phenomenal realization in tier 2 and tier 3 banks, which have large distribution and customer base across the country, say, look, we need to digitize every aspect of our customer interfacing. So hence, mobile banking is now the most critical focus area for banks. Similarly, the customers, in the products that we deal with, which is mutual funds, pension funds, insurance, gold, loans, these kind of products, they are no more interested in filling out forms, etc. They say, look, I want a digital solution. I'm not going to just go to a branch, stand in a queue for half an hour and then they'll fill a form and get whatever my product or service. I think in summary, in the business that in the business model that we work in the last 1 year, we've seen a significant drive towards digitizing every consumer interaction from the banks and financial institutions that we work with.
Thanks, Subramanya, for that perspective. I think it goes across domains, so we understand more and more how business across domains are being impacted and how they're moving. Yogendra, we'd love to hear from you. What your thoughts are, and also know a little bit about yourself for the audience.
Yeah, thanks a lot, Prasar. We at RapidPay, we are onboarding merchants rapidly, and we want to give them a 360-degree solution. for their payments, omni-channel payments, the capital requirement, the platform. So I will agree here with Nitish that the small merchant, we have to solve his basic problem of having a better platform where he can showcase or market or expand his product range. Second one is he should get an access to omni-channel payment solution, including incoming payments toward as well as the outgoing payments through neo bankings. Third one is there he should be able to access capital requirement for his expansion. So these are the 4 points what we are focusing, that the merchant and the way forward for the small merchant to have a competition with the large e-commerce merchants or large format places is to go hybrid initially, because it's a transforming phase. So if you are not going hybrid or not adapting the transforming technologies, the possibility of sacrificing entire business model is there.
Understood. Thanks, Yogendra, for those inputs. Very insightful. Bhakti, I'd like to come to you now. You come from a completely different domain. I think the perspectives in education and skilling are very different from some of the other businesses. So we'd like to understand from you as well what your thoughts are. You're on mute, Bhakti.
Thanks, Prasar, for having me. So, just by way of quick introduction, I'm the founder and CEO of Big Spring. We're a mobile-first, lifelong skilling platform, and the entire focus is to quantify the business impact and the ROI of training. We have, last year we were awarded by the World Economic Forum as a technology pioneer, and we work with the likes of Google, Facebook, Tata Steel, Uber, and relevant to this panel, we're working with, the likes of Carbon, which is an online bank in West Africa, and then AXA Insurance out of Southeast Asia, and so on. So, my perspectives, as you said, will come from a skilling, are from the domain of skilling. And what fundamentally is happening over here is a massive digital transformation. And I think because of COVID, it's happened almost overnight. People were forced to go cashless, for instance. And, what fintech and what this digitalization is enabling is, there's a velocity of change that is unprecedented. There's a proliferation of products that is unprecedented because the unit cost of product development now in this sector is so long. So for instance, you have the $1 dengue insurance, and things like that. The other thing is, by definition, the sector is trying to include segments that didn't exist. Everyone can become a customer now. Everyone, for that matter, can also become a salesperson. The contours of what fintech is doing, what traditional organizations look like, what traditional channel partners look like, channel ecosystems, that is all rapidly changing. And the key enabler to that is actually skilling. If everyone can become a salesperson, including people who were not traditionally salesperson people, they need to be now upskilled on sales skills and on product skills. If everyone can become a customer, they need to be upskilled on, digital payments, on financial literacy skills and things like that to ensure that, fintech companies have a healthy ecosystem of channel partners and distribution, a healthy ecosystem of customers and high quality customers to make sure that their businesses are running on a sound basis. So that's the broader perspective. Ultimately, to enable this digitization, which is a massive opportunity, skilling has turned out to be a big enabler. And I'm happy to chat more about the work we're doing as well, over the course of this conversation.
Sure, certainly. Thanks for those inputs. I'd like to come over to Leela now. I think another different perspective, I think forms much of a bridge between, what people are doing today to what people are going to be doing going forward. So we'd love to hear, about you and your thoughts on the panel as well.
Absolutely, and very grateful to be here, learning a lot already. So I'm Leila Pourhashemi. I'm the CIO at a company called Black Hawk Network. We are one of the largest gift card companies in the world. We currently operate in 29 countries and growing. And by way of background, before that, I was at other multinational companies such as PayPal and eBay and Intuit, but also have a pretty large presence in all cases, actually, also in India. Our company has actually started a new strategic development center in Bangalore. And so before COVID, I was in India about every 2 months. I'm based out of our headquarters in California. I'm joining you from there. So I'll bring a little bit of a global perspective and then also some of the unique challenges that are in the Indian space. I think what we're seeing, and some of the panelists have already said this, is the years like 2020 and also 21, change will happen that may have taken 10 or 15 years to happen under normal circumstances. Just because, I'm a change agent by profession, and change happens when it's cheaper than the status quo. That's sort of the one thing that's definitely true. And so what's happened for all of us through the COVID environment is we're meeting like this. We're not on airplanes, we're not in offices, we prefer not to go into any indoor space because it is more dangerous than any outdoor space. So even people who wanted to have an in-person shopping experience before, even people who are very sociable and wanted to sort of touch and feel, the products and the merchandise, are different about it now because it's a question of their health and their safety. So by definition, everybody has moved into not touching anything, not going anywhere, conducting all of their business as much as they can from inside their homes. So this has really changed. I mean, small anecdote, I still have cash in my wallet from March 2020 that has not been touched, right? And I don't want to spend it because I don't want to get the change back, which will be dirty, because this cash is now clean. It's been sitting there for 11 months, right? So it's not really, so payments are taking a whole other stage, I think, now than they were before. A lot of people would use credit cards all around the world. A lot of people would use cash. All of those require you to touch things. So we have this amazing opportunity for everybody to embrace touchless payments, cashless payments. Touching their own mobile phone is safer than touching any point of sale system, right?
Sure.
We have tap cards. Well, the interesting thing about tap cards is if you hover close to the point of sale, you can actually, get it to engage. You don't even have to touch your card onto that point of sale. And people are becoming very conscious of these things. So we have an opportunity to take advantage of this environment and really accelerate the innovation that otherwise would have taken years and years and years. I'll give you some non-India examples for a minute. Where I live, curbside pickup has become a really big thing. You order online, you pay online, and then you drive over. And whether that's your groceries or whether that's a television, or picking up food from a restaurant, takeout. And they just, you open the boot of your car and they put it in there. And there's all kinds of really interesting innovation that's happened to make it even easier every day to do this. Just in the last few months, some of the retailers here in California have started to use things like geofencing on your mobile device and things like that, because you buy online, they send you a confirmation to your mobile. Then when you're leaving your house to go to pick it up, you tell them. Then they start to bring the merchandise to a staging environment in the parking lot, actually. Then when they detect your phone in the parking lot, they say, you're here. And of course you are, but they don't even make you do that, right? They know that. And so it sort of becomes this delightful experience. Mm-hmm. And it's almost fun to do it versus, people in an older generation before who were very hesitant and they were worried and they didn't know if they'd clicked the right thing, they'd done the right thing. And so a lot of people are adopting these methods of living that never did. When I was at eBay a few years ago, we did this thing called buy online, pick up in store, which is exactly this. And actually in England, they called it click and collect. So it's like brick and click, it says click and collect. And we did partnerships. eBay is an online merchandising store, of course. We did a partnership with companies that were very close to where people lived. And in that way, we were able to deliver the goods to a local store near to their homes. And then they could just go pick it up on their way home from work or on their way to school or wherever they were going, right? And so this was a way for people who would never have shopped online to suddenly, be able to shop online, because then they could just pick it up at their local retailer. So all of these are just trends. I think the India market is very interesting in terms of a large proliferation of the small and medium-sized merchants. So it presents a little bit of a different business model. In Europe and in US, in my company, we make deals with very large retailers, and we make deals with what we call content providers, for example, Google Play or Amazon Cards or Starbucks or McDonald's. And so we're sort of a dual network business where those brands are the networks that we have on our gift cards, and then we have arrangements with retail partners who sell those cards. And so we sort of match these two networks together, and that's really the essence of our business. What's really interesting as we look into getting even further into the Indian market is it's not really the case, as some of the panelists have already said, about making a deal with a few large retailers. It's really about SMB. And we've had to now think about how do you do it yourself, so that merchants can sort of onboard themselves and consumers can identify themselves, and do so safely, by the way, because that becomes even more important in an online world, because in the offline world, actually, fraud and risk are greatly diminished, but in the online world, they're of course accelerated. And so I think it's going to be an interesting explosion this year and maybe even next year. And what's fascinating to me is innovation will have to accelerate at a crazy pace, because the way we live in 2021 and maybe 22 will probably determine the next 10 years. And so if you're not in that market, if you're not trying things to see what consumers will resonate with, what retailers will resonate with, what small and medium-sized merchants will resonate with, sort of miss the game. And other people will take a strong footing, and those will become the brands that will survive. And I think it's really, really important to take advantage of a year like this, to try as many things as you can, see which ones of them will work, and truly deliver that business agility to say, well, we're going to make 20 tries. 2 or 3 of them will work. The rest will fail. But that's okay, because we'll learn fast and we'll iterate from there, and we will land on a place that is the right spot for both the merchants and the consumers. And that's what we're looking forward to at our company.
Sure. Thanks for that perspective, Leela. Appreciate it. So I think before we kind of go around the table once more, I just want to add an anecdote. I think technology itself is disruptive, and it takes sometimes disruptive stuff like COVID or other stuff to get people to adopt. Just to take off from what you were saying, when we had demonetization in India in 2016. Previous to that, I was cashless completely, and people used to make fun of me. But I remember not having gone to the ATM for I think 6 or 7 months then, and I still have some cash from November 2016 in my wallet. So I think I'm hoping that disruptive fintech combined with disruptive events like COVID will help us adopt technology much more. So I think coming back once more to our entire set of panelists, I think I'll come back again to Nitish and then go around the table one by one. What is it that you've been able to do? Especially in the last year, but over the last few years, to have merchants move over from your traditional offline operations, right? Whether it's payments, whether it is in delivery, to be able to move on to digital. What have you seen as the greatest opportunity, and what are the great challenges that you see in that?
See, honestly, I think the 60 million SMBs which are out there, you can say it's a gold mine, but it's not the easiest to address, right? So we all know that. Where I've seen and we've been working on is, number one, we want to create more affordability for businesses, right? So when you create better affordability, you attract more customers to come in and bring that in digitally. So what do I mean by that? We run a network for Pay Later. That Pay Later network connects around close to 35 issuers who issue savings accounts and cards. We connect over 100 brands onto that, so that your customer can get cashbacks and offers at the point of purchase, and that runs around on 200,000 merchants in the country, right? And what we've been working on is incrementally all our small businesses who are selling mobile phones. Your local mobile store should also be able to offer affordability. That kind of brings them a little bit at par with online players who are able to deliver those offers to end customers, and therefore, online merchants get a lion's share of the purchases. So that's one. Secondly, even for large format retail, and by the way, Pine Labs has got probably the lion's share of all large format retailers in the country for offline payments. I think the conversations there is really around how do we bring omni-channel onto their business. it's not the easiest for them to fix the logistics challenge, because that's the biggest challenge in an offline to online environment. But when it comes to checkout, and when it comes to payment, and when it comes to bringing affordability on the online channel through the Pay Later EMI program, I think we're seeing a phenomenal take up from even the large format retailers, large brands, large retailers. I think we are seeing a significant uptick of online sales, even though a lot of their inventory gets sold by the online retailers. So I think 1 year on, we'll see a real challenge, and actually these people will stand on their own 2 feet. The third piece that we are really doing is we are digitizing stores itself. So it's not just about brick and click, it's really about digitizing the store for a small business as well. So when we send out our infrastructure to a small business, we want to use that for delivering store digitization, managing inventory. We want to use that to obviously digitize payments, but also for them to connect to their customers through loyalty and offer management, and then be able to digitize the procurement channels as well. We've done some programs with large FMCG companies as well to digitize small retail stores for their ordering, as well as how the payment happens. And then going forward, I think the infrastructure play must kind of adopt in a way open banking and neo banking, in a sense that once that infrastructure has kind of gone on board, then you should be able to deliver capital, working capital and growth capital. You should be able to deliver a window into the banking, and you should be able to deliver short-term credit to them in addition to just managing transactions. So we see this as a little bit of an infrastructure play. The last thing I'll tell you is that, when it comes to QR and UPI, we know that's grown many-fold over the last 2 years. But for the very small merchant, unless the merchant has a POS machine, he can't accept a debit card or a credit card. So we launched this technology called AllTap. It was literally a week, 2 weeks ago, which actually enables a small merchant, without having an expensive terminal in the counter, to actually accept a contactless card payment on the phone directly, right? And of course, it's got QR and UPI, and then becomes a big engagement platform for the merchant to engage on the mobile app itself. So I think that we are building solutions around payments, digitizing stores, creating a financial hub for the merchant. Our vision is essentially to kind of bring small businesses at an even keel, and even large businesses at an even keel, to kind of be able to do omni-channel business and connect to their customers and to their procurement sources. That's what we are doing. And I think it is working. It's going to be a journey. We'll talk about trust and confidence separately, but clearly there is a lot more appetite where the new generation and small businesses do want to digitize, and they're open to have these conversations. We clearly see that happening.
Excellent. I think thanks for those insights, Nitish. I think each of these areas that we're talking about require probably longer conversations. But I think with us scaling up our fintech community, we look forward to having those conversations. So I'd like to now move on to Subramanya. Like you said at the starting of the conversation, that you operate in the wealth management space. You have a different perspective. So how have you seen your efforts in terms of shifting traditional brick and mortar businesses to brick and click and more digital?
Yeah, so I'll speak about both the segments separately, Prasad. One is the customers and the other one is the bank partners that we work with, right? I think from the customer's perspective, the 2 or 3 key things are, simplicity and accessibility and trust. I think, because this is a situation, whether they're buying an insurance product or a wealth product, they are investing money, they're giving us money. It's not a credit product where they're taking money, right? To that extent, the trust of the platform has to be great, which is why the banks come in. But the 2 other key things that we've seen the customers value are simplicity and accessibility. And accessibility is where digitization really plays a role. A KYC form can be pretty painful to fill and attach all the documents to get, to become eligible to either buy an insurance product or invest in a wealth product, right? So I think one big shift that has happened over the last 3-4 years, thanks to Aadhaar, eKYC, DigiLocker, and general drive towards digitization, smartphone penetration, Geo, and all of that, is the customers can access these products much faster, better than they were earlier. In fact, today customers expect a smooth digital experience because what they're getting as an alternative is either a WhatsApp or a Google Pay or a Paytm, any of those experience. Those are the kind of product that are used to, right? So if you go and give him a complicated form to buy insurance, he or she likely to say, look, I can't do this anymore, right? So I think this shift from consumers' mindset to do digitally on one's own basis has taken a significant shift over the last 3-4 years, and this we've seen in pretty much every sort of product. And on the bank side, which we work with about 10 banks, and we cater to about 20,000 branches across the country. There again, as I said, because of pandemic, the whole acceleration towards digital interfaces has grown. So there, what we've done is the banks are adding customers to their digital banking, mobile banking, as well as internet banking. We've done integrations. The Fisdom app is integrated with their mobile banking app as an SDK or as an internet banking plugin, where the customers can seamlessly move from their banking to digital banking, sort of a Fisdom experience, where it's kind of one single experience. So one single bank account can give them access to multiple products. So our SDK is integrated into the mobile app. So as the mobile app their mobile app grows, so our distribution also kind of grows, and the customers are able to have a common sort of experience. But I think those are the two ways in which we've seen this growing. Banks digitization is, as I said, COVID definitely has played a role. But on the customer side, them wanting a seamless, simplified experience is something that probably started 3-4 years ago, and that I would say it's more with the generic trend of customers wanting to access pretty much everything digitally. Demonetization, you mentioned, that helped a lot, because suddenly a lot of people who were only using cash started using digital apps. The last 2 years, UPI growth made it even more an obvious way to use any kind of digital ways, because it's just not that easier. It's also just more efficient to pay through an app rather than take out cash and wait for change. As we discussed earlier, there are other COVID-related issues with getting back change, but it's just more efficient. So it's I think UPI is where I would say the big change happened, where UPI truly was a Delta 4 experience compared to paying through cash. Consumer expectations started changing 3-4 years ago, whereas our partner banks started changing about a year ago. So that's how we work with the banks.
Great. So I think we keep coming back to that point that disruptive technology requires some macro disruption to speed up adoption. So I think we've seen, at least in the Indian context, 2 big events in the last 4 years. So I think that's helping. So I'd like to come to Yogendra now, right? I think you work with a range of merchants, and so what has been the key opportunity that you've seen? What are the initiatives that you've been able to take, and what are the challenges that you see?
So starting with the availability, that platform, whatever Nitish said, it is true that there should be a platform. There should be they should be able to showcase their products. They should be able to expand. The platform should help them marketing. Then omni-channel payment, including cash. Our mantra is we push merchant to go hybrid initially. Transformation cannot happen overnight. So it's a process. In every space in India, even in taxation, whatever inhibitions they have, there is transformation happening. So we ask them to go hybrid. So it's an amalgamation type of activity, from brick and mortar to brick and click. The biggest challenge in this is awareness and training. So we need to aware them and train them to go for more digital, more online. And apart from this, we have to reduce their unit economics for their transactions. So these are the key factors we are working on. Apart from the capital should be at low cost. Mm-hmm. The price for him to display his product and market should be very low. Transactional MDRs should not be at minimal, and we should be able to train him digitally.
You went mute for the last second. I think you.
a lot of our effort is going on into creating awareness and training those merchants to use the platform, how they can explore more marketing, display their product digitally, and how can they do this amalgamation of brick and mortar to brick and click.
Great. Thank you so much, Yogendra. I'll move on to Bhakti now. Bhakti, obviously, the disruption that we've gone through has had a equally great impact on the vertical that you operate in. So, how have you seen success in terms of being able to migrate, traditionally driven skilling and learning to the digital platforms, and especially how have payments become much more easier from that perspective?
Sure. I'll actually speak to how we've been supporting fintech clients and the kind of stuff that we're hearing, from them as well. So obviously, many of our panelists have established, the importance of SMBs, right, and that mid-market segment, and it is huge. We think of it from a skilling perspective as well. I think it's well known 90% of the workforce in India is employed with SMBs, but even in countries like the US, it's it's as much as 50%. And I think the fact is, they have not been the purview of, skilling, training platforms and things like that, which have really gone for, larger enterprises, knowledge worker kind of audiences. So I think the first step is, we've been very consciously focused on ensuring that we have a product that is all purpose, that can work for the large as well as the small enterprise. It's mobile first, it's 20 meg to download. It does not look like a learning product, frankly. It looks much more like a WhatsApp or a YouTube. So we've been described as the TikTok of learning. And our aspiration is, frankly, in a world where learning and skilling is viewed as a lot of overhead, how do we actually create an experience that people don't see as overhead and they actually find a lot of value in it, and they find it even enjoyable, and so we really focused on that. So we have this mobile first, video first platform, and I think we've gotten really good feedback from that. The second thing is, so we hear clients talk about, look, we've signed on 100, but 30% are active. And I think that's the reality of fintech. How do you activate? How do you drive productivity and things like that? And I think I would imagine many of my, panelists would say, we certainly have platform players that tell us, look, we obsess about the speed to the first transaction. We obsess about the speed to the 50th transaction, because that really determines the trajectory for productivity, for retention, and things like that. And, it's no secret, it's not rocket science, but a solid induction program, and this could be 3 to 5 videos in our experience, but a solid induction program will drive that velocity to that first transaction, will drive that velocity to that 50th transaction, and will create, a merchant base or a user base that is much more stable and much more active and much more sticky with the platform. So that, I think, is the first step of it. The other piece of it is, skilling can be fantastic for productivity. So I'll give you an example. We're working with the fintech company in West Africa. They're using BigSpring to deliver financial literacy training to their SMBs, some of whom are first-time borrowers. And the premise is the businesses benefit, but the company also, the client also benefits, the bank benefits, because they have higher quality customers. What they found, though, is, the SMBs actually took to this mobile first skilling so well that they said, actually, can we have a few more licenses? Because BigSpring also has a library that enables, other things, services, sales, all of those different practices. And these business owners were saying, actually, we want to upscale our teams. And the bank said, look, we're going to actually provide BigSpring as a benefit to you. They realized it's in their interest to make these SMB teams more productive, because a more productive business means higher transaction volumes. And, that also comes back to them. So I think there are very interesting ways where skilling actually can become repurposed to actually drive the business top line. And we've found some fantastic response where a lot of our customers are saying, hey, we used to look at this as a discretionary support function. We're realizing now it's actually quite mission critical to really make the core business survive and thrive, to really drive product utilization, to drive productivity and transaction volumes. So we've seen some very interesting perspectives. And I'll just sum up and say, it's no surprise, for instance, Yogendra said training is a key hurdle. Digital literacy is a top gap. It's probably one of the biggest skill gaps amongst SMBs, but also the biggest opportunity.
Sure, thanks. I think the whole repurposing angle that you brought in just now, I wouldn't have thought of it. So I think something new to learn from every perspective that we're looking at.
I should say, Prasar, I'm an ex-McKinsey consultant, not a learning and development professional. So I am obliged to think about connecting it to business.
Wonderful. I think it gives us a great insight. Finally, I'd just like to come to Leela and try to understand from her. In India, what have you seen over the past few months, past couple of years, in terms of being able to bring merchants onto digital platforms? What's been the key things that have helped do that, and what are the key challenges you're facing?
Well, I think, what's really interesting, and of course, for us, speaking here in terms of the fintech industry, this may be, not the greatest thing, but people don't wake up thinking about how they're going to pay for things. Right. They wake up thinking about what they want to buy and what they need. So we need to focus on that and make it as seamless and simple to get it, which means pay in the easiest way, not have the hassles of, we talk about fraud and security and risk and those types of things. So it's really about that. How do you make it easier to get what I want as fast as possible with the least amount of hassle, right? So that goes to how do you tap into what technology can bring to make it easier, right? So if you thought, and at the beginning, one of the panelists talked about this, but comparison shopping, even just searching for what you're looking for, that is far, far easier online than it is in a very large retail environment or going to multiple retail environments to find what you want, But then what's difficult is if you're buying something really large, getting it to your house is sort of not simple, right? So maybe there's a way that you have to figure out some kind of local delivery and things like that. So we think a lot about all those different types of things in different fintech companies that I've been at. I think specifically in terms of what you were talking about with the Indian market, fortunately due to COVID, I haven't been to India in a year, but what I'll tell you is, again, the acceleration of things like QR codes and the average consumer becoming a lot more comfortable using their mobile device to scan a QR code and potentially pay that way, or learn. We were just talking about learning about things, learn about what the products and the merchandise are, and then, make a decision to pay from that moment onward. I think those things make a really big difference. And, 2 years ago, the population that used QR codes, much, much, much smaller than today. I haven't been to India in a year, but I'll tell you in the US, many restaurants that now only offer takeout service because they're not allowed to have, indoor dining, have put their menus on a QR code. So you don't have to touch a menu, right? So you scan, and that's how and then you can order and pick up, as we've discussed. So things like that are making the adoption of some of the technologies that we want a lot more prevalent with the consumers. So if you can scan a QR code, you can pay, right? It's really as simple as that. Now, they didn't learn it that way. They learned it because of a restaurant menu or, a child's game, but they learned how to scan a QR code. We can then tap into that. So for us, it's all about how do you take those trends that have suddenly become common and tap into them and leverage them. And again, as I said before, we're very much a technology forward company. And we're very much into, we don't sit inside the four walls of our company and figure out what needs to happen. We go out there and we experiment. We experiment with merchants, we experiment with consumers, and we see what sticks. And we just keep trying, and something will happen. And that's what happens usually in terms of innovation. And that's what we're excited about. But I think really it's about what makes it easier for people to live, what makes it easier for people to get what they want as fast as they can, and what makes it easier for them to pay. And that's really what it is. I mean, if we want to think far out in the future, pay with your face, I mean, it's always with you and it's quite unique. Quite secure, right?
Absolutely. So I think, like I was saying earlier, each of the perspectives that we're getting from all our speakers are unique. We probably need to go in depth. Fintech is a community that we just launched, and we'd love to have you back on one of our platforms where we can talk one-on-one. Both, on the broader perspectives as well as going in depth into what y'all are doing in your respective segments. But with that, I'd like to really thank you for your time. It was a great, lively discussion, and I look forward to interacting with you going forward again very soon. Thank you so much, everyone.
Thank you, Prasar.
Thank you.
Thanks. Bye-bye.
Thank you.
So that was panel number 2 for you all, ladies and gentlemen. And with that, it's time to move on to the next panel discussion. We'll be talking about fintech integration with the regulations and compliance. Now, this is a loaded session. I'm sure sure you'll have a great time listening to this. Let me quickly introduce you to the moderator for the session, Ashima Ori, Managing Editor of BW Legal World. Welcome. I would like to also welcome the panelists, Mr. Daksh Aluwalia, Partner, J Sagar Associates. Joining him is Mr. Srinivas Kotni, MD and Founder, Partner, Lexport. Along with him, we have Mr. Sanjay Khan Nagra, Partner at Khaitan & Co. and Huzaifa Tawawala, Head, Disruptive Technologies Practice Group, Nishit Desai Associate. So that's the panel for you. Ashima, over to you.
Thanks, Robin. Thank you so much. And a very warm welcome to all the panelists. Without further ado, I think we should quickly get the session started. And I'd just like to welcome everyone personally. Welcome Huzaifa, Sanjay, Srinivas, and Daksh. Thank you for joining us. And, we've heard a lot from the beginning of the sessions today. And, tech development has stimulated spectacular growth in the fintech sector. We are looking at something as USD 65 billion in 2019, and to a jump of perhaps $140 billion in 2023 in terms of overall transactions in the fintech market. So, with that kind of a boom, we're also sitting in the pool of gray area when it comes to regulations and compliances. So I'd like to begin with Huzaifa on this and, get to know that, how has all of this, for instance, when we speak of tech development and we speak of fintech, we're looking at everything which is cashless, payments to crowdfunding, robo-advisors to virtual currencies, everything which is on the digital platform. And, when we pass money to somebody, if we are supporting or donating to a tech starter campaign, we're already in the middle of fintech. So that has too many movables, too many people involved. Now, speaking of payment aggregators, which is at the forefront of this, Huzaifa, would you please tell us what is going on in the area and, evolution of the whole subject, and please take on and please enlighten us.
Absolutely. No, thank you. Thank you so much, Ashima, for the introduction, and good afternoon to all audiences, and probably good morning who've joined from other jurisdictions, and a hello to all my co-panelists. I think digital payments is at the forefront, and the timing couldn't have been better. But there also in parallel has been a huge evolution and a paradigm change when it comes to the digital ecosystem, especially for players who actually facilitate digital payments, for day-to-day online transactions. We had an old law, which essentially was a 2009 law, which recognized payment service providers as intermediaries. So intermediaries were any parties in the ecosystem were helping online merchants consummate digital transactions, take money from the consumers, pull it in, and then pass it on to merchants. The only catch here was the 2009 law, which was there, did not actually require any sort of license to be undertaken vis-a-vis these intermediaries. Yes, there were certain RBI-related compliances which need to be undertaken, by these intermediaries. And intermediaries, as an example for all our participants, basis the old law could be a Razorpay, could be a CC Avenue, any of those entities evolved in the payment system. Even to a certain extent, Paytm had a payment vertical. Come 2020, everything has changed. March 2020 is where the RBI issued a fresh regulation, which was called the Payment Aggregator Guidelines, where they actually, from a compliance perspective, they moved on to a licensing regime. So which essentially said that post 2020, any new players entering the system would require a license from the RBI, and the existing players who were there in the industry had a timeline, have a timeline till June 2021 to get in their license. So there is a enormous change whereby payment aggregators / payment service providers would be treated as regulated entities under the RBI. And there are obvious reasons why the Reserve Bank of India has done this, right? One is the entire digital impetus, which is there in the entire market. And it's easier for them to regulate this digital system through license entities, because historically all of this was happening with the banks. So there is a general shift from a regulatory perspective. So this is the background basis the new law. I'll quickly touch upon a couple of pain points vis-a-vis this regulation, and I'm sure as we continue this discussion, my co-panelists would add on to various verticals as well. So the law is already in force, correct? So going forward, you need to have a license if you want to be a payment system provider. But within that particular law, there are certain pain points which are there, whereby some industry players feel that the RBI has been overly conservative, especially when it comes to imposing obligations on payment service providers. Like one obligation is that a payment service provider who's called as a payment aggregator in the new law needs to undertake background checks on the merchants who they are onboarding to ensure that the merchants are not selling fake, and counterfeit products. Now, it's very difficult for a payment aggregator because it's essentially a fintech player. It is not possible for them to undertake background checks. Yeah, contractually, you can mitigate some things, but this was one condition which, all of the industry players are saying that it's difficult to kind of go and actually enforce something like that. I think the second biggest pain point in relation to this is the extension of this law. The extension of this law is essentially on regulated entities, which is the payment aggregators. But also there are do's and don'ts on merchants, and merchants could be anybody in the ecosystem. It could be a normal online vendor who's got an online website. It could be a marketplace. It could be an inventory based model of e-commerce. There are direct obligations on merchants, and especially when it comes to restrictions on storing data. It's also on the payment aggregator. It's also on the merchants. Now, to what extent can RBI actually go and regulate entities which are not regulated, like normal vendors who are in the e-commerce system? The third technical point, which is not so much of a pain point, but it's more of a contingency point, that the entire model is functioning in relation to no data is to be allowed to be stored in the entire payment ecosystem. As I mentioned, merchants also can't store it, but even the payment aggregators can't store it. With this background, there are a lot of challenges which actually are going to be faced. What happens if a merchant, like, let's take Netflix, for example, right? If Netflix today, you've already keyed in your card details. Netflix is not a payment service provider. It has a back-end tie-up with a payment system provider. Now, what if Netflix wants to migrate to a new payment system provider? Say it's not happy with its existing payment system provider, it wants to migrate to another payment system provider. For recurring payments to happen on Netflix, they will need the card details. But basis the new law, since they cannot store the card details, how will such migrations happen? How will recurring payments happen? Now that's a separate debate. There's a separate law. Then are service providers to the ecosystem allowed to store data? So these are the challenges, Ashima, and I'll probably conclude here with one quick summary of it. Going forward, we are moving into a regulated regime, which is, of course, beneficial from a consumer perspective, because there are greater rights and protections. Because, as I mentioned, the guys who are providing payment services need to be regulated, but somehow the entire compliance and regulatory burden seems to be a little onerous, where there could have been a little bit of leeway which could have been offered in the larger business interest ones. I'll take a pause, and I'm sure my co-panelists would love to add to this further. Thank you.
Thanks, Zephyr. But before we move on, I'd like to pose a question here. You mentioned payment gateways and service providers. So how will this new law impact smaller fintech companies? And would you just please elaborate on that?
Yeah, actually, that's a very good question, Ashima. Since the old law, there were numerous fintech companies, springing up. Essentially, they had a tech play. They used to have a corresponding arrangement with a bank, and they would go as a bouquet of services to e-commerce and online vendors. Since there was no regulated regime, there were a lot of startups which were booming in this space. Now, the question which comes in, once you need to get a license, the startups, it's just not so simple that you have a tech play and you provide these services, because one of the conditions to get a license is it needs to have network capital of 25 crores over a couple of years. Now, 25 crores for a startup in terms of net worth itself is difficult. First, they need to have 15 crores. That's over $2 million. And then subsequently, you move forward. That's close to $3.5 million. Now, startups essentially don't have so much money. Even a bootstrap company would not. Till they reach a Series B sort of a stage, that's the time where they would have such a network. So this essentially would mean two things, right, for the industry. One is that the larger players will consolidate. The market share will get divided into the larger players. The smaller players may not spring up so much, but they will move on to more of a support role, something called as payment gateways, which will provide tech support to the system, but may not be involved in the actual remittance of and settling of funds.
All right, and just in the context of budget this year, Josefa, we've seen some kind of an impetus from the government. There is a huge sanction of funds there, about 1,500 crores, and also looking at relaxation on the you just mentioned capital and everything. So, what is then going to be the way forward? Any thoughts on how now a government is trying to support these startups in the ecosystem? Any other things that you're seeing in the future coming our way?
Yes, I definitely do. The impetus of the government is, very clear that they want to move on to a more cashless economy. They want to move on to a more CNP economy, which is card not, present, or digital economy. Yes, there have been a certain allocation of funds vis-a-vis the fintech industry. There will be evolution of sandboxes. But coming back to the core regulated functions, essentially it is up to an entity to comply with it. So, it's like a dual-edged sword. Yes, there is an impetus, but the second flip to it is that, if you want to boom in this play as a payment system provider, definitely you need to get on to, a regulated regime and not be on the fence.
Thank you, Zephyr. Thank you so much. And, at the center of your session was we talked a lot about the data and data localization. So, taking from there in the, taking the conversation forward, I'd like to now bring in Daksh and ask him, what is the impact of, fintech data localization, and where is the ambiguity in the law, and what are we looking at? How are we moving forward?
Thanks a lot for that, Ashima, and good afternoon to everyone. Thanks to Zefa for that very nice introduction on payment aggregators. So I think talking about data protection and data localization, we need to have the larger conversation in the context of the PDP bill and the how various industries and various sectors are going to be regulated from a data localization perspective. But it's important within the time that we have to just focus in on and jump in on talking about the RBI circular from 2018, April 2018, and what it said. That's the real requirement for data localization in India. And what it says effectively is that the entire data, just to encapsulate it, what it says is that the entire data relating to payment systems is to be stored only in India. And of course, when that came out, everybody was focusing on the big MNCs and the payment wallets and how they need to comply with it. And there was a lot of talk about it. Eventually, I think coming to the impact and how that's looked into, we need to think about what is the objective that the government sought to be achieved by that circular. And the stated objective, very interestingly, was that to ensure better monitoring and to ensure that there is supervision of the data that is going to be used for the data citizens and basically the data principles which are in India. So the RBI really wanted that all of the data that belongs to Indian residents and Indian people is stored in systems within India. And I think if we look at that objective and where we are 2 years or nearly 3 years from there, we have met that objective. But if the objective of the government, which was not probably the stated objective, but a lot of commentators were talking about around that time, was to have a lot of data in India, which probably the government could some form or fashion, data being the new oil, etc., monetize. I don't think that has happened. Is it that we have created a large scale infrastructure to make sure that a lot of data parks and data server farms are developed in India, and a lot of infrastructure is developed around storage of data in India? I think that has also not happened. So the stated objectives have been met. Coming to the ambiguities, I think Ashima, you talked about the ambiguities in the law. Uh, there were a lot of ambiguities in the law, but I think the National Payments Corporation, which is, as far as if we talk about the MNCs and the wallets, the National Payments Corporation of India has done extremely well in the last couple of years to engage with the foreign companies and make sure that they understand the requirements and what they're really looking for. They've been sort of uh, intermediary between the RBI and the wallets and the MNCs, and sort of clarified the position to them very clearly. Uh, it Most of these companies are on record now to say, at least the contentious ones are on record to say that they have complied with the requirements. They've complied with the requirements. Either they've made a statement in some court, or they made a statement in the media. So there are little ambiguities now. The 2019 FAQs, there were very nice 9-pointed FAQs that were released, which clarified the positions. I think it'll have to be seen as to how data localization in the fintech sector, of course, it's a reality as to how it goes on. It'll have to be seen when there is some sort of an issue that comes up, which requires uh, whereby the RBI requires the National Payment Corporation or one of these companies to fork up a lot of the data that is stored in India. I think that's when it really have to be tested. So I think that's just a brief overview within the time that we have.
Thank you, Dakshin. Just to get into a little more into the topic, once the bill is, here, and would you see any, would the bill relax any requirements in terms of things mandated by RBI? Also, another question to that is, there's a lot of ambiguity on the data itself. For instance, when we have so many domestic regulators, in terms of, say, SEBI, IRDA, or PFRDA, health and financial data is also treated differently. So could you just elaborate on what is the importance of what kind of data?
Yeah, it's a very important question, and thanks for that. A very important question. So, if you look at the personal data protection bill, it's far from a reality. At least that's my perspective, and I like to hear from the others. I know this is not a data protection session. We can digress very quickly, but uh, data protection in fintech is a reality. Data protection in all other sectors, I think we are still on with the old law right now, which is the Information Technology Act. Uh, we've heard that the Joint Parliamentary Committee is going to sort of maybe rewrite the bill, the data protection bill that was designed by Justice Sai Krishna. But we don't know anything about that yet. I mean, there's no meaningful update that's come in. So effectively, we'll have to wait and watch on what happens on the PDP bill. As far as the dilution of the RBI circular is concerned, I think that will not happen. There might be additional layer of requirements that come in through the PDP bill, but the way it's quite clear, the RBI circular is law. It's been complied with by most people. Most companies have complied with it. As far as the PDP bill is concerned, when it comes out, what are the compliance requirements? Companies will have to evaluate and then meet those requirements um, from that perspective. I think one important question that you asked is on the other regulators as to the SEBI insurance regulators. I think different regulators regulate different kinds of companies, and every company will have to comply with their own regulators and their own regulatory requirements. If and when that comes out, that'll have to be seen. What is quite clear, at least as of now, is that sensitive data will include financial data. So most fintech companies who are going to be collecting financial data will have to comply with the requirements of PDP bill for the purposes of data localization and other requirements for sensitive data. I hope that clarifies. Yeah.
Thank you, Daksh. Thank you so much. And, when we speak of, like you mentioned, compliances, and companies will have to see as and when these regulations and legislation come out, how are they going to face this? Brings us to another important discussion about the challenges these companies are facing and the customers, and how and where do we tie in the responsibilities. So at this point, I would like to welcome Mr. Kotni and Srinivas. Would you please elaborate on that and tell us where are we in terms of the challenges? If you could cite some live examples, that would be great.
Thank you, Ashima. And it was really interesting listening to Zefa and Daksh. Both youngsters, a lot of depth they have in terms of the subject. And we come from a era where technology was just electronic typewriters, maybe the maximum what we have seen. And we have seen the technology grow by leaps and bounds, slowly, gradually, and has taken over every aspect of our life. So much so that we have become inseparable with our smartphones and smart devices and the iPads and all those technological innovations, which have made our lives a totally different kind of a, if I can give a parallel, Alice in the Wonderland, something like that. So all your cues are gone, everything is gone. But I would want to start with what exactly, because I don't know the kind of audience we have, etc. They may not be all lawyers, maybe a cross-functional audience. So what exactly is fintech? So that, I thought I'll just touch upon that. Fintech is nothing but, because we have a lot of jargon and we get lost in these jargon. Fintech is using technology for financial services. The financial services can, just to replace the old fashioned with a new paradigm. So what all is impacted with this? The consumers, the way they store their money, the way they save it, borrow money, invest money, pay transactions of payment, etc., mutual funds, insurance, all these things are part of this thing. If I can give a definition, borrowing it from Financial Stability Board, fintech is technologically enabled financial innovation that could result in new business models, applications, processes, products with an associated material effect on financial markets and institutions, and the provision of financial services. So therefore, all this is for what? This is for better customer service, because all these financial services are provided by either corporations, banks, or financial institutions. So therefore, they need to provide at door, or in fact, in your device services, financial inclusion, also cost optimization. To give all these services, there used to be huge amount of cost which was being secured by these agencies. And now all that with the technological innovation has changed. Small little startups are coming, mushrooming actually. If you go to Hyderabad, Bangalore, Chandigarh, even rural areas, people are setting up startups, and they are willing, and they're like they're bubbling to give a lot of solutions and understand the pain points where the customers are facing. So therefore, in this kind of a buoyant environment, regulatory issues are bound to be there, because what happens is that technological innovations come first, and then as a after reaction, the government, RBI, the finance ministry, the regulators, IRDA, SEBI, all of them are in the game. Most importantly, the Reserve Bank of India, because it is the custodian of the monetary policy and the currency. So with different kinds of products coming in, cryptocurrencies coming in, financial transactions happening, payment systems coming, stored cards coming, debit cards, credit cards, web-based payment services, UPI, all these things. Every day there is a new technology which is coming in. And the best part is that the Indian government is, very, very focused on making digital India a reality. If you go to the market even today, how the customers are adopting technology, Paytm is there. How Paytm has taken over the sabjiwalas and the mother dairies. It's there to see. And then the moment you have the customers who are not literate, and who are also not aware of their rights in terms of the regulatory environment. And since the transactions are very small, I've secured some statistics about it. There were about 3,435 crore digital payments in 2019-20. 3,435 crores. So therefore, we are looking at a 1 trillion digital payment market. The entire spectrum is huge, but what are the constituents? Their transactions, if somebody is buying a cigarette packet or a BD packet, also making payments. And with all the kind of exposures, because the moment you have the financial inclusion at the top end on a technological platform through aggregators, etc., any amount of regulation by the government may not be enough to take care of the perpetrators who are looking at phishing and who are looking at trying to corner the hard-earned money of small little customers. And if you go to the enforcement agencies also, they're not ready. The cyber cell, they have their own crime to control, other things to control, both blue collar and white collar. But this technological internet-based crimes has become a huge issue. If I have lost, say, about a couple of thousand rupees in a transaction, either a financial transfer transaction or a merchandise transaction, how do you make it at the end of the day, there is a criminality involved. But then to make the machinery to work is a huge task, because either you have to file a criminal complaint in the magistrate's court and get the entire investigation started. If you file a written complaint, that will see a dustbin. So therefore, we need to have a regulator who is also looking at that segment of the consumers. Yes, corporate consumers, and then at the higher end, there are wherewithal, there are lawyers, because all of us can articulate for them. But at the lowest end, it's a difficulty for the customer, because like we have the banking ombudsman, we have, for this kind of technological crimes, I feel that there should be something of that sort. So, having spoken about the meaning and then the frame of this entire fintech landscape, we should touch upon what are the regulatory coverage. I've tried to jot down some regulatory issues. One is with regard to NBFC licenses. So Josefa was talking about the new guidelines and all. And he also touched upon the point of intermediary, the definition of intermediary, which came right in the Information Technology Act, right from 2000 onwards. So therefore, the aggregators, when they're providing a platform and asking the merchants to come on it, customers to come on it, giving a payment system, etc., it's impossible for them also to do a diligence on who is operating, who is genuine, who is not genuine. Right? And there are judgments after judgments where intermediaries have been given a kind of a protection that, yes, if there's no intention, because in criminal law, intention is extremely important. At the same time, under the consumer law, the consumer's interests are important. The government being the regulator, there are various stakeholders, right? So therefore, that intermediary thing has to be, if an NBFC license is obtained, if the compliance of course, it is evolving. Every day we are, when we talk about the data protection law also, where we talk about private personal sensitive information. I don't want my information, because all financial information, what is my credit card number, what is my kind of spend, where am I going, what am I purchasing, where am I eating out, where am I getting entertained, what are my transactions? Though if you look at the analytical companies, they're having all that information. And when we fill up the forms for the banks and all, whenever we are taking services as consumers also, we don't read the fine print. As lawyers, we don't do it. So you can imagine the lowest ebb. Nobody is looking at the fine print. The data is being managed, mismanaged, used, indiscriminately exchanged, and every day we get calls from different stakeholders in the society who want to push their services or goods to us. Where are they getting those numbers from? In spite of all that do not call registry and all that. So therefore, these are the issues also we need to grapple with. Going further, when the financial markets get more evolved, more matured, we need regulations to also, one, catch hold of it and to penalize it. So the transactions are so small that it becomes impossible for anyone to focus on. So therefore, it has to be taken at a collective level, at a planning level, at the Niti Aayog level. The ministries have to sit together. RBI has to take the onus and come out with a kind of a solution. Though, I mean, in terms of regulations, RBI has done a wonderful job. I mean, if we talk about they issued in principle approval to payment banks, right? So therefore, I don't need to go and stand in the bank. I mean, example is that Paytm, which has got the license. They don't have a physical bank. I mean, they have only one office in Noida, right? From there, through their servers and through their IT-enabled interface on the mobile and the internet, the whole banking it's revolution. I mean, the other banks who have invested so much of capital into their operations, into their branches, into their ATM machines, they don't know where to go, because now I can transfer to my brother whatever I want to transfer at a click of a button. And then there's an entire mall on the Paytm app and other apps which are coming in. So therefore, this is, I mean, the moment these kinds of things are happening, RBI is, I mean, I remember of the era before 2007, like we had no payment systems guidelines, right? So the transactions are happening. We had ITZ card, we had those toll cards, we had debit cards, credit cards, oxygen card, many cards were there, but no regulation. What is happening? They were taking the merchants at one level, they were promoting the card or whatever the payment system is at other level. So therefore, RBI, when it realized that many such entrants are there and consumer interest is there, they came up with the Payment Systems Act and the guidelines, etc., for netting of the transactions, for securing the money of the customers by way of escrow mechanism, all those things. And it's an evolutionary process. So therefore, the kind of settlement is done with the merchants also is something a beautiful way, like a stock exchange works. There's many debits and credits happening. So therefore, I mean, RBI also, every time there's a new innovation, new entrant, I mean, whether it's insurance innovation, mutual fund innovation, policy bazaar and policies, etc., or merchandise innovation. So you need a different kind of a regulatory environment for each such product, because inter se also in fintech, each segment is different. It has got its own vulnerabilities. It has got its own features which are different from the others. So therefore, I mean, somebody who's sitting at the helm of legislative drafting, I mean, you know, I mean, how the Ministry of Justice drafts. So therefore, you need to have include lawyers and others, also the persons from industry who know what are the pain points, both in terms of compliance and also in terms of securing the consumer's interest, and then make practical regulations. If you make regulations without applying mind, it can kill the industry, because sometimes the compliance is so unreasonable and illogical that you are only doing that compliance for then what is the result? What are you trying to collect information for? How are you storing it? All this, if proper mind is not given, there can be issues. Then I mean, the introduction of Bharat bill payment system, I mean, this is another great innovation. Then the consultative paper on card payment infrastructure. I mean, we have all seen the draft. And peer-to-peer lending. I mean, that draft guidelines also are there. Directions on account aggregators are there. Authorized payment solutions by NPCI. Many of such that IMPS, Unified Payment, UPI is a huge, I mean, like nobody can operate without UPI now. I mean, even Paytm, when it came, we understood that only Uber payments were being made through Paytm. Then they came up with their own payment, because initially the government was going very, very cautiously, because we used to have this prepaid cards also, whether it is closed, semi-closed, open and all that. But you can't convert the card into cash normally.
That's a good point, Srinivas. Sorry to cut you short. You mentioned Uber payments, and I think I would take a moment to go to Sanjay, and then and I'll come back to you after that. Because that, yes.
Maybe I've taken a little more time.
No, because that's a very key point there, because, you know, when we are speaking of Uber payments, I'm reminded of, you know, how there have been issues around merchants in foreign jurisdictions or, you know, outside of India, offshore merchants, and had to deal with two-factor authentication and other such challenges. So, Sanjay, would you please tell us something about the cross-border payments and, you know, how is that adding to the whole regulations and compliance issue?
Sure. Thank you. Thanks, everyone. Really insightful thoughts. Before I move on to Uber, just one quick point. Fintech is so many things, and this panel discussion of 30 minutes has thrown up things which are so varied that we can take one day each on those topics. Coming to two specific points that I wanted to touch upon, one you have pointed out is cross-border payments. Uber thankfully doesn't have that issue any longer, and it is based out of India. But any foreign merchant today who looks at India as a huge consumer base has a peculiar problem of collecting payments abroad. And that is a problem I think RBI has tried to sort of resolve over a period of time. Unfortunately, what has happened is that the regulations have been drafted in a manner that they are not in tandem with ground realities, if I may say so. There is OPGSP guidelines which permit collection of money in India by an entity in India on behalf of a foreign sort of merchant. But there are certain compliances because of which it is only suited for those merchants who are shipping goods and who are able to collect money and who are okay with collecting money after the goods reach the shores of India. For digital products, which are quite a few, I mean, today there are websites in Europe, America, across the globe where you can just go and buy products which are digital goods in a way. Some of them would also be willing to ship some things to you. There are ticket booking websites. You're traveling abroad, you want to book something. You need to necessarily, in most cases, use your international credit cards. Whereas within domestic ecosystem in India, like everybody else on the panel has discussed, there are so many options. Now, I think time has come that I think before I think we forget about it. I would like to thank the RBI also. I think payments department in the RBI is the only department which has seen constant growth over the past 20 years or so. If you see, I think they have a 3-year sort of horizon of looking at things. Let's go back to starting of ATMs in early 2000s. From that moment till UPI, which is a revolutionary technology, no other jurisdiction in the world, and this includes all your who's of tech ecosystem. Nobody has this technology where people are able to ask for money, other guy can check and immediately give. You go to a telewala, you make payments online, etc. Now these are very innovative and very disruptive technologies, and RBI has been at the forefront of getting all of them in place. So our domestic payments ecosystem is, to my mind, at a very good stage where 2009, like Josefa talked about it, 2009, we had an unregulated regime. We started from it, where that was the time people were booking tickets online, purchasing online, starting off Flipkart, Snapdeal. Now we are in 2020, so RBI has realized maybe time has come because so much of money is moved online. There is some requirement to probably regulate them. Maybe regulations are not right. Maybe they will evolve over a period of time. We'll all help them. But there is at least some thought process, and it is moving in a rational direction. And by and large, it is not interrupting businesses in a manner that nobody is able to do business. People are still able to do business. Yes, there are teething issues. On cross border, however, there is another angle that comes into it, which is FEMA. So there is domestic payments plus FEMA, and then the entire cross border becomes that much more puzzled. And I think we need some specific thought process around it, because I don't see a world 2-3 years from now wherein we can call ourselves a great payments economy when our consumers are not able to pay abroad. Merchants who are able to collect global payments in any jurisdiction face a roadblock in India. So India becomes sort of a no-go market for them. They have to set up a shop in India, do some sort of an arrangement. One has to go to RBI to take approval. I think those things we need to start thinking now, because 2-3 years from now we are looking at a regime where people will expect that from India as an economy. Otherwise, we will sort of lose out on some aspect of business. That's number one. And I'll end my cross border here. There is a lot to talk about in cross border, but maybe for some other day. Second, being mindful of time, I'll quickly just make one point on online lending. I think digital lending, and there are various forms of lending. Everything can be digitally lent today, but focus here is on consumer lending and payday loan, as we call it. I think that industry has moved and grown leaps and bounds. With any growth, you will see issues. There are issues around recoveries. We've all read about them. There are issues about RBS concerns, how people will be treated. There have been bad reports. There have been also good reports as to how people have been enabled during COVID times. These fintechs were able to provide money in the pocket of people who really needed it. So I think, and now RBI has formulated a committee. I would be very interested to see where does this regulatory regime end up. There have been for P2P is a good example. P2P, there was a consultation paper, there was discussion, similar sort of regime where people were facilitating lending online. RBI finally came out with a regulation that required P2P to take a registration as an NBFC, and other than registration, you could not operate a P2P sort of platform. And even after registration, you could not lend yourself, right? And therefore, I wouldn't say it has killed the industry, but we have not seen too much of P2P thereafter. Once the regulations came that there should be a registration, and after registration you can't lend yourself or in any other form directly, indirectly, it has sort of stagnated the industry. It may well be the reason because of market forces or the way evolution of market happened in such a way, or it could well be because of in some part the regulation. So I would be very, very interested in looking forward to what RBI committee recommends on this and how they come out with a regulation which sort of doesn't, halt the growth. And we are looking at a huge growth going forward. If I see the way we have all seen in the past 5 to 7 years, the online lending, consumer lending space is a huge potential for all of us. And I think we should be very, very cautious in ensuring that regulations won't really overkill those are my 2 cents.
Thank you, Sanjay. Very pertinent point there. And in a country like India, where the average adoption rate is at 87%, as against how it is in the world to 64%. We've touched upon many points today, and I'm sure we've left many points in the interest of time. We wanted to discuss a lot more about, or I wanted to pose many questions about eKYC and intersection of various regulatory authorities, how people can move forward with compliances. But I think we're going to have to come back another day to discuss all those things.
We haven't even spoken about crypto, so sorry to interrupt. We haven't even touched upon crypto.
Shrinivas actually touched upon cryptocurrency a little, but yeah, again, RBI takes differently towards cryptocurrency and blockchain, and there's that interplay there. So we hope to discuss this at another time. For now, thank you so much, panelists, for starting a discussion which will, I'm sure, result in more sandboxes coming in, or more solutions, maybe a unified regulator coming in times. So thank you so much, everybody, for joining us today. And, I do hope to connect with you offline to talk a little more about this for, our audiences, and maybe we can bring them a print edition on this of the discussions that come about. So thank you so much, everyone, for joining. Thank you so much, Huzaifa, Daksh, Srinivas, and Sanjay. And we hope you have a nice day.
Thank you. Thank you. Thank you all. Thank you so much.
Thanks.
Thank you so much for that. And with this, ladies and gentlemen, we'll be moving on to the next panel that we have for you all. Thank you once again. So once again, if you're just joining in, welcome. We are talking about a lot of interesting things here, and I'm absolutely sure that you will enjoy the next panel as well. We're moving on to the next panel discussion, Future of Fintech in Creating Digitally Regulated Marketplace. And the moderator for this is Prasad Sharma, Strategic Initiatives, BW Businessworld. Joining him is Mr. Neerav Chokshi, co-founder and CEO of Conclave. Along with him, we have Mr. Madhusudan Ekamram, co-founder and CEO of CreditB. Both of these, along with Prasad, will be the next panel. Prasad, over to you.
Thanks, Raveen. Thank you, audience, for joining us. With me on the panel today, like Raveen mentioned, is Neerav from Credible, and Madhusudan, Madhusudan from CreditB, whose video is still not on. Madhu, I would request if you could switch on your video. Just 1 second. I seem to have. Yeah. Hi, thank you so much. So, today we're going to be talking about how, with the emergence of fintech, we've moved to digital marketplaces, and how, earlier where we had financial and securities products that were highly regulated. And, although there are gaps there, the regulation has come a long way. But with trading and commerce now moving on to online, both retail and B2B, what are the challenges that are coming up? To kick off with, I would request if you all could, just give a brief introduction of yourselves for the audience and give, your general overview on how you see the role of regulation in digital marketplaces as we move forward. I'll kick off with Nirav, but no particular order, just the order I'm seeing you guys on screen. So I request Nirav to kick it off, and then we move to Madhusudan.
Great, thank you, Prasad. Thank you, everyone, for having me on this panel. So my name is Nirav Choksi. I'm the CEO and co-founder of Credible. Credible is primarily a fintech focused on working capital solutions. We partner with very large corporates in India and enable large-scale liquidity programs for their vendor, dealer, distributor, retailer ecosystems. And we use extensive technology and in partnership with large financial institutions and capital markets to enable these transactions. We are probably at in the middle of what I think is a regulatory transformation that's happening in this country. One of the biggest challenges I think for inclusion and proliferation of credit in this country is the ability to onboard customers digitally. And I think that's one area which while there is a lot of movement on the consumer side of the business, on the B2B side, it's still very, very challenging. So the amount of time, effort, and money that is spent in trying to onboard an SME or an MSME or a mid-market corporate onto a lending program by banks and other financial institutions is still very paperwork driven and very physical driven. And I think that's really the biggest impediment to creating availability of credit to this segment. So that's my opening thought, and I would love to build on from there.
Sure. Thanks, Nirav. Appreciate it. Madhusudan, if we could have a few words from you and an introduction about yourself.
Hey, sure. First of all, thanks, guys. Thanks for inviting for this forum. So myself, Madhusudan, I'm the co-founder, CEO of CreditBee. So I also represent a not-for-profit organization called FACE, Fintech Association for Consumer Empowerment. So it's an organization where we are about like 15 plus B2C lenders, which has taken the fintech B2C lending as technology as a core. And we have formed that association so that we could kind of rightly represent to stakeholders, consumers, media, and whatnot. All right. So with having those two positions I'm representing for this forum. So what we are basically run CreditBee is a credit platform, kind of integrating with multiple NBFCs and banks. So we ourselves are an NBFC, which is a systemically important NBFC, and we try to solve for consumer needs. So what happens in India is that, if you look at the entire bureau penetration, it's roughly about like, all the bureaus included, maybe having about like 20-30% of the entire population's bureau footprints. So that leaves us with a huge a billion plus people who are new to credit, is what we call, basically not having a kind of a financial footprint on bureaus. And trying to solve for that is towards financial inclusion is what we are trying to really having that goal to solve for, right? So having said that, there have been multiple challenges in the B2C lending, what we have seen recently, and just kind of switching gears towards regulatory framework, it's definitely evolving, and it has taken a lot of transformation, and it's going through a transformation now, with RBI setting up a new task force to come and kind of look at how the B2C lending is happening currently, and then what kind of regulations would come out. Happy to speak more on those things and then kind of share our thoughts as well, because we give our own representation to RBI task force in terms of how this could be kind of formulated or regulated. Happy to kind of share those thoughts with you guys. Yeah.
Thanks, Madhusudan, for your opening thoughts. Nirav, I'd like to come back to you. You were talking about how a lot of processes have been traditionally paper-driven, and currently, as the digital ecosystem explodes, there are challenges around that. Now, we do have a great framework, but there are certain judicial issues that have come in the way of that. How do you see that happening? And then with the emergence of, for example, biometrics that go beyond Aadhaar, right? How do you see that becoming easier, not just from a credit risk perspective, but also from a transaction approval and ease of transaction perspective?
So Prasad, for our consumer lending, I think there is, and Madhusudan could talk more about it, but there is already an established video KYC digital signing process, which is widely accepted by a lot of financial institutions. Now the challenge here is not, and of course that will evolve, right? That will become more and more easier to do, etc., etc. The bigger challenge here is, what about SMEs? What about MSMEs? That entire onboarding process today is still, is largely physical by banks. So they need to do what is called an OSV, which is original, seen, and verified. For every KYC document, they need to have physical copies of KYC documents. They need physical documents signed and contracts signed. And as a fintech platform who's trying to make this, all inclusive and grow credit in the country, it becomes very challenging to onboard vendors. So let me give you an example. We're working with a very large agri-tech agro player, global company. There are 4,000 dealers, and they want to onboard 4,000 dealers onto a channel financing program. Now, imagine, how are you going to do that? If you have to do that process physically. So those are really challenges. I don't know how biometric would solve that, because unless you have a biometric embedded onto your mobile phones, and those are technologies which are not yet completely reliable. Unless that happens, you'd probably not have, you go too far with that. And I think that use case would be probably more relevant to consumer lending.
Understood. So, Madhusudan, you were, obviously, while we love your perspective on what Neerav just said, but also given the fact that you said that you are, assisting the RBI in terms of, evolving regulations. How do you see, this entire ecosystem? How do you see us improving it, and how do you see us doing much better than where we are right now?
Sure. See, I think always RBI has been of the perspective that they don't want to come and regulate in the very initial days. They want the industry to evolve, and the way it is evolving, they want to kind of come and put up the regulations, because otherwise it would kill the innovation, right? So while those thoughts were very genuine and noble, so what happened in the industry, I think recently we have been reading a lot about the lending apps and the kind of ground situations that happened probably in certain regions of AP, Telangana, and whatnot. Of course, I mean, those were very unfortunate events, what we got to read about, right? So with that, I think the regulations and RBI had to step in. So let's say that was kind of a trigger, which made the regulations to come in. It was never the intention of RBI to kind of disrupt the innovations or possibility of innovations, what was happening in the industry. So I think that's point number one. Point number two is, there are different ways the fintech platforms are working today, right? So there are NBFCs which are running an app or a digital platform by themselves. There is no other company, but an NBFC owns an app and runs it. The second thing is that there is a platform, and there is a group company level NBFC, where the NBFC is also part of the group company, and it just works on the platform, where the platform is owned within the group company. Then there is a third category of apps wherein they are pure play platforms. There is no NBFC or whatsoever within the group or within the related parties, and they totally rely on other banks or NBFCs to kind of operate on these platforms, right? Now, the larger issue where it comes is the RBI as such today is regulating the NBFCs and banks, right? So the moment somebody is acting as a pure private limited company and acts as a platform and totally dependent on third-party NBFCs and banks, I think that's where the RBI wouldn't be kind of very much aware of what the fintech is actually kind of doing it, whether it is following the processes, be it the KYC processes, or the fair practice code comes on the collection practices, or in terms of the pricing. So we have seen some usurious pricing also what's happening in the industry. So that's something goes beyond the radar of what the RBI regulations are, right? So I think within these three classes, definitely the first and second, where either an NBFC running an app or there is an NBFC within the group of platform company, and then they are kind of operating it. They are fairly comfortable because there is a subsequent reporting that happens to RBI on a monthly basis or on a quarterly basis about all the activities and whatnot. But when it comes to a pure play platforms, which we have seen in the market where the issues started happening, were all of these pure play platforms which are kind of trying to look at some of the NBFCs which are of very small size, right? So trying to take a control over the NBFC operations. And what the new thing that has happened in the industry is NBFC license renting. So that's the very unfortunate thing that happened, where the platform has not under the radar of RBI, but these platforms started using or kind of renting out licenses from an NBFC which was dormant or not with much of activities or a very small scale kind of an activities. I think that's what went without the purview of RBI, where the issue started happening. So now that the new task force has happened, I think there are two ways to look at the regulations. One is not everything need to come under RBI. So I don't think RBI wants to directly control each and everything, but there is a other way to deal with certain regulations, which we call it as SRO, or a self-regulating organizations. For example, for payments, they have set up an NPCI, which is a very payment-specific a body which has representation from regulators, from government, from the industry players, and other stakeholders as well. A similar kind of an entity is what I feel probably is the a right direction to go towards, an NPC mirrored kind of an self-regulating organization, which would basically look after the fintech platforms, right? And this would have players from government, regulators, and even the so from the industry bodies and whatnot, where there can be some kind of an accreditation to the apps which can operate in the Indian market, right? So probably moving towards that direction would be, which is quasi regulated with a special body that has been set up. Still kind of the body reports to the RBI, which is way easier for RBI to kind of manage it rather than managing each and every other fintech platform that would kind of evolve, right? So what we have seen in at least last 3 months, or in the month of June, July, August kind of month of 2020, we used to see that there were at least 100 apps that were coming out online on a monthly basis. So, and in last 3 months, what we saw was like every other month there was 100 apps which were going down, right? So it has become so dynamic, and I guess that a self-regulating organization would be a right answer, or probably the way to kind of move ahead with. Yeah.
So interestingly, Madhusudan, one of our earlier panels when we were discussing crypto, overall blockchain was the course for the discussion. But when we came to specifically crypto, the lack of an underlying asset became a subject of discussion, and I think it came to why we're potentially banning it, and this whole idea of a self-regulatory body, that did come up for discussion. So I think it kind of segues in the next thought that I have, that look, we've talked about how we are moving from the existing way of doing business to the new way of doing business in the digital domain, right? And we are addressing how to change existing processes and existing risks. How are they tackled? But what about emerging risks? What do you see? Let me first come to Nirav there. What do you see as the emerging risks? Right? What are the new challenges that we are going to have face, which will require regulation, whether self-regulation or whether RBI-led strong regulation? What are those key challenges that you see?
I mean, see, digital lenders are growing really, really fast, right? And as they grow fast, especially the ones with NBFC licenses, they would become systematically important at some point soon. Now, when that happens, one of the fundamental risks to really look at is your credit underwriting model. And today, credit underwriting has evolved into, has started moving away from traditional credit underwriting to, all-encompassing credit, even for new to credit customers. And we have yet to see, how that pans out over the next several years. So if I've given out a business loan, which is a term loan for 3 years, right? How are you monitoring that risk? How is that, how did that credit underwriting algorithm get proven? It takes time to prove data. Now, and that's fundamentally the big challenge here with, moving away from traditional credit underwriting models. So that's one emerging risk that I see. The other, of course, emerging risk is, when we spoke about crypto, right? Now, this whole idea of being able to replace traditional currency with crypto, and while there are merits to it and there are demerits to it, does the Indian consumer actually understand crypto really well? A majority of the Indian population doesn't understand equity, doesn't understand most investment products. They don't know what insurance is. So if you are going to create, bring this in some shape and form, and it becomes a speculative product, right? Which creates a lot of hype, etc. You are putting at risk the Indian investor, the Indian Aam Aadmi, so to speak, who's not probably as aware as some of the emerging markets. So I think that's also a risk to think about. Finally, of course, when you have ease of credit, right? When you have credit availability becomes extremely easy, there is a tendency to overborrow. So we personally think that good credit is good credit, bad credit is bad credit. I mean, there is nothing like, this could be good credit, and nobody knows yet. So it's fundamentally, those are issues to kind of think about.
Right. Thanks. Your thoughts, Madhusudan, on the emerging risks?
The risk is something like this, So every regulation that comes in is going to be good for some people and bad for some other guys, right? So I think that's how it starts with. It's not always beneficial to everyone. I don't think any regulation or a law can be made that is beneficial for each and everyone, right? So one of the recent things what we have seen in the NBFC new regulations, right, is changing the net owned fund from being 2 crores to 20 crores. That's the draft guidelines, which has basically kind of come out in the market now for a review, right? So with that, let's just look at that particular clause and what kind of risk that probably puts it into a fintech or a startup world, right? So see, when we raise seed rounds, we are not from basically a millionaire background, so we come out and then we raise funds and then we start the startup. So the seed fund what we get is about $1 million. That's the real seed fund what we can go out and raise in the market. Now that is about like 7 crores, right? So now raising a bar of a net owned fund from 2 crore to 20 crore would make it somebody to raise a $5 million of a seed round, which is not existent in India. If somebody wants to kind of start up and have an NBFC in his model and to kind of go and apply for such licenses, probably it was easy for us in 2015-16. Of course, we have grown beyond that, but when we had raised our seed fund, we could definitely go and apply for a license and then start our businesses. But that kind of a change in the regulations will act as a risk for many of the new players who would be kind of trying to plan their models. They have to kind of start looking at rebuilding their models in a way that either they have to accommodate a larger capital or probably change in their business model to kind of work as purely a platform, but kind of postpone their thoughts of applying for a license probably for like next 1 or 2 years before they raise Series A or Series B kind of a rounds, right? So till that time, probably applying for a license becomes way tougher now. That's one thing. The second thing is many of the guys who are in the mid stage, for example, they have a license and now they don't have enough capital to kind of increase their net owned funds to kind of 20 CR. So one of the key things that what happens to those guys is, only work on that aspect to retain the license, but not, probably their business models have to change, their strategies have to change, and then they probably have to raise more capital to kind of retain the license and then be eligible to kind of operate with the license, right? So what I'm trying to say is that when the regulations comes for a reason, So if you see that this is the right time for the regulations to come, because there are a lot of things that are happening in the field which are going very unregulated way. Even the consumers are questioning that how are these people or some of these rogue players are allowed to kind of operate in the Indian market, right? So then in that case, the regulations have to come in. Once it comes in, it will be definitely beneficial for a larger community is what is my belief, but definitely may deter a lot of plans of many other guys, right? So that's one thing to state. And the second thing is the emerging risk is, with respect to the digitization of the entire lending process, somewhere, we're still not completely digital. We are in between phygital. Phygital is a new a term what everyone is coining now, right? There is the physical and the digital angle, both are involved here. So we are in between phygital and digital. We are not totally gone digital yet. be the new regulation of video KYC requires a personnel being in the background to conduct that particular KYC process over a video call. So there is a physical presence of a person, right? So it's at least, one thing what it kind of avoids is this particular physical guy need not walk into the place of a customer and then do a face-to-face discussion, right? So somewhere, there is a phygital and moving towards digital is the process what we are in. I guess I just hope for that conversion or the transformation to happen much faster, which can be more efficient for a lot of players in the market to kind of make their processes more efficient. Yeah.
Thanks, Madhusudan. So, Neerav, now that we've talked about all of these aspects, I think one of the things that's coming out clearly is that there has to be a lot of active participation from all the stakeholders, right? Whether it's the government and regulator, whether it's the platforms, whether it's the tech providers, the participants, the consumers, right? Everybody has to come in there to ensure, that the regulatory framework is prepared well. It is, Madhusudan did say that, we can't create a regulatory framework that's good for all, right? So we have to create something that's, good for the majority, right? But what do you think is the best mechanism to bring together everyone onto a single, platform and create a positive regulatory environment?
So Madhusudan brought out a great point. Like he spoke about self-regulate, an SRO, for example, right? So today there are fragmented organizations. There's a digital lending SRO, so to speak, which represents the interest of digital lenders. Of course, there is FACE, which represents consumer lending. Now, if one could create a body where all of the constituents, like NPCI, for example, for payments, I think that would make a significant difference to representing the digital world to the government in a more efficient manner.
So, Madhusudan, in your in your engagement with the regulator, for example, have you seen any inclination towards going towards the self-regulatory or a hybrid model where there's a self-regulatory platform that reports to the RBI, and how do we ensure? So, for example, when one talks about 100 apps coming up in a month and 100 apps going away in another month, consumers not being aware of what's right and what's wrong, because I download something from the Google App Store, it's rated 4-star plus, 1 million downloads. That's the only way I can find out whether this app is viable or not, right? So, have you seen that inclination? If not, then how do we go in that direction?
See, I think, I wouldn't be able to comment on what regulator would be thinking about. It's more about what the proposals, what we have given to the regulator, right? So I think they have they have given that opportunity for us to go and represent, discuss in detail the pros and cons of each and everything. So it has not gone with a idea that probably this is not the way to go about or anything of that sort. But probably they have accepted our recommendations. That's where it is. But definitely they would be consulting many other players, not just the NBFCs or the fintech players, but they would be consulting with the many other stakeholders, right, to come out with what's right for the industry. So I wouldn't be able to comment on that whether they are inclined towards this or not, but I would rather propose strongly for an SRO to be in place, because it's the right time for an SRO to be in place. That's one thing. Second thing is, while we talk about different other SROs where there is a lot of regulatory and industry bodies which are part of it, here in the digital lending space, I think there are many other new players who have to be part of this kind of ecosystem, which is starting from Google, right? So I think Google becomes a larger stakeholder because that acts as a platform for us to distribute our apps, right? So Google needs to be part of such SRO, right? So it should be basically the regulator, the government, the Google, then the industry players, banks can be part of such kind of an SRO, which can definitely give an accreditation to which app to be live. That's where it becomes a stop, right? So if Google is part of it, then Google knows whom to be kind of approved to operate in an Indian ecosystem and whom not to be approved for an operating in an ecosystem, right? So and in the past, what I've seen in this last 2 months is Google also has played a major role. So it has basically asked every other app or a lending app to provide a lot of details about the the partner NBFC or the licenses and give declaration of the directors on certain activities what the platforms are doing and whatnot. And based on those processes, I think they have really taken off many apps. So I don't think the regime is as it was in 2020 now. Any app which comes out to do the lending, I think there are multiple more certifications what they have to provide to Google before they can get themselves authorized to operate it. But having said that, that's a very soft way of controlling it, what we are seeing it. But probably moving towards a little bit of a stricter regulatory regimes might make it more formalized. But as I told, some people might be at a disadvantage when such things happen. Yeah.
Great. Thanks, Madhusudan. So I think, we've got some deep insights from the both of you. I think it's an emerging space. There are lots of imponderables here. But, if you were to give us a 2-minute wrap where you could talk about what you think are one or two of the, emerging opportunities in this space and how they lead to challenges, right? And what are those one or two key challenges that need to be kept, an eye out for? Because, earlier we were talking about in one of the panels that, 10 years ago, India and its digital stack, et cetera, was way behind. I read a report that Pakistan was doing more mobile payments than India at that time, right? Now we are way ahead of the world, right? So what is it that, what are those emerging opportunities that we need to seize now so that we don't fall behind the world again? And, what are the challenges to going there? Maybe Neela, we can start with you.
Sure. I think the biggest opportunity is ease of business, right? Or ease of availability of credit.
Right.
I think that's an opportunity which should not be missed. Like Madhusudan rightly said, move away from phygital to completely digital, because that one singular thing would create, I would believe, a lot of financial inclusion. And I'm not talking just about fintechs or digital lenders, right? Even for banks, even for regular NBFCs, brick and mortar companies, right? There would be a tremendous impetus for them to reduce operating cost and go out there and acquire more customers and thereby proliferate credit better. So that's one thing. The challenge, of course, there is, getting buy-ins from everybody, getting the regulator to kind of agree to it, getting the legal system to agree to digital contracts. I mean, it's still yet to be proven whether a digitally signed contract can be enforced in a court of law, even under the Information Act 2000. So these are a few challenges that I think come in the way, which could be relatively easily solved if the regulators and all of us come together under an SRO and address these issues. That's one. I think also with regulation around digital marketplaces and lender apps, I think that the opportunity for genuine digital lenders with an NBFC license, etc., becomes more and more. There is a larger opportunity for them to play a bigger role, because you're doing away with with spurious lenders and like Madhu said, usurious rates, etc. So that for relatively smaller digital lenders, the growth curve could be significantly improved. Should some of these elements be taken care of? You're on mute, Prasad.
Prasad, you're on mute.
So sorry about that. Yeah, sorry. So Madhusudan, so your views on what's the next big thing that we need to look out for, and how do we make sure that we overcome the challenges to stay ahead?
Yeah, I guess for me, it's coming from the fintech background, and we do everything related to finance. I think financial inclusion, right? So let me put it that very strongly. Financial inclusion across everything. It's not just about lending, So last mile, taking all the services, taking the banking services to the last mile. I think that's what the digital world or the technology can enable it, right? So as I was telling, right? So the credit footprint or the bureau footprint of people is only about like 25%. The credit card penetration is about like 2 or 3% in India. The insurance penetration, I mean, how many people have health insurances? right? So if you look at if you just take off the metros and tier one cities, the health insurance penetration is so low here. The life insurance products or the saving insurances are so low, right? So taking these things from being metro tier one products where a lot of benefits are there from these financial products to taking it to the last mile is something where there's a huge opportunity. The market is pretty large, so why not, I mean, just to kind of give one particular thought about a product, why not have a medical insurance with a premium as low as like 100 rupees per month and then cover not more than 10 or 15,000 rupees, because a particular guy in a tier 3 or a rural area going to an hospital, the charges what they are looking at is about like 10, 15,000, 20,000 rupees cover. Unlike what we go to our metro hospitals and then spend about lakhs together for a simple operation or a procedure, what we have to do it, right? So why not curtail or build products with a low premium products, which is affordable to a lot of the mass markets. And then even the cover can be kind of cut, set as it is required for such specific pin codes or cities itself, right? So financial inclusion, taking the banking services and products from metro tier one cities to rest of India is the larger opportunity. The mass is huge. The people are, I mean, it's the emerging middle class what is coming out of from these cities, and they would be looking for such products. And digital or technology is going to enable to kind of get these products to those people. I think that's where the opportunity largely lies, according to me. Yeah.
Great. So I think that covers the topics for today's panel. I'd like to thank both Nirav and Madhusudan for their insightful conversation. It was great having you here. We thank you for your time. And I think with our fintech community now scaling up, we're keen on going to deeper insights into what we've been doing. So we'd love to have you on our platform in the future, one-on-one, probably try and understand this more in detail, right? Each of your perspectives, especially, the regulatory perspective. So, but before I do wrap up, if there are any, parting thoughts that either of you have, we'd love to hear from you before we close this down. So I'll leave it to Nirav first for his, wrap up thoughts, and then we'll come to Madhus.
Prasad, thank you for conducting this so well and having us on the panel. I just think, I echo, the thoughts that we've had throughout this session, that I think there is a great opportunity for financial inclusion should we streamline certain processes, whether it's credit or other financial products. I think that's a humongous opportunity. And I don't think it's that big a challenge to surmount. I mean, we've reached so far, in terms of getting to a semi-digital era. I think it's time that we go the full hog and get it done. Also, I think RBI is a phenomenal body. I don't think they overregulate, and I think they have done a phenomenal job in helping fintechs in India grow. And I think that full credit goes to the RBI for that. So I think we live in a very exciting era. I think the next 10 years would be phenomenal for the fintech industry in India, and thereby help the economy, to a great extent. So that's my 2 bits. Thank you.
Great. Thanks for your time, Nirav, and thanks for the wrap up. Madhusudan, we'd like to hear your parting thoughts.
I guess thanks for the opportunity, right? So it's been well conducted. And with all what we do, I think media also plays a larger part here, because every messaging, and it has the right messaging that has to kind of go out to what we try to intend to do, be it be financial inclusion or the individual company like us doing a last mile lending, last mile lending, whatsoever it is. I think it's a larger place also with the media, and to take such messaging, take such thoughts, and educate the consumer, and that's going to make the definitely going to act as a catalyst to this entire transformation towards digitization, what we are kind of now going through or evolving to. I think that's the thoughts. And again, thanks for inviting us. And there was some great thoughts which I could hear from Nirav and even the other session what I partly attended. So thanks on overall things. Yeah.
Sure. Thanks. And before I let you go, just 5-word or a 10-word answer on, because it's going to impact fintech and digital business as we go ahead. What are your thoughts on cryptocurrency and what we are hearing about it being banned? So just quick, short answers from the both of you.
Honestly, I don't understand it. So I'm probably not the best person to answer. I just fundamentally think that, for a country like India, one needs to be cautious about a product like crypto. That being said, if it's used for the right application, and if it's used in a closed loop platform, I think there's great opportunity.
Great. Madhus?
Yeah, I guess I think what we are lacking as of now is the education. So these are certain products which are beyond mutual funds or SIP-based products or investing in equities, investing in shares and whatnot, right? So it's kind of goes to an investment management activity, right? So it's a little beyond that. So with that thing, I would say that it's probably something that it's in a it's in a stage where the regulators, the consumers, and the general population is trying to understand what exactly is this product and what its effects are. So we are in a very, very nascent phase of trying to even regulate and then offer such products in the Indian market. So it's going to be probably taking time for everyone to come on a same thought process and then see whether this can be operated in India or not. Yeah.
Great. So thanks both of you for your time. Great, lively, insightful discussion. And like I said, we'd love to see you again on one of our BW platforms again very soon. And we hope to keep in touch with you. Thank you very much, both panelists.
Thank you. Look forward to it.
Bye-bye.
Bye.
Thank you. Bye-bye.
Thank you so much, gentlemen. So that was the session. And with this, we'll move on to the next panel discussion. Latest disruption and innovation in fintech world. The moderator for the session, Dr. Anurag Batra, Chairman and Editor-in-Chief, BW Businessworld and Exchange for Media Group. Joining him is the panel, Mr. Suhail Samir, President, Bharat Pay, Mr. Bala Parthasarathy, Money Tap, Mr. Tushar Agrawal, Founder and CEO, Fin, and Mr. Madhusudan R, CEO, Gap. So that's the panel for you, ladies and gentlemen, and I'll hand it over to Dr. Batra.
Thank you so much, Ravin. What is very important is, when I was younger, my mom told me, health is wealth and time is money. So we're running on time, and this is a fintech festival. We have 3 leading players in the fintech domain here. So, and our panel is all about innovation. What is the innovation each of these fintech pioneers are doing in their sectors, and what is making impact. So, all 3 companies and founders are well known, so I don't have to give you their background, but let me first ask each one of them about, what is the innovation they do as they're in play, because fintech is such a dynamic domain. Consumer preferences change all the time, consumer behavior changes, and also competition keeps innovating. So you got to stay ahead. So let me start by bringing in Samir Suhail from Bharat Pay to tell us what is the kind of innovation he and Bharat Pay are doing to stay ahead of the competition.
Super. Thanks, Anurag. I think we are a very simple payments company, which very early realized that there is no money to be made in payments, right? So, and that's where the business of lending came about. I think there are 2 areas we feel proud of what we've innovated, right? One is enabling payments for free. I think some of you may know we were the first company which actually made QR payments free, even before the government had made it free. And our simple belief was, when I transfer money to, let's say, Anurag, to you, I don't pay anything, you don't pay anything. But when I am transferring the same money in the same mode to a merchant, why is merchant paying, right? So, and that's where we said, let's start with QR payments for free. I think as we scale, we've sort of replicated the same model on a POS machine or a credit card, debit card acceptance machine, where our core belief is that Indian merchants are not going digital, not because they don't want to, but also because why should a retailer with a 10% margin pay 1 to 2% to accept a digital payment where he has the option of accepting cash, which is widely accepted in the country, right? Therefore, our innovation first happens at the payment side, where we are bringing more and more payments areas under our sort of purview and enabling merchants to accept payments at free. I think the second area where we do a lot of innovation, because kahi to paisa banana hai, is on the lending side, where we typically lend to people who don't get access to typical credit because they don't have a GST. They sometimes don't file income tax returns or have very thin income tax returns, have never taken formal credit, and therefore they don't have a CIBIL score or a bureau score, and therefore are underwritable as a bank would call them. So the sort of innovation which comes in there is how can we underwrite those guys through the use of alternate data, and I'm happy to talk more about that at a later stage. But how do you give loan to a guy who does not get access to loan from someone else, while also managing collections and not making that a loan delinquent, right? So I think these are the two areas we focus a lot on, and I'll sort of leave it at that at this moment.
Thank you, Zamir, for keeping it brief and specific. You rightly said that fintech is an evolving domain. You may enter through one door, but you may want to create two more doors to be able to exit and reach your destination. So clearly, as you rightly said, that charging merchants no money got you adoption, and that was a disruption at that time. That was an innovation at that time. But you need to keep evolving as the landscape and consumers evolve, and as their needs evolve, and as other innovative entrepreneurial and companies bring products, services, and business models which may be better than yours, at least at that given point of time. That's the beauty. It keeps you on toes. Let me now bring in Mr. Bala Parthasarthi. He's the founder and CEO of MoneyTap. Bala, my roommate in business school was called Bala, so if you may permit me, I will call you Bala. I'm sure everyone calls you Bala.
Everybody calls me Bala.
Yeah. So Bala, again, we'd like to know from you what is the kind of disruption and innovation you and your company are doing, and if it is okay, you may also want to tell us which are the other innovation and disruption you see in fintech, not necessarily from your own company. They may be another subsector or a specific domain that they may be addressing.
Sure. Thanks, Dr. Anurag. So let me answer the question by just giving a 30-second history, because I think we're all a products of our own past. So I've been an entrepreneur all my life, and about 20 years ago, I started a company called Snapfish in the Silicon Valley. And the idea of that company was that at the time, digital photos were very new, and Kodak was the giant. But we believed that by approaching with a digital first approach at that time, and starting very fresh, we can take on an incumbent like Kodak. And Kodak, you must remember, 20 years ago was like the Reliance Jio of India, right? To take on Kodak would be like an absurd thing for a startup to say. But that's kind of what we did. Long story short, obviously we went through our own challenges, but then, Kodak is, not the company it was, because they sort of missed the boat on the entire revolution. With Snapfish, we ended up, fairly successful. The company is still around about 150 million users, and the business generated over $1 billion of revenue. But the lesson I learned from that is that sometimes you have to come in and look at things very fresh. Fortunately, I was able to do it again with Aadhaar. I was a part of Mr. Nandan Nilekani's early team. And this was like before Aadhaar was anything. Dr. Manmohan Singh had just created this project and appointed Mr. Nilekani as the minister of Aadhaar. And it was the apartment, we literally rented an apartment and said, we would give Aadhaar to everybody. And everybody thought it was kind of a joke, and there'll be one more Sarkari project that will never go anywhere. And we all know what happened with Aadhaar and UPI, and the wave of innovation it unleashed, and the number of amazing entrepreneurs it unleashed. People on this panel, Bharat Pay and Ashwin, we're all products of that kind of a vision. And this was obviously the vision of Dr. Manmohan Singh and Mr. Nandan, and I was just lucky to be And one takeaway was for me was to look for such disruptions. I started a fund called Prime Ventures. Prime is a fairly large seed fund, and life was pretty good. But when I started more and more looking at fintech, I thought that the banking industry needs to be disrupted, and the way the disruption is going to come not by sort of tweaking at the edges. So you need to come and think completely clean slate, and start from scratch. Just like in some ways what HDFC Bank has done, that'll be my role model in the early 90s to come and just reinvent banking at that time. And I think the banking industry of India, in my opinion, is ripe for another disruption. Obviously, this time with a digital first approach. There's not going to be one company that is going to be successful here. There are going to be like 100, right? Because the scope of innovation here is almost breathtaking. You're talking about, nearly 1.5 billion consumers, and all of whom, if not today, tomorrow, are going to be consuming everything digitally, right? This is kind of where the world is going, right? In 5 years from now, there is no doubt that everybody will have a smartphone, and everybody will be consuming everything, whether it's merchants, consumers, etc., on the phone. So this is sort of the belief with which we started MoneyTap. However, you can have a grand dream, but like every entrepreneur on this panel will tell you, you need to solve one problem and one problem well, right? So because you can't like get to the dream on like day zero. And our answer was to first identify who the customer was. And our consumer was sort of the middle class customer, the aspiring middle class consumer. That was our focus on the customer, not the sort of the super prime, the rich, not the subprime, not the blue collar, but the middle class customer. And we spent about, I personally talked to about 1,000 customers. I went to malls, I went, stood outside bus stops and literally interviewed people and tried to get a sense of, I had a broad idea of what the product would be. But the honing happened. It took us like a year to launch the product, but the innovation was a credit line. Our product was an app-based credit line. And let me tell you what the product is. It's basically an app that you can download, and in a few minutes, you will be eligible or not eligible. But if you're eligible, you'll get a line of credit. And the idea was that you don't need a loan right now. You might never need a loan. But once you get approved, the money is there in your pocket on your phone. And in the middle of the night, you have an emergency. You want to borrow 10,000 rupees. You want to borrow 1 lakh. You want to borrow 3,000 rupees. You just press a button and the money shows up either as a piece of plastic. We also give a credit card with you, so you can either swipe on the card or you can take it as a cash loan. You can use UPI, however you want to take the money out, and of course you pay using an EMI format back. So this was sort of the core of the innovation, and it kind of mimicked what the user is actually doing. So when you actually needed the money, you would go and ask your uncle or you'd go and ask your friend, and you would sort of rotate, right? This is sort of our behavior of what we did. What we do normally, and we just decided to sort of mimic it on the phone, and that was sort of the innovation that we did. And of course, now we have a suite of products and buy now, pay later, a lot of products that we launched. But that was sort of the innovation that sparked our journey. To answer your last question, Dr. Anurag, in terms of what other areas are ripe for innovation, so obviously payment is a great area, and there are payments on the consumer side, there are payments on the merchant side. There's a lot of action going on there, and there's been a great source of innovation and companies for the last few years. Credit and lending, obviously, as you heard the previous panel, in this panel, there's a whole slew of companies doing that. And obviously things like insurance and wealth are also being approached. And essentially, if you look at a bank and what a bank does, these are the functions that a bank does, right? So savings and deposits, people are looking at it. So if you look at what a bank does, it does savings, it does deposits, it does credit cards, right? It gives you loans. And this is what most of us use the bank for, and occasionally you do Forex or something like that, right? And these functions of a bank are what I believe, just like I said in the beginning, what the next generation HDFC Bank would do. So there'll be multiple formats of this for multiple targets, for merchants, for consumers, et cetera, et cetera. But many of us on this panel and many of us in innovating in this space will be taking on these sort of next generation bank kind of businesses and sort of piecemealing it. That's kind of in a nutshell what I believe in.
Fantastic. And one of the big players, the pioneers you talked about, innovation can also happen through policy. innovation can also happen at the government level. Sometimes we don't give the government the credit for innovation and disruption. But look at Aadhaar. You talked about Aadhaar.
Absolutely.
Similarly, if you look at the, NPCI, I mean, that's an innovation of a scale, and in some ways enabled all of us, at least created a, habit amongst consumers in, seamlessly integrated payments. And of course, it has scale. So sometimes policy changes and government's will to make innovation also kind of creates more innovation. And we'll come to that. But let me bring in Tushar at this point, and before I bring in Madhusudan, Tushar, we'd love to know from you, what is the innovation you and your company are doing, and what can we expect from you in the near future? I don't expect you to give me your new product, but at least some, peek into it, if I may use the word.
Sure, and thanks for having me, Dr. Anurag, and welcomes fellow panelists. Look, so I'll give you a genesis of how we got started, which has some parallels to what we do, and I'll also perhaps give you a sense of what we're gonna drift towards in the future. So my journey started on Wall Street in New York. I spent a number of years working with investment banks like Goldman Sachs and Lehman Brothers, or what used to be Lehman Brothers, and also investing with General Atlantic on Wall Street. And I moved back to India in 2016, actually 12. And what I realized was it took me about a year and a half to get a credit card. And what amazed me was that even though maybe I had about 15 or 20 credit card offers in a mail coming to myself every week, literally take a lot of time to kind of convince the bank, because they saw me as new to credit. Although I grew up in India, I spent my childhood here, but for some reason the bank saw me as new to credit, and I felt that there was certainly some tweaking which had to be done in terms of credit models. And if someone like myself was not eligible or accessible to credit, what would happen to the rest of the country as well? Second, I would say outside perspective was I felt banking to be a little bit of a rich man's club. I felt the way the offers were being made, the languages, which was largely English. I felt that maybe it was not sort of geared towards really the sort of middle of India where we used to all hear about financial inclusion and maybe accessibility to finance. That was not being addressed. And the third piece we saw was that maybe the way the banks and financial institutions were offering credit solutions to existing customers did not fit the need for how customers actually avail credit. For example, if I was able to get a credit card, and if I went to, let's say, a tier 2 city and wanted to buy groceries off the road, chances are the merchant would accept a Paytm or cash, but not really a credit card. Similarly, if I had a personal loan of 10 lakh rupees in my account, but I needed to take out 1,000 rupees to pay for a plane ticket, chances are that I would not be very happy about paying interest on the unutilized funds in my account. So to that end, what we came out of the product was a credit line card, which is similar to what Bala sort of described as well, which is we offer a credit line solution to customers. And the range of credit we offer is all the way from new to credit to super prime. And the rates and the way we assess credit is different based on the information and the demographical information we have on each borrower. So it's not one size fits all. It's a very customized solution to a host of consumers we lend to, which is now nationwide. And that really is what we believe is a very compelling product for our customers across the country. Look, to answer your question on innovation in the future, look, I think fintech, as you know, is a sort of broad term. There's innovation happening across multiple levels in insurance, in payments, in AI, in robotics, blockchain, and a host of features. One kind of one answer to answer your question in terms of what the future will look like. We think that the banks will no longer look the way they are at the moment. Very similar to how telco companies became utility providers to some extent, where currently you use WhatsApp for communication, or maybe you no longer buy a foreign international SIM when people are traveling. A little bit of how that will really play out, at least in the credit domain, in terms of how banks and financial institutions look like in the future. I'll pause here. I'll let other panelists chime in as well. And again, thanks for having us on this panel.
Thank you, sir. It's a star credit panel. I've had the good pleasure knowing Samir for a couple of years, and didn't take his guidance when we were launching this. But I'm happy to meet Bala and Tushar, you, and now let me bring in Madhusudan R, who's the CEO of YAP. And Madhusudan, your comments on what is the innovation YAP is doing and what can we see in the near future. You'll have to unmute yourself, Madhusudan, as the finance minister tries to unmute the economy.
That had to happen.
You have an easy task of unmuting.
There's no panel without somebody not unmuting. Yeah, thanks, Dr. Batra, for having me on the show. So we are a 5-year-old business. When we started out, I used to run, my co-founder and I were colleagues in Visa. Back in the day, the problems that we saw, and part of the reason why we started the company itself was that we saw a wave of companies that came in and wanted to do payments, help businesses go out and make their sort of money flow more efficient. But there was a constant struggle to sort of push a square through a peg in terms of how they were trying to work with banks, right? So banks inherently were built in a model where they were always inward looking. How do I service my customer, my branch, my internet ecosystem, and so on and so forth. So whenever a third party went to a bank asking, how can I take your product and offer it through my storefronts, whether it's digital or offline, there was no product that existed, right? But thanks to our role at Visa, we kind of had a 360-degree view of what's happening, not just in India but globally. What are the trends that were sort of evolving? We realized the need for this whole new sort of payment stacks to get built, so that on one side you have banks that are using it, so as product providers and product manufacturers. So you have all the control functions the bank that the bank would sort of insist when they are running it. But on the other side, businesses like Bala's or what Tushar is sort of running, really see how we can simplify life for them as a company that is solving a specific problem, right? So we are this layer that sits between banks and businesses, and sort of orchestrate some of the product capabilities that are there in financial services, right? And and the model orientation that we have is that in the 2000s you had a massive push from regulators for opening bank branches. Every bank, every public sector bank, or every bank for that matter, was tasked with targets in terms of how many branches they would open, how many of them were in rural, how many were in urban, and licenses
they were
were given
controlled,
out.
and they were controlled. So it was not
controlled.
like you decided to open a branch tomorrow.
Absolutely.
You could open. They were all controlled.
The next wave of banks, which probably around late 2008, after the global financial crisis, there was a lot of impetus around what was called as an alternate channel, which is nothing but outside of my bank branch, how do I service a customer? Which is when private banks really took off. You had the likes of HDFC and ICICI really sort of going after volume, and you saw that shift of deposit, sort of mobilization moving from public banks to actually the private sector banks. Right? And the last decade has been a golden period as far as some of these private sort of banks are concerned, and their sort of market position sort of talks to that. Today we are in a world where we are in the third wave of sort of banking, getting out and sort of attracting customers, which is around brands becoming the new storefronts, right? So you are using Apple as a phone, but Apple Pay as a feature could you could add any of your credit cards into that, and you can sort of tap and pay. No new card required, nothing you need to do. The experience get delivered by Apple as a as a brand which you trust, right? So therefore you will have these new windows of, or rather branches that will come up where sachet products will get taken over. A first sort of rollout of that is what UPI did, right? Where new cohorts of companies that came in and powered up the whole distribution. You had Google Pay, which had no customer base on payments in India, suddenly went to like 100 million users in a matter of a couple of years, right? However, if you look at the way the platform was structured, the money was still with the bank. You're not transferring money into Google. It just facilitated a smoother way for customers to sort of operate. And you had like both the public good infrastructure that got built on India Stack and the UPI rails, and the private and the venture capitals that are actually powering up the whole distribution. You had that perfect sort of recipe for sort of hyper growth, and we've seen how UPI has sort of evolved over the last few years, right? Much like how UPI did with payments, we are at a point in time where every aspect of financial services will actually go through this transformation in terms of being distributed through third-party sort of storefronts, right? And we are that enabling infrastructure that will facilitate that. So therefore, everybody who's hearing probably this is a customer of ours. Every fintech idea, and I call it as a fintech idea, not as a business, because interestingly, India is a market where we use the word disruption in a big way across the panel. For every disruption that is there is also a disruptor who is out there, right? Some business is going.
I was going to ask, so whose lunch are we eating? Of course,
Yeah.
in some sectors, we know that it's lunchtime also. So,
That's right.
hence the analogy. But we know that, traditional banks did a lot of things that all of you on the panel are doing. They made fat margins on it. Now you started to do some of those things totally as a service, as a free, and then your business model kind of makes money from other things. So clearly you're eating somebody's lunch, whether it's traditional banks. And the bigger question I'd like to ask you is, while you will do innovation, because that's where you were born, banks may be able to do acquire and do innovation.
Right.
They may be able to partner, invest, and create innovation. And so, that's a question I want to ask all of you. And, as I talked about NPCI, now some of the things that all of you are doing, NPCI's stated objective is something else.
Yeah.
But, sometimes there are people in the governments who see private players making money and then they want to get into that also. So I want to ask you these, whose lunch are we eating and who do you see as competition? Traditional banks, do you see them innovating? So do answer.
I'll probably take a stab at it, maybe others can sort of chime in. So I think the way we are looking at this is that, technology is a great leveler, right? So what it has done is, all of the fintech, all new consumer internet stories in India, it is sort of addressing the first 100 million users, right? Which is people in top 10, top 20 cities. But if you really look at what Jio had done, what Telco has gone through over the last 3-4 years, you have people beyond the top 100 million, maybe the next 200, 300 million people consuming the same digital content that you and I are doing, right? They are probably subscribing to Hotstar. They're watching, movies on Netflix. The rickshawala who doesn't have a place to, stay, actually, watches a movie every night. Maybe you and I may not have that time to sort of do it, right? So therefore, that technology playing a leveling role has sort of led to businesses that are serving these segments of customers, right? Like if you imagine, credit, for instance, all of my co-panelists who are, sort of looking at, digital lending, there's a whole host of companies that are actually serving,
no problem.
There's a whole host of companies that are actually serving those businesses today, right? Or the customer journeys today. So all these customers, when they actually have to, when their mobile journeys have moved on, those businesses that are serving them, the traditional NBFCs, the likes of a Bajaj or a TVS, who are likely to get disrupted, are also wanting to sort of move up the value chain, right? So, they are actually sort of talking about how do I offer the same product that Tushar is sort of offering, right? So that's there in India. It's not a, winner takes all market. You will have both these sort of ecosystems and, sort of flourish. And as a platform player, we are kind of betting on both the horses, right? Somebody will get to the finish line when we are sort of there to sort of take the spoils. I'll probably let the others sort of chime in.
Okay, thank you. Yeah, go ahead.
No, so look, I'll jump in next. So look, I don't think it's eating someone's lunch. I think it's expanding the pie. If you think about it, as Madhu said, it's really the top 1%, 10% being serviced. And the reality is that for the large part, for as large as a country as we are, very few people have access to the bureau. Few people really have access to traditional financial services at an affordable cost. So I think the way we see it is more of a collaboration. For a lending business to thrive, we need customers, we also need lenders. For lenders, you need capital, you need deposits. So I think this is a collaboration opportunity for traditional institutions and fintechs like ours to kind of work together and expand the pie. So I think if this was maybe a developed market story, then I would say, look, maybe it's really taking away market share from JP Morgan Chase and giving it to someone like a Revolut, etc. But the way we see it really is really addressing the fundamental sort of gaps in the market and increasing the pie.
Okay, I agree that we are a very underpenetrated country. Just look at the stock market. We are at 4 crores investor. We were at 2 crore investors a year back. That has happened because there are new age fintech companies that have brought in this new 2 crore. Of course, the acceleration in the stock market helps that. But I totally buy the fact that, to be able to make finance accessible to everyone is what the fintech companies are doing, are expanding the pie. But once you grow big, I'm sure you'll eat someone's lunch. And, innovation in business model also matters. Samir, I would like you to focus on that and then bring Bala. I mean, you talked about the fact that we don't make money from, payment processing, but, we make money from lending. Samir, disruption in the payment business models?
Yeah, so I think just before I get to that, I think I agree with what Madhu and Tushar has said. I think people's lunch may change, but I think there is enough to do for everyone in this country, right? If it wasn't the case when we were serving 10% of the market only, there were still like 50, 100 banks, and there were like equal number of NBFCs, right? So as we I come from very close connect to merchants, and both from my FMCG background and now lending to them. I think we talk about anything from a 500 billion to a 700 billion credit need at the merchant level, and as far as I know, sub 100 billion of that is getting serviced, right? So there is, even if you had 50 companies doing exactly what BharatPe were doing, each one of them will be like a $10 billion company, right? So there is enough to do for everyone. I think what we focused on and we realized payments is where money is not getting made, and this is the trend globally, even in countries which have high transaction costs today. If you see the long-term trend, it is all sort of tending towards zero, right? So especially for offline modes, and therefore we said lending, right? And how I am increasing the pie is sort of focusing on a lot of new to credit customers. 60% of my loans actually go to people who've never taken a formal loan, right? So this is a segment which is today not addressed by a bank. What would happen is over the next 2-3 years, as I lend out to this guy 2-3 times, he will build a credit history on the back of sort of working with me. And then this may become a right customer for a bank, right? And that's where sort of partnerships will come in. I enable a bank to lend to a guy which he is reluctant to lend to today. It works for the consumer as well, as his cost of borrowing goes down. It works for me because I sort of get to partner with the bank, and I can do probably 10 other things with the bank on a next set of new to credit customers, right? So at least that's the way we are looking at it. I think we are also looking at a lot of innovation on the collection side, right? So pulling this money from bank and typical financing, even the best performing NBFC like Bajaj has a 20% bounce rate, which is like the EMI was due today, and you tried to pull the EMI from a Natch type system and it didn't work, right? So it doesn't mean default, because the guy will hopefully pay sometime, but 20% of the payments don't come back at the time they are supposed to come, and you only realize this 30 days later, right? Because the EMI is due only 30 days later. And that's where we are saying, if we are in the cash flow, which is where payments come in, I can collect actually at a frequency of a day. I can collect on every transaction if I want. But to make it simple for the merchant, I collect at the end of each day. It makes the life so much simpler for the merchant, because he doesn't have to bother about keeping enough money on that particular due date in his bank account. He can go about his business as usual. He is not paying me from profit, so he doesn't have to necessarily focus so much on discipline on have I paid my vendors and is there still money left. I actually deduct straight from the revenue, right? So I think, and again, and this is again where partnership will come in, right? So NPCI has done a great job for payments. I think looking at our model, NPCI, and we are talking about like enabling credit on UPI, right? And that's where then the full ecosystem of the banks, etc., which today is which today are only carriers of cost on UPI, will suddenly start making money on UPI as well, right? So I think whatever innovations we bring in, or some of the other panelists are bringing in, eventually will sort of be table stakes, if not 2 years down the line, maybe 5 years down the line, and all banks will start doing it, or some banks will say, I don't want to do it, let me partner with Bala or Tushar or Madhusudan and do it with them. And we will like sort of bring in something new to the market, right? So I think as long as India has the population it has, and as long as India has the credit need it has, I think at least to me, banks, NBFCs, and the fintech players will always sort of coexist. What they do will change every 2-3 years.
Fantastic. Samir, let me bring in Bala. Bala, your perspective on the constant need for innovation and who's your competition? How do you define who you're impacting, because it's a moving target?
Sure. So let me not repeat the points that the others have made. Broadly agree. It's not at this point yet, it's not a zero-sum game. I don't think any of us are at anywhere close to the scale where, we're keeping, the chairman of HDFC up at night, right? And I think we're not there yet at this point. But let me touch on a couple of points that made, and maybe they take a little contra view to what some other panelists are taking. So, I've been at small companies, large companies. I've been in the government for 2 years, right? I literally work with, the current chairman of TRI, worked with Nandan, and I worked with a number of incredible bureaucrats. My view of government before joining the government was a bunch of babus who don't do anything, and they're just, lazy and corrupt. And I had all kinds of things, and everything was, at least whatever I saw, I'm sure I saw only a small fraction of it, were like just like amazing. Because I've never seen more hardworking people than those guys I've worked with. They're far more hardworking than any entrepreneur I've seen, who are making nothing, right? They're just making no salary. As far as I could tell, they were not making any cuts on the side. I mean, they were just genuinely hardworking people. So one of the things I think I've learned is that I have a deep appreciation for how regulators and how regulators and the government part of it works on their worldview. This is a very different view. But having said that, so the point where I am least worried about banks out innovating. When we started the company, everybody said the same thing. HDFC can do what you do. They can hire a team. They can, obviously they have, so much money that, no matter what venture funding anybody gets, right? It's trivial for them to go hire a team of like 500 engineers. But they cannot do what what Tushar or Madhu or Samir is doing. No way, right? And not only people in this panel, not any of the entrepreneurs are doing. Not because they don't know what to do. They definitely know what to do. In fact, our idea of MoneyTap was a co-created product with RBL Bank, right? And the bankers I worked with at RBL are one of the most innovative, creative people that I know. And this was a product which we co-created 4 years ago, and it's still like a stable, highly fast-growing product even now. So not to take away what they can and cannot do, but they just don't have the culture, right? So I think companies are about culture. The government has a particular culture. They bring a certain point of view, and I'll come back to the regulator in a second. The banks have a particular culture. Their view of world is branches, opening branches, throwing more people at the problem, etc. There is a market for it. They've done obviously extremely well. They have a license. But I don't know if that is the future like 5 years later, right? And that is our belief. Our belief is that 5 years later, there are people who will be playing in this space. Now, don't get me wrong, we still need to work with regulators, right? So I don't think anybody in the fintech ecosystem can get around the regulators. That is a US kind of a thing, right? Where Airbnb goes and sort of breaks all the rules, and I'll open up and challenge all the local rules. I'll challenge the mayor and I'll challenge everybody. It's a very American kind of view. In India, definitely in financial services, there is no way you're going to be running a successful play if you don't work with RBI or SEBI or the insurance regulators, if you're playing in that space. Okay, so one of the core competencies that I'm sure everybody on this panel has, and all the entrepreneurs who are listening to this, you need to build a core competency of working with the regulator. Right? It is a essential part. Luckily, the regulators are pretty decent, like pretty savvy. They're very accessible. You can go and have a chat with them. You can go sit with RBI and talk to them. Right? How much you'll be able to influence is a different story, but at least you can talk to them. NPCI is a great example, like you said. So I think, but I think it's a kind of a journey, and I do think when you get to some scale, the regulators want to regulate you, and that is okay, because I think financial businesses, as we have seen even in the US or in every advanced market, right? And when the going is good, it's all great. But when the going goes down, right, you can take the entire system down. You can take the country down, right? If tomorrow if UPI stops, everybody, the country will stop, right? So you cannot risk like the country, and hence regulation. So anyway, my point is this: banks innovation, I'm less worried about. I think they're smart people, but they have their own world, they have their own problems to solve. They don't think like a startup, they can't move as fast as a startup, for sure, and that's why we exist in the first place. And if we can't out innovate a bank, I don't think any of us should be in this business, honestly. You should not be a startup, you can't run faster than a bank. As far as regulators concerned, I think it's a different story. There, I think you need to figure out how to work with them, and you have to work with them. I think sort of going against them might work in a very short term. You can like cut corners and experiment. At the experimental level, that thing are okay. But if you want scale, at least our experience has been that it's much better to work with them, and you have to learn how to do that. That's kind of my
Fantastic, Bala, for bringing that perspective. I want to ask you closing comments, and I want to ask you a specific question in that. The specific question is, if you had to predict one innovation / disruption that will happen in the fintech landscape, what would that be? If we can see it, then it's possibly not disruption. If we believe it, then it's clearly not innovation. So give us something, as they say, if it sounds normal, clearly you're not innovative enough. So give us a peek into the future in terms of what are we likely to see, a prediction, a trend. Let me start with Tushar first, go to Madhusudan, go to Samir, and then come to you, Bala.
Look, the bank of the future will no longer be the bank we imagine. It could be a phone, it could be a car, it could be the local store where you buy groceries from. And I'll pause here. So if we have to be all imaginative of how the bank will look like.
Okay, fantastic. Clearly, Tushar believes that the physical concept of a bank branch will not exist, and that's not surprising. And of course, the phone has become the bank. These two are very clear. But he was saying the local Kiryana store, the local grocery store, the neighborhood store could be your next bank branch. It will develop, or your car. Once we live in connected cars, self-driving cars, the car is your office. It's everything. So between the car and mobile, I think both the telcos and the auto companies post-COVID have much more mojo than they used to have before COVID. And in the midst of COVID, April was a month when Maruti saw a zero sale month for the first time since zero sale in April for Maruti. So clearly, you can't predict the future by looking at the present, but you're clearly people who are creating the future. Madhusudan, your
I think
prediction for the future.
One side point that I want to make, and it's important in the way the world perceives us, right? So today, India's, at least on the payment side, we are the first world country, right? And the US typically is looking like a third world country as far as at least payments is concerned, right? So we can brag that quite a bit. So therefore, there is
I'm sure next time the finance minister or the prime minister they'll talk about that.
Yeah, in fact,
and it's true in the way we've evolved. We use the word leapfrogging. I think in the fintech domain, we've clearly leapfrogged.
Absolutely. In fact, we as a business, we operate in about 7 or 8 markets. In many of the markets, there's a lot of respect for the way India sort of built this whole business and what transformation has gone through, not just in the private enterprise, but it has happened across all levels, right? There is a public good infrastructure that got built 10 years ago, which is fueling a lot of this innovation that that is that is happening, like the way some of the co-panelists sort of mentioned. So therefore, it is upon us as a country and as an ecosystem broadly to actually move the world. I mean, we are not the big brother in terms of the fintech action. We may not have the depth yet. Just to sort of give some numbers, US credit card market is like sees $2.7 trillion of money flow annualized, right? We are at $100 billion. So we are significant sort of headroom for growth in the way, as a market we can grow as we sort of try to catch up with, in the broader sort of economy and what GDP growths that we're going to see. So therefore, that cannot be done just by the banks. A lot of these fintechs will evolve into multi-billion-dollar businesses, hopefully in the next 5-10 years. So I see a world where, at least if I have to crystal gaze 5 years out, we'll probably have, like the way all of us are proud about what HDFC as a bank and a franchise has got built over the last 20 years. We may not take 20 years to build such large fintechs. It probably will happen in 4 or 5 years time. Okay? So that's what I would crystal gaze.
Okay, your view, Samir, before we bring Bala for the final word.
Yeah, I think Tushar stole my thunder, so I'm on the same page. I don't think banks as we know it will not cease to exist. I think they will definitely become faceless and they will definitely become paperless, right? So whether a fintechs lead those innovation, whether banks themselves sort of over a period of time sort of innovate, I think a mix of both will happen, and there will be like enough banks in the country or pseudo banks in the country or neo banks in the country which will sort of coexist and make the customer experience much better than what it is today, right? So but to me that's sort of the biggest change I can see, and maybe it's not that innovative because if two people on the panel have already said it, so I think it's the writing on the wall.
Clearly then there is something more innovative coming out, because what you can see is already happening, in some way it's happening or about to happen, or you see early signs. True innovation is something that, is something that may be incremental, but the impact is huge, Sometimes the innovation is very incremental. It's a very simple tweak, but the impact is huge, and disruption, of course, we tend to use loosely. Disruption is clearly, what Google did, what, some of the startups continue to do in various sectors, what Uber did when it started. I can give you examples from Indian context, but Bala, your final view on something that may seem like crazy. They may say Bala has had a couple of beers before he came to the panel discussion, and next time, please do not allow him to come after drinking beers. But that may come true sooner than Bala saying. The only fallacy, maybe you may say 6 months and it may happen in 2 months. So what could that be?
All right. So if you're framing the question in terms of beers,
you could choose your drink. That, I don't want to restrict you to that. So really.
So I think we have talked a lot about a lot of things. That one thing that we have not talked about is crypto and
blockchain. You mean blockchain? The impact of blockchain technology on payments.
Blockchain on everything. So usually these kind of technologies go through 2 or 3 iterations, and first time they fail, second time they fail, and then they catch fire. So my thing of what we are just something coming from the off left field, like just like iPhone came, we're all happy with our Blackberries and we thought that was very cool, and then suddenly you throw it away 1 year later and you're like, you look at this glass screen, and since then life has changed for everybody. So I think this has got that ability to change because it's cross border. It is a very different animal and it's not easily regulatable, right? It's not controllable, and especially in a country like ours, we adopt technology so fast. If it's useful, we adopt it, right?
Look at the WhatsApp numbers in India.
We don't care if it's made in India, made in China, made in America, doesn't matter. So if it's useful, if its technology is available, I'll use it. And it's very hard to control it, right? It's and this is one of those things particularly hard to control, and hence it can particularly sort of catch fire, right? We don't have the great firewall of China. We don't have easy ways to stop something like this. So obviously, I don't know exactly what form it will take, exactly what it will be, but this is one of those things I would be watching out. And if I'm an entrepreneur, I will be, if I'm starting from scratch entrepreneur, this is something I would be sort of noodling over and not so much be disappointed in the fact that, yes, Bitcoin crashed last time, government has banned it, all of that stuff, that's all true. But if you want like completely off the chart, like something that's going to change our lives, that could be it.
Absolutely. I think cryptocurrency and fintech, kind of coming together, and, blockchain applications are across the sectors, across industries, and brings transparency. You cannot, it brings more, integrity to it. It's just that it takes away control from central banks. It takes away control from lots of, so that both from a checks and balances standpoint and also from a psychological standpoint needs to be seen. But blockchain as a technology, I think the year 2021 will be the year of blockchain. It will become mainstream. And of course, in terms of payments, cryptocurrency and fintech coming together can create a potent combination for innovation and disruption. Thank you so much, Tushar, Madhusudan, Bala, and Sameer. We could go on talking to you about it, but we like to keep to time and hopefully look forward to doing this face-to-face soon, sometime in Bangalore, Delhi, or Bombay. And I hope you join for the inaugural edition of the FinTech Awards that we have tomorrow evening. And, you know, throughout the day today and tomorrow, we have eminent founders who have built companies and are building companies, and entrepreneurs, part of large companies, joining to talk about what is happening in the fintech domain. So please stay tuned in, and I wish you luck in your journey to make an impact on Indian consumers. God bless you. Thank you. Back to you, Raman.
Thank you very much.
Thank you so much, Dr. Batra, and thank you, gentlemen, for giving your valuable time to us. It was indeed a pleasure to listen to the insights that you just shared. With that, it's time we move on to the next set of program that we have for you. The sixth panel discussion is going to be underway. Opportunities for tech organization in fintech ecosystem is what we'll be discussing. The moderator is again Prasad Sharma, Strategic Initiatives, BW Businessworld. And the panelists include Mr. Mandar Agashe, founder, MD, and Vice VC, Sarvatra Technologies. Along with him, we have Mr. Lalit Mehta, co-founder and CEO, Decimal Technologies. So this is going to be an interesting one, and I'll hand it over to Prasad.
Thanks, Praveen. Appreciate you introducing the session. And I'd like to welcome Mandar and Lalit, and I would request them to switch on their videos so that we can get underway. Hi, Lalit. Please, you, Mandar, if I can request you to switch on your video as well. Okay, so while we wait for Mandar to, oh, there he is.
Yeah.
So thank you, gentlemen, for joining us today. I think, as fintech and the entire digital revolution has been coming upon us over the past few years, we've seen that, traditional technologies have started to become obsolete in one sense, but also starting to evolve to the next level in another sense. And there's an entire new set of technologies that's being developed. Earlier in the day, we spoke about India's digital stack and the Jan Trinity and how it has brought, great opportunities abound, not just for the consumer, but also for the platforms and tech service providers. And for our tech innovators here in India, given our place and position in the world, the evolving digital ecosystem gives great opportunities globally as well. So in that context, I welcome both of you and our audience. To kick off, if I could request the both of you, I'll just go by the order I can see you in on the screen to just give a quick introduction of yourselves to the audience and give us a brief overview of what you think about the emerging tech landscape in the backdrop of the digital revolution as a whole and the fintech revolution specifically. So we'll kick this off with Lalit and then we'll move to Mandar.
Thank you, Prasad. So I'm Lalit from Decimal Technologies, and Decimal, a company which has been in existence for almost about 11 years now. And we work in digitization space for customer onboarding for various banks and NBFCs. So that's what largely we offer. So it's like distribution of financial products in a digital manner is what we take care of. So coming to how this entire new technology space is shaping up, Prasad, what I think is in the given the topic is about fintechs and fintech ecosystem. One thing that is for sure is that fintechs, as they are kind of coming up, they are going to play a very significant role, and they're already playing a significant role. Some of things which need to change or which need to evolve, I should say, One is that this entire ability of larger financial organizations to play network role, or like play a role in the ecosystem rather than playing or like evolving technology within their organization, is something which has been happening but needs to be far more evolved. By that I mean like creating more of a web network where all the enterprises and fintechs and consumers can interact on a common technology platform is something which is going to be very, very important. Another thing which is going to be important in times to come is, like, I would say that largely depends on regulatory norms, which is like regulations for the cloud for banks. So that is going to be play a significant role. Very clear definition of regulation for adoption of cloud is going to be very important for the entire fintech ecosystem to grow. And in the, like, I just joined a couple of minutes back, and in the previous session, I was hearing about the blockchain and crypto. If you look at the entire problem with more and more people coming on the network is trust deficit. So, when you're working with E2E kind of environment, the trust gets established through negotiations, through talks and all. But when you're having a lot of players and the size of the players is too varied, starting from a company which could be just a couple of people and multi-billion-dollar banks, I think there is a need to establish technologies that enable that trust factor in the entire ecosystem. And blockchain is going to play a very, very important role there. So blockchain will evolve for sure. I think as Bala was talking about that in the previous panel, although it's like, it's the first round of blockchain is pretty much done. Now people are really seeing use cases, and use cases are kind of being commercialized. I think now we should very soon see blockchain playing a very important role. So I think these things, and one more thing which I would want to add is the design paradigm needs to change when banks are designing their technology or digital systems. So design paradigm needs to be again more network oriented, more oriented towards the world outside the bank walls and not just for the bank. So I think these are a couple of things which are expected to evolve in this year, and the fintech ecosystem should definitely be helped by all of these.
Thanks, Lalit. That was insightful to begin with. Mandar, we'd come to you. We'd like to hear a little bit about yourself and also your general thoughts on the emerging opportunities for tech organizations as the digital revolution comes by us with the fintech revolution on its tail. You're on mute, Mandar.
Is that fine now? Okay. Hi, I am Mandar Agashe, founder of Sarvatra Technologies. Sarvatra Technologies is one of the largest switching companies in India. We give different kind of switches to the banks being our primary customers. I call myself the oldest startup because it took us 20 years to reach where we are. And we are one of the few startups who started with servicing banks in rural India and came to urban India. When we found that there are close to 2,000 banks in India, but only 50 odd banks had debit cards. So we created the first debit card hosted platform for banks, where banks could come in and start issuing debit cards. So that was the journey we started. We were one of the first to be given license by NPCI to start issuing RuPay cards. Today we are issuer to 600 banks in India across 27 states and 3 union territories. So we are the largest there. And then we kept on adding more and more switches to our hosted platform. So we started with IMPS, then we started with the UPI. We were the first to go live on AEPS, and starting from the smallest bank, which is in some rural area in India, to the largest bank, ICICI Bank is our customer. Most of the small finance banks use my switch. And today we are one of the largest players in UPI, and we do close to 2 crore transactions per day. And through ICICI Bank and most of our other banks, we power the transactions for Google Pay, WhatsApp Pay, Me Pay, Truecaller Pay, almost all of them. So what I've seen is that some products sometimes are too early in the market, and a situation has to develop before that product becomes extremely useful. Example, it happened during this whole COVID lockdown, where the urban labor shifted to rural, and they did not have any debit cards with them, and they wanted to withdraw cash. Suddenly, there was a huge demand for AEPS transactions. So AEPS, Aadhaar enabled, which was not really comparable compared to IMPS or UPI, suddenly came into front, and the transactions even today are competing with the whole IMPS transactions. So I've seen the entire fintech journey over last 10 years with emerging of each and every new technology, and we are given it to as I said, the smallest banks to the topmost bank, and the customer adoption, the speed of customer adoption, which we have seen is like crazy over last couple of years, right? From demonetization, which was a one big event, to this whole COVID lockdown. I think India has come a completely different level in terms of our standing in the global, where now today I see a lot of global guys coming and studying India as a system. And I see that as the major thing that India has achieved, RBI has achieved, NPC has achieved, and the entire fintech ecosystem has achieved. Thanks.
Great, thanks, Mandar. So I think, I'll actually just pick up from one of the points you were making about being the oldest startup in India. I think a lot of technology companies have grown and developed. I think the view that I take is that, the US invested a lot in technologies in the late 1900s, right? And by the time India started adopting technologies are sufficiently evolved for us to take a leap ahead, right? And therefore we've been ahead of them. And I think from 2010 onwards, with the digital stack and the Jan Trinity, we've been able to leapfrog a lot of others. But our technology companies have obviously been set up over the past couple of decades, some even older, right? How has the leap from being companies that are servicing traditional businesses that are looking to go technology savvy to going to an ecosystem which is almost completely now focused on going digital, right? Even brick and mortar businesses are going click and mortar or brick and click, whatever you might call that. So how has that transition been? How do you see the opportunities there, and what are the challenges? So I'll come back to Lalit, and then we'll take Mandar's view again on that. Lalit, you're on.
Sorry. So if you look at the entire journey, I think Mandar very beautifully described that, how the entire Indian consumer has gone crazy with adoption. Now, I think if you look at the way you said, similarly, every brick and mortar business, even the smaller ones, want to digitize. So looking at this entire opportunity, the one thing that has happened for sure is that until a couple of years back, all consumers of digital technologies, I mean, not consumers, consumers of technologies being provided by technology companies, those who were creating digital systems, the variety was quite limited. We just had a few large banks, those who were kind of trying to do digital, and a few so-called fintechs at that time, those who were trying to do digital. But now, very exciting thing is that today you have PSUs which are going digital. You have very large banks, you have small finance banks, then you have payment banks, fintechs, and beyond that, payment companies, and then you have every retailer, every manufacturer who's wanting to do something digital. A school wants to go digital in terms of fee payments, in terms of automating the entire kind of interaction with the students and all. So now the variety that is available, that is demand, that is existing in the market today, is far more varied. So earlier, if you look at technology companies, had to understand large enterprise ecosystem, come up with solutions that were that were very relevant to those companies, and things were pretty much okay. But now I think one choice that all technology companies need to make is what segment they want to choose. Because once you are trying to do something which is for very smaller customers who are trying to digitize, the conventional thought of digital will not work. Even the thought which you kind of, which we created just about 2 years back when we were digitizing banks for whether it was UPI or kind of onboarding or whatever, those thoughts won't work. I think the paradigm has to be different. The paradigm has to be more kind of value for money, more low cost, quick go to market paradigm, which needs to work for them. And how can we also look at more DIY kind of ways to go digital? So the choice that technology companies, all of us now need to make is that you cannot be covering the whole horizon of demand, which is there for digital. We need to pick the segment that is suitable for us. And every segment, even within banking, the way PSUs would demand stuff and the way large private banks and then small finance bank would demand, it's very different. Unfortunately, the size of opportunity in each of these segments is fairly large. It's kind of, it's unimaginably large is what I would say. There are multiple factors which make it large. So I think the entire paradigm, the way we look at digital, the technology companies need to look at it very differently for each segment, is what I would say.
Great, thanks, Lalit. Mandar, your views on the same?
Yeah. So if I look at my company and how I see we had to evolve from being a banking software company to a fintech company. The journey itself has shown us that how different the organization structure is and how fintechs today have to be ready with those. Example, earlier it was all about having programmers and implementers. Then when we became a debit card issuing company, we had to have a debit card team, debit card design team. Then we had to have the deployment team. When the ATMs came in, the ATM deployments team, the micro ATM deployment team. When IMPS and all other came in, there were different departments where we had to have those apps in place. Then we had to be PCI DSS compliant. Then we had to have a team for fraud risk management. We had to have a team for keeping the uptime. So the customer support is very different when it comes. So today, the challenge for any tech company to become a fintech company, the different level of departments need to be there. You have to have on one side domain experts in not only banking and payments, but also in risk and so many other areas. So what I've seen, or that's a challenge I've seen many startups who have come in this fintech area have able to really understand the pressures of becoming a fintech company and really have scaled. I've seen many small startups which are really doing very well in different areas, and they're preparing themselves quite well. Though there are people who are absolutely not from finance or tech background who are doing most of these fintechs, so but they know that they don't want to reinvent the wheel. They will just collaborate and take whatever is there. And other important part is the regulatory. Earlier you didn't really care, you are just a technology company. Today you have to understand the entire regulatory framework. You have to understand what are chargebacks. You have to understand so many things. It's no longer that simple anymore.
So Mandar, let me pull on that string a little bit, right? So you said that you have to transition from being a traditional technology company. Traditional is a very bad word to use with technology, but you have to be transition from being a traditional technology company to being a fintech provider, right? Did you find opportunity to repurpose your existing products for the new evolving age, or you had to go grounds up into R&D, and the only thing that you could carry forward were your knowledge base and your connections in the industry or your network? So how did that transition happen? To what extent were you able to repurpose your existing products, and how much was it grounds up R&D and rollout?
So for us, it was absolutely ground up R&D. Only thing that we had was understanding of the banking domain. So other than that, we had to learn everything from scratch. And many of my top technologies became outdated overnight. And it was like a complete different experience for all, and few of them took up the challenge and really came up to speed. So I would say that it's like reinventing yourself, and every time a new product came, we had to reinvent ourselves completely. So debit card platform is totally different from a UPI. So when UPI came in, the first time we were one of the first platforms of UPI in India, and it was absolutely new, because earlier it was always only you had to do fund transfer whenever it was IMPS. It was fund transfer from bank A to bank B. Now suddenly you are going to do a fund transfer between your customer is with one bank, the guy you're paying is in one bank, the PSP app is with third bank. So it suddenly changed the entire equation. Earlier, you were dealing with only banks. Suddenly, you had this third-party players like Google Pay and Amazon Pay and different payment companies, Phone Pay, Bharat Pay, which came in, which were absolutely not. I mean, it's nothing to do with banks. So you are dealing with different fintech players. You're dealing with banks. You're again dealing with NPCI, because everything gets routed through NPCI. So with every new product, we had to absolutely, it was like restart all over again. And I'm sure that is the fun of being in fintech.
True. So I'll actually come back to you with a little more on, dealing with these new age players. But, before that, let me get Lalit's thought on the same thing. When you had to, stand up and meet, whether you call it the opportunity or challenge of fintech, how much of repurposing were you able to do? And how much was it going grounds up?
So if you look at, other than knowledge or like experience that we had, what we were able to kind of repurpose, we were able to repurpose a few components for sure. If you typically look at so the model that we changed, so earlier we used to work only for banks, and we kind of, provide technology to banks, and banks would acquire customers on our technology. And some time back, what we started doing was we started aggregating the market and became more like a lending marketplace through a platform called Sarathi. So now the moment we did that, of course, it was kind of turning upside down, or like it was lateral change that we had. So we were able to repurpose a lot of our existing components, which had a very fundamental based design in terms of, if you imagine some of the components that were used for, let's say, KYC, or some of the components that were used for analysis, financial assessment of customers for underwriting. So most of those components could be reused in the kind of new avatar that we acquired some time back. So in our case, we were able to repurpose close to about whatever we have today in the new business line. They are close to about 25 to 30% as repurposed components, and 75% or like 60% we created afresh. So that's how it was for us. And I think what helped us was whatever we built on more like, we created more like a no-code platform first, and we started building stuff on top of that. So that no-code platform approach really helped us in a big way. We were able to kind of pretty much use the same no-code platform in the new business line, in the new fintech kind of environment that we got into. So for us, it was a little easier as compared to Mandar, I would say.
And so before I go back to Mandar, let me ask you that question that that came out from what he was saying. I'm sure you would have had to deal with a lot of these new age players who want your traditional, tech clients, right? Google Pay and Amazon Pay and all the likes. How has the experience been? How are they different from existing clients, both in terms of dealing with them on a day-to-day basis, as well as in terms of innovation?
I think in many ways. The first would be the entire sense of purpose and urgency seems to be far more. The entire energy levels are very, very different in these organizations. We deal with quite a few payment startups. We deal with quite a few providers of these technologies, and with all of them, it's kind of with most of them, with maybe just a few exceptions, the entire energy level and the kind of the bureaucracy levels are kind of far lesser. then the people, those who are playing very significant roles in these companies, are youngsters who would kind of have grip on the complete problem. They would kind of work towards closure rather than kind of, the entire sense of closing and kind of moving on and taking next steps is far more eminent and visible here, which at least we used to feel that it's missing. A typical project that could go on with a large bank for 1 year can pretty much be done in 3 months here. So the speed of execution is much faster. In terms of innovation, I think one thing that was missing, or the thought process in traditional banks or large organizations, was more governed by the structure of the organization, more governed by the departments, systems that organizations had or have. In these fintechs, or in these, not fintechs, I would say all new age organizations, there the entire orientation is more that of the user. So people are more user oriented rather than org structure oriented. So they would not make you kind of, when they go to a user, when they're creating a asset which is to be used by a specific user, they would try to get into the life of that user and make sure that the user experience is something which is really commendable, which is something which is the first hook to the customer. So I think these are certain changes that we see as a difference between new age fintechs and other companies and traditional financial services companies.
Sure, thanks, Lalit. Mandar, how about you? How has your experience been with these new age partners, both in terms of the way they work, innovation, and maybe even challenges that you may have faced different from traditional clients?
Yeah. So when we started with our debit card platform, at that time, I think the entire transactions per second of all banks in India put together was 50 transactions per second, or something like that. And we were, if we could do 2 to 5 transactions per second, you're a fairly good company. When we are talking to these new generation startups or new generation apps, they start with saying, how can we do 200 transactions per second? So it's a complete different scale that you're talking about. Earlier, I would have been happy, like first for 4 or 5 years, we would have been happy to reach something like 1 lakh transactions per day was like a very big thing to do. Today, 1 crore is standard per day. So any new thing you come, it will be in multiples of 1 crore a day. So what we speak also internally, how we have meetings, when we speak internally is also totally different. And when we are interacting with these new generation clients, they expect immediate things and they are fearless. The word is fearless. They want to achieve something, they will achieve. And they are not just rewriting rules for the sake of rewriting, they're rewriting rules because they believe in it. And they want a tech partner who will carry that belief and deliver. So it's not just for large banks, and I'm like, if you take a bank like ICICI Bank, they are also so superbly innovative that today they're as demanding as a new startup. So because they have recruited, or their youngsters have taken over all the key departments who are equally demanding. So it's a completely different world altogether than it was even 5 years ago. It's a totally different world.
Understood. So Mandar, I think a lot of this also comes from the fact that we have evolved so heavily on the digital stack over the last 10 years, right? So when you talk about going from 1 lakh to 1 crore in a matter of, probably the last 3 or 4 years where, we've evolved, it's all been a lot due to the digital stack that we've developed, right? So 2 questions relating to that. One, what are the kind of opportunities has it presented to you, right? Lalit spoke about no-code platforms, right? Something that's come because of the entire stack of APIs, etc., that are already pre-built and ready for use. So it's created a lot of these opportunities. How do you see that opportunity panning out? And second is that as an organization that evolved, from a traditional, again, I'm using that word, a traditional technology company to a fintech, right? How do you see yourself competing with companies that have, because same youngsters that you're talking about, they are the guys also creating new tech platforms and new tech companies. How do you see yourself competing with those people, and how do you see the future for them as well? Because obviously people can coexist, but how do you see the future for such companies?
I was talking to one of the top 5 banks in the US just a month back, and I was having a chat with their tech team through a forum. And that's when I realized, when I told them the kind of solutions we are doing for banks in India, they were shocked only because the infrastructure was ready. NPCI and the entire our stack, whether it's Aadhaar stack or whether it's different form of UPI and other stacks that are available, has made life for Indian fintech so easy that one has to really try to go to some other country to understand how difficult it is for any fintech in those countries to really do anything for their banks. So that's the first thing. The stack is amazing, and whoever was the dream team behind it has thought through the entire thing. It's not just limited to that, and there are lots of things that are going to come which will completely change the paradigm. Example, just a few days back, Reserve Bank of India announced that they are going to have one single point to come as a complaint window for all types of fintechs or banks or any types of payment system. They have asked every fintech company to have 24/7 support. It's the way the government, the RBI, the NPCI, and the Stack think tank, they have been thinking through the entire thing, and they've seen successes. So it's not just also, it is because of the amazing success that we have seen over the last 5 years of digital adoption, that today when you go to a small bhajiwala to buy something also, he will have a QR code. So you're sure of that you will not come back disappointed. So the adoption has been fantastic. What I see is that the pace of change is so fast, and it's going to continue and continue because there's a government push behind this entire thing. I fear these fintech startups may burn out because you can't be running at that speed continuously without, in this last 20 years, we had the opportunity to, have enough stamina, builds enough stamina to have a marathon. So it's a marathon, and it's no longer just 100-meter sprint, So what fintechs have to be ready for as they get more customers, that they will have customer fatigue, they will have innovation fatigue, they will have technology fatigue, and they have to prepare themselves very well for that. And as I think, unless you enjoy going to office every day or going to office online every day, you are not going to stay long. If you just want to build a platform and sell it, then it's a great thing. But if you want to run the platform for many years, you have to prepare yourself in a very different way.
Great insights there, Mandar. Lalit, what about you? What are your thoughts about the opportunities that have come out of this digital stack, and how do you see the competition from these emerging late day fintechs going forward?
The first, I would just want to kind of state that point which Mandar stated, which is about infrastructure being ready is something which is phenomenal for India, and I think that's a great opportunity for all us fintechs. We kind of used to go to Southeast Asian countries before COVID, and I could see that how difficult it was to even come up with any solution that was truly digital, because the infrastructure was just not there. It would be impossible to kind of do anything. So now, because of that infrastructure, the opportunities are huge for us. Even small, the entire, whether it's kind of NPCI or non-new account aggregator framework we are talking about, or OCEN framework we are talking about, if you look at all of those would enable a lot of us to work in a much more standard way, much more accepted way, which is regulated and well accepted. So those protocols will be set. Infrastructure being available will open a lot of opportunities for fintechs, which are already existing, and for existing technology companies. That's about opportunities coming out because of infrastructure being available, regulatory framework being available. in terms of, if you look at actual evolution of the tech stack, I would say the biggest evolution has happened again on the infrastructure side. Although we do have application technologies also which have changed, but if you look at on the infrastructure side, whether it's CI/CD, today whether we talk of kind of serverless computing, look at Kubernetes, Dockers, or whatever. So entire CI/CD stack, cloud, all of that has made stuff so easy. On the infrastructure side, the security or the infrastructure which was needed by anyone to create a world-class or fintech kind of product would have been impossible to deploy. But with this cloud, I think it's like any small company can pretty much offer a similar security what a large bank is offering. So if you look at those new technology areas have emerged, and those emerged areas are opportunities for new companies, if you look at it. So other than application development, these areas have kind of evolved phenomenally. Infrastructure is available, but somebody needs to kind of contextualize these infrastructure that is available. Somebody needs to make sure that we are able to use this infrastructure to the best possible creation of best possible products. Another area which will be kind of very, very important is the entire design. Today, it's I'm talking more on the application side. So application design is something which has been which needs a very different paradigm. So there also companies would have great opportunity. So that's about the opportunity side. In terms of us competing with the fintechs, to some extent, I would agree and I would disagree too. Although with Mandar, that the chances of fatigue setting in are there, but at the same time, the companies are able to scale up fast. Companies are able to show success pretty fast, and companies are able to raise funds pretty fast. So as an organization, the organizations are scaling up along with the opportunity of business. With that scale up, I think the organizations which are able to scale, the organizations are able to keep pace, even though people do get fatigued, but still, I think smaller organizations have figured out the ways to keep up with the pace and still run longer races, is what I would say.
Great, thanks, Lalit. So, I think we've heard some great insights from the both of you, and I think as our fintech initiative, it's a fairly new community that we set up. We're scaling it up. We'd love to see you come back to our platform, maybe have one-on-one conversations where we can talk to an audience about some of these ideas in greater depth. But before we wrap up, if the both of you could just give like a 2-minute roundup of how you see opportunities going forward for tech organizations in the new evolving paradigm, I think our audience would appreciate that a lot. So maybe we can start with Mandar and then wrap up with Lalit.
So I think the opportunities are there in absolutely all fields that you can think of. But in India, especially, lending is one of the strongest opportunity spaces, and that is easier for startups to come in quickly. So I think that is something, and in new generation lending is something one has to look at. There is also different, fintech itself has been divided into now payment tech and regulatory tech and lending tech and so many such things. So I think it's opportunity is there everywhere. So lending and security, I think these two will emerge as the front runners for at least next 6 months. That's 6 months is like 6 years now.
Excellent, Lalit.
Okay, so in terms of business areas, I totally agree. I think lending is a space which is expected to see the entire exponential growth in times to come. But I would also want to talk of technologies that companies which do not classify themselves or do not think of themselves as fintech. What is an opportunity for those technology companies with this entire new fintech ecosystem coming up? So if you look at all the technology companies that were working for banks or financial services companies earlier, I think every single financial services player, whether it's a lender or it's kind of bank or whatever, like play the larger companies are doing, they all of them need to pretty much overhaul a lot of their tech stack, a lot of their application stack to be compatible with what fintech ecosystem demands. So if you look at open banking, if you look at it, open banking is kind of, I think we've just scratched the surface. We've just scratched the surface. If you look at companies like Played, which kind of became so large, uh, there is opportunity for companies in India to become like Played for sure, or just kind of offer technologies to banks to make sure that banks are uh, at at a pace which is expected in this ecosystem now. They have their entire tech stack and application stack, which really kind of yields the result of a network effect that we should be able to see that if fintechs, if Google Pay is growing, now thankfully ICICI could catch up and offer that kind of scale. Now, similarly, more and more banks will have to be upgrade their tech stack, application stack to kind of become and pace up with companies like Google Pay and Phone Pay. And many more Google Pays and Phone Pays, not in payment space, but other spaces, would definitely come up. So I think that's a huge opportunity for companies, which technology companies that work for these financial services. And banks will have no option but to kind of quickly upgrade their tech stack and app stack to catch up. The entire pressure to grow business is immense. All of us know that, that is immense. So now technology needs to play its own role to make sure that we are able to catch up that pace.
Great. So I think before I close this session, just 10-word input from both of you on two things. I think I would have asked the question only around crypto, but since you mentioned open banking, it's one of the areas that I see as a very interesting space, especially from the perspective of credit evaluation and credit analysis. Because as of now, one of our earlier speakers said that we talk, we rely too much on last 3 years returns and, a very, summary CIBIL or an Equifax or a experience score, which, for example, will not tell you about your credit card spending patterns. All it will tell you is how regular you were on paying back your loans and credit cards, but not on what you were spending, and not at all talk about what you do with your debit cards. And, has some very silly inputs, such as the number of credit inquiries you had in 2 years, right? Somebody with a great credit score who may have genuine requirements, gets hurt by that. Just using that as an example, of course. But so how do you see and quick 10, 15, 20 word response on what we can do in terms of opportunities that are coming up in open banking and crypto? Maybe we'll have Lalit go first and then close with Mandar.
So you're so right. So I totally agree. I wasn't part of I didn't hear the previous panel, but what they said was relying on what banks rely today is not the way to kind of go forward for sure. That's not the way which is going to give us space for growth. But so since you said 10 words, I will try to kind of contain it to as short as possible.
No, not really. That was more of a, keeping people, on the hook.
So alternate data and this entire financial analysis moving out of the balance sheet players is something that we should be seeing very soon. So today, the balance sheet player is the one who's kind of analyzing as well, who's doing the entire assessment and is relying on very limited data. So with one of the things which open with this entire account aggregator platform and Open thing, that should help. But entire reliance on consumer behavior on various platforms. Those platforms could be debit cards, could be tomorrow QR codes, or like any payment systems, but that's payment behavior. I'm saying we would have to go beyond the payment behavior as well. I think things will have to go how we kind of, what is our social behavior? What is our behavior on the telecom side? So now we are seeing kind of assessments being done on those data points. That has started to happen, but that is going to become mainstream very soon. And the entire assessment will have to kind of, probably move out of the balance sheet player themselves. So there'll be kind of multiple scores which will be kind of provided by various players, and banks would look at various scores. They might give different weightage to different scores, but the scores will come from multiple data sources rather than coming only from credit bureaus, I would say.
Great. Mandar, your thoughts on the same?
Any new, what you can say, customer app requires a platform play. Example, for this neobanks to work, I think it's a combination of blockchain, crypto, and so many things have to go right for a complete new banking system to evolve. Otherwise, it won't work. How for PSP apps to become successful, which are not banking apps, there was a UPI which was needed. Something similarly for neobankings to work, something like a Vajra, an account aggregator platform. So many of these other things had to fall into place for a neobank to succeed. So I think it is challenging. What next will emerge using cryptocurrency and blockchain? What it is rightly correct for, I'm yet to see.
Great, great. So thank you, Mandar. Thank you, Lalit, for those insights. We appreciate you taking the time, and we hope you'll stick around for some of the other panels. I'm sure you'll get some great insights from the other panelists as well. We also have our FinTech Festival Awards tomorrow, and we hope you guys can join us for that. This year we're obviously online, but we will be back to physical events very soon, and I hope to see you soon at one of our physical events. And we are also having a longer session, a more detailed session on some of the things that we've spoken today as we go forward. Thank you very much for your time.
Thank you. Thanks. Thank you.
Thank you, Businessworld.
Thank you so much, Anand. It was indeed a pleasure to have all three of you here and listen to that conversation. Really insightful. Thank you once again. With this, we'll move on to the next session, ladies and gentlemen. This is going to be Indian consumer insights around digital. Chairman and Editor-in-Chief, BW Businessworld and Exchange for Media Group. Joining him is the panel, Mr. Satyam Kumar, co-founder and CEO, LoanTap, Ms. Shruti Agrawal, co-founder, StashFin, Mr. Akshay Mehrotra, co-founder and CEO, Early Salary. So that's your panel, ladies and gentlemen, and I will be very happy to take this conversation forward.
All right, thanks. I mean, I'm sorry, everyone. I don't look so much like Dr. Batra. This is Prasad. Dr. Batra is just running slightly late because of one of the other parallel sessions he's working on. So, you'll have to kind of, as he keeps telling everyone that when I grow up, I'd like to be, like you. So, I'd like to be like him when I grow up, but, I have the opportunity today. So welcome to the panel. Let's kick off with a quick round where we go around the table. If you guys could please tell the audience a little bit about yourself and your organizations, and also, in terms of, what your views are on the topic that we are discussing today, in terms of consumer insights. We kick it off, and then we can get down into some of the talking points that we've lined up for today. So I'll just start and go around the table in the order I can see you on my screen. No particular biases there. We'll kick off with Akshay. So Akshay, over to you.
Hi, thank you. Good afternoon, everyone. My name is Akshay Mehrotra. I'm co-founder and CEO of Early Salary. I think early salaries are a synonym today for salaried professionals to borrow. We're an instant lender working with almost millions of customers. We have disbursed close to 1.8 million loans. We have disbursed upwards of 3,000 crores currently. And we really make sure the young working professionals can borrow in a seamless manner. While the product is highly innovative, I think the most important challenges in fintech that we have solved for is onboarding customers in seconds, making sure that you can give near banking experience to working professionals who are unable to borrow from a large traditional bank. At the same time, build in hyper innovation specifically to lending, system control, process control, and build a business operations in a much better manner. Coming to the topic today, if you look at the consumer insights, I think fintech is a really evolving word. We see in consumer lending, it's making impact to a large number of consumers. I think the first innovation in banking took place 47 years back when banks started introducing a credit card, which was really making sure credit comes in your wallet. In 47 years, they've got 45 million people added to the credit world. I believe in the last 2 years, the numbers got added by almost 65 million cards being issued in the country. But interestingly, fintechs, lenders who are now 4 years old have really gone and added another 45 million customers to the world of credit. So the speed of introduction of credit has been humongous. And I think that's the new insights that we'll cover in today's topic. What's the customer segment? How many of them are borrowed before? How many of them are used products? What are the new use cases? Why people come to fintechs than traditional institutions? And we'll try to cover them in today's talk.
Thanks, Akshay, for that. I think great insights, and it sets it up very well as well. Satyam, if we could hear from you about a little bit about yourself and your organization for the audience, and also your thoughts about the topic that we are pursuing today.
Thank you, Tushar. So I'm Satyam Kumar. I am co-founder for LoanTap Financial Technologies. As a we want to be known, or we are rather known as a friendly loan provider. So tap is more for friendliness, a friendly tap, which is where we bundle the whole requirement. If we see a significant part of entire retail loan segment or consumption pattern comes from others as a category. So other than housing in consumer, other than housing, groceries, and others or a miscellaneous expenses. That's the large segment which gets funded through a personal loan or a general discretionary spend item within the customer's budget. So the nature of uses could be different, and that's how by and large it's called as a personal loan category. And within personal loan, we provide a product design which suits the cash flows of the customer. So if on a particular month someone wants to pay a less EMI, he can pay a less EMI. Some month he wants to pay a higher EMI, he can pay a higher EMI. So in a way, we try to meet the cash flow needs of the customer depending upon what is his position around for a particular month in terms of festival expenses, or in terms of tax cuts or other provisions that he has done for investments and all. So essentially, fast, flexible, and friendly. These are the three things with which we go as a loan tap.
You know, Prasad, if may, thank you for filling for me. You were doing the last panel and got 5 minutes late. Thank you, Satyam. I heard you out. I did a panel where one of your co-founder was there. So clearly, when we talk of this ecosystem, innovation and disruption are a weekly, monthly, I won't say daily job, but it happens. The nature of fintech is such that consumer behavior is changing with evolving technology. I believe sometimes availability creates demand. So give us a sense of where we are heading in the future. Give us a sense of some trends that you see manifesting themselves in a big way over the next 3 to 6 months. I'm not talking years. I'm talking 3 to 6 months.
Yeah, in the backdrop of what we have witnessed as a once-in-a-century phenomena, we have seen a temporary shift from pure play credit play to save and spend play. So that essentially means that as a lender, we have been getting a far deeper view of the customer based on his spending patterns and his savings pattern both. And what we are seeing is that people are looking forward to put in a bit of their income into the saving instruments. This is what has come in terms of the number of demat accounts and all which has been opened. And in terms of spending itself, the behavioral shift has been coming where people are spending more and more on education as a segment which has emerged both as an individual education because we deal with the younger generation, millennials or up to 37, 38 years of age. They actually look forward to reskill themselves, and they have been spending a lot there on the courses for reskilling themselves. So that's something which has been come as a departure. Second, two things which was always there. People have been spending a lot on their living rooms,
how they want their living rooms, from where they do a Zoom calls, parties, and all to happen. So they have been spending a lot on the living room space itself, doing up their home. And the third place where we have been seeing people spending is the whole gadget which remained there because work from home has driven some of it, and some of it has been a natural desire also to use the better technologies or adopt to or migrate to a better system. So these are the three places which has emerged as a near term spending shift from what it used to be.
So again, we're talking consumers there. Consumers are at the center of the product or service offerings that each one of you have to offer. Now, let me ask you, co-creation is a very big theme in a lot of categories. What are you co-creating with consumers?
So when it comes to, as I said, I mean, I would not say co-creating. Co-creating is a lot happening with the bankers itself within the fintech players and the bank, because we are still grappling with lots of basic problems in India. What we are doing in the segment itself, or how we are defining the segment itself, is by providing products which is not templated in a manufacturing style that a Nirma will come in this case.
Of course.
This thing will not. So what we are doing is that we are doing a lot of variation in how a customer wants to pay. The relationship between the fintechs and the customers are becoming more and more deeper, where you are getting a regular view of the customer in terms of a customer looking forward to something, even a small expense item, 6 months or a 3 month down the line. You are the one who is first available there, and so they don't have to go and look at anyone else. So what you are continuously building with a customer is a profile of the customer, a relationship with the customer, which keeps on enriching, and every new transaction is far more smoother for the customer. So a customer only he doesn't look at a friend, he doesn't look at anything else, who only looks at you whenever he has a need. So as a lending product, we don't come as a push sale, we only come as an enabler. So what we enable is
you also have data from a past payment of the loan, of the size of the loan, or the nature of the loan. You can kind of customize, you can make it tailor-made to the consumer, and that's one-to-one personalization matters. Let me go to Shruti at this point. Yes, Satyam, complete your point.
Just last thing. So a lot of things is being built on the relationship side with the customer. That's something which is continuously happening in the fintech ecosystem.
Okay, Shruti and Akshay, I'd like to talk to both of you first. Shruti, what are the consumer insights that you have which showcase that the Indian consumer is very comfortable with fintech products and services, and we are looking at a huge adoption? I mean, just to give you a context of 2 data points, in the last 11 months, 2 crore plus more retail investors have been added to stock market, which didn't exist, which is almost as much as the ones that existed. Second, I'll give you a US data point, and I'll give you an e-commerce data point. From 2000 to 2020, the retail e-commerce market was about 16% of the overall retailing. In last 11 months, it has become almost 27%. So 11% growth. So clearly in India also, if I may say, fintech is such a sector where we've leapfrogged. We are not behind America, Europe, or other markets. We're actually ahead of them because we have multiple kind of categories, we have multiple geographies, and in the kind of product offerings, we are innovating much more. So tell us, what are your kind of trends that you're capitalizing on?
Sure. Anurag, I'm going to start with giving a quick background about myself. I'm Shruti Agarwal, one of the co-founders of Stashfin. By way of background, a chartered accountant, did my master's from Columbia. Post that, worked with in the Wall Street, and taking that, I actually saw the 2008 financial crisis in the US. I want to also use this opportunity to congratulate you and Businessworld. We do behave like a developing country in a lot of ways, but when it comes to fintech, we are way ahead, as you said, to the developing world with the US. In the fintech space, we are the leaders, and Businessworld is definitely taking a charge on that and putting us on the forefront. Stashfin, what we do, we agree that there's not one size that fits all. While I was in Wall Street, one of my analysts always asked me a question. How come there's so many cosmetic companies out there? There's one for something focusing on Latin American, something focused on Indians, something focused on Asians, and something focused on whites. And then It was across the, and it was different for different cities, states. And similarly, that's what we see here in tier 1, tier 2 cities. We see tier 2 being the next big fintech hub for us. And our product, which provides flexibility, convenience, is going to go a long way. It's going to be working as a sachet. Try it out first before you take the large packet. So, taking a 10 lakh rupee loan right now may not make sense for someone. They may want to start with 1,000 rupee, 2,000 rupee, and see how it works, whether they can afford it, how much time they can pay it in. And that's the flexibility we are seeing. The customer wants the convenience, the flexibility, and the ability to be able to make his or her own decision.
Okay. Thank you, Shruti, for giving that background. And clearly, sachetization grows the market. It gets people accustomed, and hopefully you're used to the financial offering. So it's a good way. I can't say I use a shampoo anymore, but I do other experiments with other things, not necessarily with the sachetization of shampoo. But Akshay, let me come to you, and I'm very familiar with your company, and I'm sure so are our viewers and our readers. But Akshay, tell us, of course, you saw this need of, early salary, that you saw a gap in the market and you addressed it. But as you evolved, what are the other consumer trends you've seen while servicing the need for early salary?
I think the core concept of early salary is the originator product for it, right? If you notice, 90% of our book is actually tried to give customers more money for many more use cases. I think one of the biggest trends that we have seen today is the credit is a seamless journey and a product experience for a consumer. And that's what's fueling the next big growth. So let's give an example. You're interested in doing an upgrade or a instead course, which is costing 60,000 rupees. It can come in one click at zero cost EMI, and the experience is amazingly how it's getting managed. Similarly, you decide, Dr. Batra, if you're interested in going to the other Dr. Batra for getting hair implant, that could
we
be a good
actually collaborate. I'm the one who
collaborate.
I'm the one who gives so much stress to people that their hair goes away, and then he fixes that, and we kind of do revenue share. But on a serious note, I get what you're saying.
So with the reverse side is when you go there, we'll make sure that you can afford it. It comes on a seamless cycle, and you can enjoy the hair for next 24 months while we are going on paying on that monthly mode option. So that the idea is that every product which you purchase, how does credit come as a party to it, and how do you make as a part of your life? The second part, this is the first trend that we see across products, and we are heavily investing in this today. So we are already live with 5,000 odd merchants between EdTech, Health Tech, and Checkout Finance as an extra model to getting customers getting utilized. The second part we notice is the aspirational class coming in to own a credit card equivalent product. So we introduced a card product during the early stages of COVID, and it's almost adding 5,000 customers on a monthly basis, right? So rampant growth happening there, where you're seeing the customers familiar with a product which was meant for a very high pedigree customer. Suddenly the entry level customers also getting a product like this, and they're loving it, right? And they're wanting more. It's not about the exposure, but the ability, listen, I can also have a product. Why my boss should carry a Amex, and why I can't have a similar credit card experience when I want to buy a product, right? And that's the second wave that we're seeing in a very clear, good manner, and we're seeing hyper expectations there. The third is a very unique shift. We actually saw people shifting their expenses from saying I'll pay monthly as a cycle, and people opting for slightly longer tenures. So the 12-month tenure is actually coming in a big manner. And that's fueling two components. The first part is people willing to purchase items for homes, purchase items for themselves, making payments, but now choosing a deferred period. They can afford paying it like a credit card bill statement, but they want to now pay it in 6 to 12 months. And that's a big wave coming in. So players like us, what we have seen is a ticket size improvement from 13,000 to 27,000 rupees going up. So literally an overnight shifting which has happened in the last 6 months. The consumers are willing to, they want more spends, but they want to defer the spend into monthly mode options, right? And the fourth trend, which is the most interesting trend. So we did a lot of analysis of consumer trend behavior on how the work from home came in the IT category and how they continue to still work from home, it's actually resulted in a very different impact. It's actually resulted in average consumer having 22% extra cash each month at home. So anyone who's living at home and working has 22% more cash than the guy who's going to office. And that makes a very different atmosphere. Suddenly you'll find this customer shifting to better, upgrading his homes. He's having extra cash flow because he's not spending money on Uber to go to office. He's not spending money on Zomato to deliver to office to eat, right? And that is causing a huge shift on income behavior of people. And actually, we're seeing improvement on FOIA, we're seeing improvement in credit card decrease in credit card outstandings of consumers. It's a very positive trend which is taking place on people who did work from home.
And it took a negative kind of a event for that positive trend to happen.
Absolutely. And I would say, if you look at many of the European markets, especially the Germanic speaking country, right, till almost 2002, there was no credit card penetration in that market. It was the people fit until there are 3 generation shifts, people don't. And we have seen a complete flip on the way people save, spend, and purchase because of COVID. So it's an extremely good part. And we believe that the next trend for fintechs would be that can they pivot to become extremely seamless? It doesn't make a difference. You're doing UPI payments, you're doing purchase of product, you're buying, you need to go to a hospital, you need to go to a school, whatever you're doing, credit is a seamless part of that journey. And fintechs have to evolve to elevate themselves to become absolutely seamless in their nature. And that's going to be the new wave of growth coming.
Okay. I want to ask you, sometimes entrepreneurs are either modest or self-effacing, but tell me some of the trends that are happening today. Did you notice them earlier and kind of build products and services around them? I know you started with a core idea and developed your company around that, but you then noticed something. For example, let me give you the example of BharatPay. They put free, POS, and the transaction was free for merchants, and they then went into a lending business, right? That's where they saw their sweet spot. Because there's practically no money in transactions anymore, So clearly, give us. Let me start with Shruti this time. Did you kind of predict some of the behavior you see today earlier? And if that was the case, do you see some of the other behaviors that are likely to manifest as a big opportunity in the future? And what are you doing about them?
Yeah, sure. So when I moved from the US, one of the things which I went through, and actually till date, I applied for an American Express card and I got disapproved. I applied again after a year and I still got disapproved. And I wondered, someone who's salaried and someone who has income and enough savings in the bank account, how does the decision making happen? It's quite a black box, as one of the previous panelists said. Reliance on ITRs, reliance on old school data is still how we underwrite. And we saw that. And folks that are in tier 2 cities who are mainly self-employed, getting a card for them or getting the flexibility to make their own financial decision gets tougher. So one of the things which we did earlier on, we became responsible lenders. We really truly believe in financial inclusion and getting the underbanked the credit they need to grow, be aspirational, whether it's an auto loan or a personal loan, a credit card. Having a credit footprint definitely helps. So, we've been able to underwrite close to 1 million customers and built their credit history to get them to mainstream credit. And one of the things that is happening is regulation actually coming pretty hard on those who were not responsible lenders. And cooperating with lenders from the start, that's what we've done, being in the purview of RBI has become very, very important. And what we see is, some of the people who are operating out of this purview will actually, slow down or would have to shut down business. And that's going to be one thing that's going to happen in the fintech. It's going to get more regulated.
Okay. Clearly, checks and balances have to be in place. And, I know before it's almost 5 years for your enterprise. But you did a company in New York before that, Secret Cache, right?
Right. Yes.
Right?
Absolutely. My passion for retail actually started
What
with.
were your learnings in terms of consumer?
Yes. So my passion for
So what were the
retail.
learnings in terms of consumer insights from that experience? Go on, that you brought to Stashwin.
Sure. So my passion for retail actually started with Secret Cache. I saw a void in the industry. There, until date, it's there. There is no large swimwear provider in India. You know, you don't have any large brand out there, and saw a void and went after that. What I realized that people want too many shapes and sizes and flexibility. Why, and they want to still be conservative. Indian economy hadn't grown to that, but financial services did. And the whole learnings is providing as much flexibility and convenience to a customer actually improves your product. And there's a lot of learning from there. And that's how the credit line card came about. You know, the card we're doing, one of the questions you asked was what's happening in the co-creation space. What we are doing today with Visa, the SBM Bank, is doing co-creation cards where we can provide flexibility to the underbanked, to those who would be self-employed or those who are in the space, who are good credit but are not being serviced by the bank because since the financial crisis and how banks are regulated very thoroughly by the bank, we can step in and service those customers, provide them the flexibility and all those learnings about marketing and how to market to a customer has all come from Secret Cache.
Clearly, consumers give you ideas both from their behavior and sometimes by telling you what they need, very upfront. So you got to learn from that. And they may say that they need something, they may not articulate it exactly like that. So you are to, from your own experience and collaboration, figure that out. Satyam, if there were one or two trends that will become mega trends in the context of fintech space, what would those be? I mean, Akshay shared some of his thoughts. What are your thoughts?
The immediate stuff that will happen is that the whole capital conundrum will go away. You will see tremendous amount of cohabitation or collaboration, whatever we call, between the capital providers, that's the bank, the fintech, which is near to the consumer, which is the enabler of the transaction. So that's one thing which the capital issues and the pricing issues will be solved decisively in the next 3 to 4 quarters for the retail consumers. Having said on the capital side, as I said, personal loan traditionally had been more like an event-based loans, and those events have been infrequent in the people's life. I mean, once in a blue moon wedding, sometimes once in a year holidays and all. Now the events are far more frequent in the people's life. So the number of transactions that a customer is doing, even on a borrowing side, has gone up significantly from what it used to be like a once in a 3 year to once in 9 month. So essentially, as a lender, we need to have those abilities to underwrite customer in that fashion to enable even a small loan in a cost-effective manner, at a low operating cost manner, rather than going through a long cycle of an appraisal and a long cycle of providing credit with a cost structure. So the events are becoming more and more.
Yeah, Akshay said one click, 60,000 rupee loan. Nothing.
Yeah, so that's a second.
One click matters, The e-commerce revolution in the US. The e-commerce revolution in the US happened on the back of two words. One was free shipping, two words, free shipping, because e-commerce companies offered you free shipping.
Yeah,
it's empirically, Amazon says it. I'm not saying it. When you talk to people at Amazon, they'll tell you that, free shipping really created. Similarly, when it comes to fintech, single click is the word.
True. True.
Single click. You share your information and it gets, so, that is convenience, that is speed, that is also, relationship, because that means you have the consumer data, which your intelligent, product is able to gather and process very fast. So that, single click is like the free shopping for fintech.
Yeah.
Go on, Satyam.
Going beyond Dr. Batra in the beyond the immediate term, in the medium term, what we see is that the fintechs or the digital lending institutions will be bringing superior product to the smaller cities and the rural consumers. It will not be only a domain of like a platform players or a traditional product providers. It will also be riding a lot on the marketplace approach which the lenders are taking, be it a large bank or be it a fintech. The whole marketplace approach will make the product available, which will be superior, tested, and the credit also will be available for people to consume a better quality product rather than compromise on a product quality. So that's a mega trend which will come in the near term.
Okay, fantastic. I want to move gears. Of course, all of you are pioneers in your own ways. What you're doing, you have traction, and clearly there is more promise in the future. You just started in some cases on the business model that you operate. Stashfin has been around for a while. Now, I want to ask you, are there Indian companies or American companies or European companies or Chinese companies in the fintech space that you look up to for some consumer insight that they use to build something very big? I want examples from you. Let me start with you, Akshay, and then go to Shruti, come to Satyam.
Dr. Batra, I'm going to combine your previous point to here. Entrepreneurs try to look at new trends, but I'll be honest, they are the best copycatters.
Yeah.
They have to really believe what good
I wrote an article a couple of years back called The Late Mover Advantage, and then made it the last mover advantage.
Yeah.
Pioneers burden, they spend a lot of money, time, energy, iterations, emotional energy. But sometimes you can learn from the mistakes of others, or you can drive on a highway someone created for themselves. So go on.
So I think the important points, sir, because like you said, see, in banking and financial services, there is no IP. That means you can't be the only ones what you build. Everyone have the same access to the same data, same capability of building. It's really about the razor sharp focus you have on what can be used to really build out a better product or journey or feature. So I'll give you an example. I think the first part is eliminating the human touch in all possible format and still be able to do a large ticket transaction. So everyone talks about video KYC. It's like a ad for every bank is video KYC. If you try, you can't even come on that platform and actually get serviced, right? But I'll put it like, we saw the opportunity, we said we'll invest it well. And today, 40% of our transactions daily are happening on video KYC. That means the platform had to be so stable that we could do a 2,000 video KYCs in an hour.
I remember you said that on my daily TV show.
Yeah,
1.5 months back.
Create that capability, and now we have a little shortage of bandwidth in office, because if you're doing 50 simultaneously video calls, it's going to be pumping in a lot of new bandwidth issues in how you consume tech, right? So there's the first wave. The second wave you saw is banking innovation always comes with some innovation, then regulation, and then again innovation. Because when you're small, the regulator cannot monitor you. When you're large, only then the regulator comes in. So we saw in China the clamping down on interest rates coming in. We are seeing the same impact now after 2 years in India, right? So we saw subprime players in lender. The same subprime players came to India. Now the Indian regulator acting on it. The second part is you need to up your licenses if you have to do banking anywhere in the world. You can't just be a platform. And that's also coming very true in India. Like we made sure on day one, we had an NBFC license. We said we will not start until we have one. We can be innovative, but we need to own our license, right? And that's making a large amount of difference today. Anyone who doesn't have is getting removed as on the Play Store. We're seeing those impacts. The third is there are great business models which saw early adoption in, let's say, Latin America, some parts of Eastern Europe, etc., where you can learn and you can innovate to understand what they did. I think the first movers were about in-cash linking into the payroll system of employers, and early salaries pivoted in a very seamless manner, working with 1,000+ employers to do the instant salary advance linked to payroll. The second innovation we saw is when markets get tougher, consumers will automatically choose payments as an option rather than cash credit. And that was the need of having a card, be a part of BNPL, participate with large players who have volume to introduce EMI opportunities. I see the next trend is really how we're seeing models in evolved financial markets, the UK and Europe, especially in UK, where we have seen models like Curve, Revolut, etc. existing, where we are seeing the new wave of fintech revolutions is how do I become seamless? I should be invisible. I spoke about the one click happening, and we are seeing that with, let's say, PG integrations, that we become one click. We are invisible to a customer, but credit comes. Right? And that's the next wave and next innovation taking place. And these three are I'm banking quite well, and they are the current innovations taking place. But these are the spaces that you need to be investing a lot on. If you ask me, in my company who has 268 employees, how many people are responsible for today's business? There are 12 people who will do, today is what, 12th of February, there are 12 employees who are responsible for today's sale, right? There are 114 people who are responsible for building 6 months ahead technology, product stacks, rule engines, underwriting systems, so that we are 6 months later, we have a better product and a higher approval rate happening, right? Now, that is how you have to invest in your people. And that is what separates smart companies, entrepreneurship, and really building for the future.
Okay, we get that. Now let me ask, one of the big technology that is impacting consumers in some way, not so much yet in India, but is blockchain. And of course, we're talking crypto. Now, one of the things is if blockchain gets implemented in a big way in the fintech sector, and I'm not using the word crypto. Crypto is, of course, one application. And, again, cryptocurrency and blockchain will have impact on how users behave. Give us a scenario if the adoption happen. I'm saying if, but the adoption will happen. If it's dependent on policy, because we are a conservative banking.
So let me take that question, Dr. Batra.
Yeah.
So I think a very extremely important point. See, the logic of blockchain is distributed capability of doing a transaction in the most seamless manner. So there are 3-4 components which are really fueling this. First, of course, your tech teams have to be growing enough in that manner. So luckily, our CTO is a blockchain expert written the book also. One of the interesting components here is how the fungibility of the transaction gets separate from the compliances of the transaction. So if you're able to manage seamless compliances on a blockchain network, which means you can share the customers across platforms. So we are seeing CKYC and other KYC systems coming for universal customer onboarding and sharing the customer, right? The second, I think the big wave is the capability of judging risk and capability of fraud customers is completely flipping the board. And specific lending, we get hit by a very different level of risk because we're not physical. Customers, when you meet a person in physicality, you can judge what's his personality. But on a mobile app or a website, very difficult to judge, and you can be hit by syndicated digital fraud with someone sitting in any part of the world doing that, right? And synthetic profiles coming in. So really spending technology to innovating here and then sharing the data back with the market to say, these are the fraudsters hitting you, can you manage this entire practice? And as an industry, we have to really build for that. In fact, Satyam and me are co-founders of another association, which is really about fintech face, where we are saying that the industry needs to come together to protect itself also. We need to be fair to the consumer, but we have to really build businesses which we can bring down the cost of every transaction, and fraud is a large risk for us. How do we really build a syndication so that fraud doesn't hit us as an industry, right? And we can build the right governance system. So that is a large
clearly fraud is an area that by the nature of the technology of blockchain gets kind of addressed, but at the same time, there is a regulatory risk there. And the central banks and the government like to control, the currency ecosystem, if I may say. So I think somewhere there will be an equilibrium in the future, and we'll get to a point where we are able to kind of leverage the technology in a positive way. Shruti, let me bring you on the same point of cryptocurrency and blockchain. with context to user and consumer behavior?
So, blockchain is definitely cryptocurrency, something you can't walk away with. That's the future of transactions and currency. If Tesla is accepting cryptocurrency, that's the new wave. So, now that Tesla is going to be in India and manufacturing out of Bangalore, we think it's going to be a huge acceptance, at least for the HNIs. But I think for the space we are operating in the underbank and where we believe in financial inclusion, it may be still a bit further away since the education piece would be the government will have to take on a lot of education to the customer, how it's doing currently when it comes to interest rates and doing TV advertisings about security, fraud, putting all the checks and balances in place will become very, very important before it's rolled out to the larger world in India.
Okay, important. Satyam, your point of view in terms of where is blockchain and crypto world take us?
Absolutely. So besides what Akshay mentioned, a lot of it about knowing your customer and a lot of it about risk prevention, where you will have lots of regulatory blessings, because as an ecosystem, everyone is concerned about the risk that is percolating in the banking ecosystem. So it will not be scuttled; it will be enabled. Having said that, on a direct to consumer side, also there are transaction type which requires a blockchain support as on today, and that is more and more in housing loan segment. So when you look at a housing loan as a segment, which is a domain of a retail finance in India, housing loan, property related fraud, transaction related fraud is one of the biggest fraud which is coming in including when you do a balance transfer from one institution to another institution. So that it will enable a seamless movement of a customer from one institution to another institution without getting into the network or probability of a fraud by the bank. So the bank will be more and more keen to provide those products which today they are trying to restrict as a part of the portfolio or as a percentage of the portfolio. So on a consumer side, we see its immediate impact in the housing loan, but overall in the system, we see it from a risk mitigation, fraud prevention, and knowing your customer better mechanism that as a face also we are building, and we are also getting adequate amount of support from the regulatory ecosystem.
Thank you so much. Just before I wrap up, I would like to know, see, again, we talk of tier 2, tier 3 cities. We talk of Bharat. So give me a data point or an idea or a suggestion where you see the next fintech growth coming from Bharat and not necessarily from India. Already, I know most of the growth is coming from Bharat even now. So I'm aware of the numbers when I look. But tell us, how will this kind of traction grow even more in Bharat? Satyam, let's start with you and then go to Akshay and Shruti.
So my take will be a very short take there, Dr. Batra. It will be more in a JLG kind of ecosystem, and the second wave will come with more and more digitization of the agriculture land holding data, which many of the state has already done, and some of the states are slightly lagging. So the land holding data, digitization and the JLG ecosystem running on a fintech. These are the two things which will take the credit to the rural folk where you do not have a regular footprint of transactions to lend.
Okay, Shruti, Bharat and rural India.
Yeah, it's going to come from the tier 2, tier 3 cities where the underbank, the microfinance now, which has a footprint, enters into mainstream banking, mainstream credit, with getting their aspirational products, finance, auto loans, home loans. That's where I see the maximum growth coming from.
Okay. And, Shruti, is there a difference in the behavior that you see from consumers or users from, say, a metro and a rural background? And if at all, what is the difference?
The large difference we find, folks in living in the metros, they have an access to a lot of banks. If they don't get a credit card with the HDFC bank, they will go to an AU bank. What we see with those in the tier 2 and the rural tier 1, tier 2, tier 3 cities is they're aspirational. We get them through a ladder into the mainstream credit card product of ours. And we see that they're very aspirational and they want to get the card. So clearly they are underbanked. There is an aspirational value which is not being served by the banks because of the cost factors which was mentioned before.
Okay. Akshay, you have the final word on this.
So while I agree, tier 2, tier 3 would be a large driver of innovation to reach out and service them, etc. I'll give you two numbers. 11.2 crore Indians live in the top 7 cities. 68% of those people have to rely on some amount of salary or monthly income to earn their wage and run their homes. Only 32% of them have access to any amount of credit. And remember, that means that even in Bombay, with the financial community, they haven't catered their entire audience, which is a huge opportunity, which means that we have to service the gig customer, the delivery customer, the blue collar, gray collar, factory worker. None of them have access to credit till now. And that is the opportunity, including the shopkeeper, including the delivery truck owner, to entire ecosystem provider to run these cities. That's a huge area. And I see a great amount of innovation which has already taken place. The last 8 months, the amount of innovation taking place to become deeper penetration customer segment is huge. And the next 18 months is going to be the next big wave in fintech to really go down the customer pyramid. The second innovation I think is taking place in new wage bill act, which means that incomes across the lower strata of the customer base is going to grow. Right, and eventually it will reach up to the levels of your home, your housemaids. Once the incomes across the board started crossing EPFO, which is 14,600, you will see a huge change in income bands of people coming in. And as income increases, the need to upgrade lifestyle happens, and for that, credit is going to be the next big wave. And I think that is the game changer in the industry going to happen. Right? So, and I think that is where at least fintechs. My suggestion is you have to create capability of growing 20x from where you are in the next 24 months. It's not about 2x and 4x. We need to create the cash flows for us to grow 20x, because it is us to cater to the next mile customers. We need to make sure that we create cash flows for us, reduce our cost of borrowing, raise more equity to have leverage against that part, to really cater to a customer or get access to cheaper money from banks and become partners in the entire crime game. But the entire system has to fuel if we have to grow 20x, but I believe that 20x growth can happen in 24 months.
Thank you so much. It's been a pleasure speaking to you, Satyam, Shruti, and Akshay. Look forward to more conversations. Wish you luck in your endeavor to make impact. And the next issue of BW Businessworld will have FinTech as the cover and our conversations and the winners of the first FinTech awards that Businessworld has done. So I'm sure you'll find that issue of some interest, and I'm sure a lot of our readers would. So wish you luck. Back to you, Ravin.
Thank you.
Thank you.
And Akshay and Shruti, you both referred to my hair, so thank you for doing that. One in a shampoo, one talked, Ravin talked, Shruti talked about shampoo, which clearly we'll gift you. And Akshay talked about me collaboration with the other homeopathic Dr. Batra. So we'll talk about it offline, but now time for you to move on to the last panel of the day. We have a 2-day event. So today is the first day. Tomorrow we have a whole day, and in the evening we have the awards. Back to you, Ravin. Yeah.
Thank you.
Thank you so much.
Thank you. Thank you so much, Dr. Batra. So that was analytic. And with this, we are moving to the last panel for the day. Indian BFSI 2025, sky gazing. So basically looking into the future. And to do that, we have the moderator, Mr. Sunil Kumar, President, Exchange for Media Group. Joining him is the panelist, Mr. Sameer Agrawal, founder and CEO, Redfin. Along with him, we have Mr. Robin Bhomik, Chief Business Officer, Manipal Global Academy of BFSI. And we also have Mr. Sanjay Sharma, MD, iFinance. That's the panel for you all, ladies and gentlemen. I'll hand it over to Mr. Kumar to take this forward.
Thank you, Ravin. Good afternoon, everyone. Hi, Sameer. Hi, Robin. Hi, Sanjay. Good to meet you all. So it's going to be 2025. So let's not worry about our businesses today. Let's talk tomorrow, right? But it'll be good to know what you do now, so that the audience knows where you're coming from. So just in a minute, maybe just talk about your current piece of business. I have an idea, but it coming from you would be nicer. So Sameer, you go first. Tell us about Redfin.
Sure. Good evening, everybody. So I'm Samir. I'm the founder of Refin. Refin is a digital lending platform. We primarily lend to individuals that are financially excluded, people who have never taken loans in the past, so they don't have any credit history or any, so to say, formal footprint. Most of our customers are based in tier 3, tier 2, tier 3, tier 4 towns. So people living in towns that are maybe 100,000 population. And we lay a lot of focus, or a lot of our business is focused towards financing people for productive needs to set up small businesses. So keeping that in mind, a lot of lending is done in the electric three-wheeler space. So people in small towns buying electric three-wheelers to basically start a micro enterprise for themselves.
Thank you. Thank you, Samir. Robin, tell us about this particular outfit that you run, where you're the chief business officer, about the BFSI school and the Fintech school as part of Manipal Group.
Sure. Thank you, Sunil. So Manipal, I don't think needs an introduction, so I'll not go there. I am essentially running the corporate skill transformation academies that we have for the BFSI sector. Something that we started in the year 2008 through a partnership with ICICI Bank. And it's been 13 years since then that we've been, I would say, reskilling, transforming the banking sector, financial services, insurance across the board to the effect where almost 20% of the overall banking sector employees in this country have been, directly or indirectly trained by us. So what we do, and now I would say in the recent past, we've been focusing more on how to skill for the next generation of skills that we need really in the fintech space. I was listening very intently to the previous conversation. We launched a very interesting school last year called the School of Fintech, which is to really bring up the next generation of people who want to get into the fintech industry. So where we do a combination of the technology piece as well as the financial services piece. And that's a very interesting, and it's the first online coding school in the world that we built in partnership initially with a bank, one of the largest banks, but now it's kind of expanding beyond that.
So was it online coding done even before COVID you had started, or was it?
We were kind of building the concept in 2019, late 2019. And as you would know, there are quite a few other fintech schools that exist, not only in India, but globally. The first thing that we did was, we kind of partnered very closely with some of the leading banks in the country.
Okay.
And we offer job assured programs for a lot of young graduates who pass out of our school. So that's been a first.
Thank you. Thank you, Robin. Sanjay, let's hear about iFin or iFinance. Of course, one knows about your background in banking, several years in the banking business, but yeah.
iFinance is a NBFC, and it started 7 years back to provide business loans to micro enterprises. And these are small enterprises which have been excluded from any sort of funding by banks or by other NBFCs. And the thought was that we could use a cluster-based approach and a lot of data-driven approach into seeing how to give loans to people who do not have a credit pattern or a credit path. I think 7 years down the line today, we have a presence in across India in 18 states. And it's been a portfolio that's been running for 7 years and doing well, contrary to what a lot of finance gurus told us when we started. So it's been performing quite well. I think the company has done well, and it has created livelihoods for more than 200,000 micro enterprise owners.
Thank you. Thank you, Sanjay. So what a wonderful panel to have, all with, know the industry from within, technology. So you two of them are like hardcore entrepreneurs. Robin is almost an entrepreneur. Starting anything within an organization takes a whole lot of entrepreneurial skills. It's not like there was something running and Robin jumped onto that. It's something which he started with his own initiative and know what had to be done. I'm sure your one-line brief was we are thinking of something like that. Can you do it? How it's to be done, you have to know it. So great panel to have when we are sky gazing or crystal gazing, or when you're figuring out. And I'm sure this is something you would think of every day in any case for your businesses, how it's going to grow, what are the new products we are going to be developing. So it's going to grow. It's going to grow massively. That's all a given. We don't need to kind of talk about what's going to grow by what percentage, how much assets are going to be managed by banks. That's all a given, and that's all a matter of statistics. What we can talk about, and which would be of interest to all of us here and to the people who have joined in for this session, is what's going to drive this growth, where is it going to come from, why we think it's going to the boom is going to happen. So let's go with that. So maybe we can go the other way around. We can start with you, Sanjay, and see what are the factors you think which are going to drive this growth.
I think it's an easy question to answer in many ways, especially when you're looking at the next 5 to 10 years. There is going to be tremendous growth in fintech because it solves many of the problems that have been a limiting factor in getting finance to the segment that needs it. And on one side, you have segments which have never been given finance, like the loans that we give to businesses, but also you have underserved segments which used to get loans, but either there wasn't enough transparency, or there wasn't enough speed in that transaction, or there was too much hassle in that whole transaction, too many documents asked, and so on and so forth. So I think given that, the chance that it will take on is high, especially in a country like India, where there's very high level of mobile connectivity and very high level of internet availability. So I think without any doubts, this is going to take off in a major way. All I feel is that the year 1920, because of the COVID year, has been like a reset button. What had started off and was picking up momentum suddenly has been reset, because people have suddenly had a reality check that do you have enough collection capability, do you have enough claim management capability, or whatever else. And I think the new set of fintech plays will be a lot more thought through, and therefore more likely to succeed and succeed much quicker.
Yeah. So of course, fintech would find application. Sure. So maybe we can also we can expand a little bit. And Robin and Samir, I come to you. You can talk about the overall BFI sector. See, several of them would be online, technologically done, but I still see a lot of it will happen the brick and mortar way and several other ways in which you would reach people. So we are talking about everything here. We're talking about banking, financial services, as we understand, other than banking, which could be mutual funds, which could be alternate sources of funding, and of course, insurance. So Robin, you obviously, I'm sure you have a sense about, because education means like you educate people today and they're going to be absorbed in the industry in the coming years. So you have a sense of which way BFSI is going. What I want to know is, what are the factors which are going to take us there? Is, policy, one needs for a thing like finance, policy support or policy oversight is very important. Regulatory oversight is very important, which is all in place. Things like those, and of course, increasing number of people who work, increasing number of people have bank accounts. There is more money in the market, So all factors put together, if you can, we can today arrive at the next 5 to 7 minutes, which are the 3-4 things which are going to drive this growth towards 2025. Robin?
Sure. So Sunil, thanks. And, while Sanjay was also talking and you were kind of framing your question, quite a few thoughts went through my head. I was thinking, post when COVID was kind of, we were probably in lockdown 5 or lockdown 6 last year, around the October timeframe, and the automobile industry was showing the first signs of recovery. A lot of pundits were talking about that, this was pent-up demand, right? It's going to go away. And then you look at the waiting periods for most vehicles today. You wonder, what's wrong? So one thing that India continues to prove every time is the pundits are always proven wrong. And that's a very reassuring thing. So, whichever report you read, it'll turn up, an amended version of it will turn up very quickly. Now, I think amidst all this unpredictability, we work very closely with the banking sector, as you mentioned, Sunil. There are 2 or 3 things that we are seeing, and some of it is again very counterintuitive. But let me kind of lay them out for you. First, as you mentioned, and a lot of panelists have also talked about, even in the previous session, was look, there is a lot of credit and lending requirements, which I think everybody has understood. Whether it be micro lending, whether it be to SMEs, to whether it be to even large corporates for that matter. I think the overall credit growth is something that's going to drive India really in the next few years. Now, coming to the banking sector per se, most banks, are going through this very interesting concept of digital transformation, which very few people understand. A lot of people talk about. But one thing we always, happen to be at the center of is, how do you do digital transformation without, transforming the people first? Digital transformation without people transformation is really not going to happen.
True.
And we have been at the center of that people transformation strategy for most of the banking sector in the country. So some of the very obvious data points that we see is, clearly significant amount of automation coming in, customer service, customer operations, largely moving to, bot-based, response systems. But the counterintuitive thing that's happening, Sunil, is that most of the private sector banks that we continue to work with, they are still talking about branch expansion, which is very interesting because, on the, if you read most newspapers, you will think that, why do you need branches? I mean, people are talking about consolidation of branches. Why would you expand branches?
Correct.
Yet, if you look at the top 4 or 5 private sector banks, largely, everybody is talking about adding hundreds of branches in the next few years to come. Now, why are they doing that? I can only best try to attempt to explain. One is clearly for them, largely a branch has moved to a point of sale. So they don't see a branch to be a customer service or a customer, or an operational driven entity anymore. It's largely to sell new products. But the second more interesting thing is, which is happening is, I think there is clearly a path being paved for the private banking sector by the public sector banks. And, with the bank consolidation, which has been announced, or the privatization, which has been announced recently, and the whole migration to maybe a bad bank and all of the things that's happening, exciting things that's going to happen there over the next 18 to 24 months, I think the private banking sector is really gung-ho. And that's good for us, I think, because we, do a significant amount of work with all the top private sector banks in the country. What we do see as an impact, direct impact, Sunil, is, however, that the traditional roles that they used to train for and hire for, that's changing. So now they are talking more on the lines of, okay, I need people to do selling in the digital world. I need more people to be technology and analytics trained. I need more people in areas such as, the actuary roles in insurance, for example. But essentially, a lot of the roles that we used to skill for 5-10 years back have now fundamentally changed. So a lot of what I've said, Sunil, might be counterintuitive to an extent. No, it's very interesting.
Very yeah. Any business runs with the talent it has. You need people to understand why people ever need to borrow money, or why people buy gold or not buy gold, or why people would buy gold bonds and not buy gold as such. Several things. But you need people to understand for any business to progress. And I'm sure Sanjay and Samir also think about the new products and what I think Devika thought of this session, because we all need to think of the future, what's going to happen in the next 2 years, 3 years, 5 years. So Samir, what do you see to be on the horizon for banking, financial services, and insurance, not just kind of in the area of lending?
So from my perspective, I think there are 2 sort of major trends that are going to drive the sector. The first is, when we talk about BFSI, what is BFSI sector? Who are the players in the sector? Now, of course, we have traditional banks, NBFCs, lending institutions, payment companies, etc. But then you also have a lot of players for whom financial services is not their core business activity, right? Starting with retail chains like Tesco, Walmart, etc., launching their products, uh, to then social media platforms launching their financial products, e-commerce giants launching their platform, and even mobile phone manufacturers launching their own sort of financial services platforms, right? So I think the first trend for me is something that's already started, but I think we'll see a lot more of that, is that a lot of new players from a lot of different areas will start coming into this segment. It is pretty much like saying that, when you look at a mobile phone ad today, they're focused on the camera rather than on calling. I think, you'll start seeing a lot of that. So financial services, from being a standalone product or a service, will start becoming more of a feature of another product. So I think that's the first trend, and we'll see a lot more of that happening in the next few years.
Great. So I think, yeah, one thing, sorry, you wanted to say, add more. Yeah,
no, please.
Go ahead.
I had just one more point to add. So that's the first trend. The second trend that I see emerging very rapidly is this whole concept of, who is the consumer or the user of financial services. And in my opinion, there are sort of three groups. One is what I call the old generation, people who are very well established in the BFSI space. They've been using services, banks, branches, and so on and so forth. The second is a new generation, where I would classify myself as well, where we are more sort of digitally savvy, internet enabled, but again, very well established players of the sector. And the third category, which is really the emerging category, is first time generation. Right? These are people who have never had any access to financial services in the past. And not only them, but their parents have also never had access to financial services, right? So they are completely going in new to this. And in the context of India, that's a huge segment, right? People who are taking loans for the first time, opening bank accounts for the first time, they have no clue about what these products are, how to work with these products, what to do with them. And especially on the insurance side, a lot of people have insurance, but have no clue how to claim an insurance product, right? So for me, this is the second trend. This first generation of BFSI users, I think they are going to drive the next few years. And how they are being served by incumbent players, I think that will drive that will define how the market moves.
Sure. Yeah, wonderful point. Good to me. Now coming to some very basic things like, businesses have to make sense. They have to make business sense. Anything you do has to make business sense. I don't want to get very theoretical or abstract about it, but are the banking business fundamentals of banking strong? Are they making enough monies from whatever services they offer? Are the NPAs at a level which kind of, if they remain where they are, they would make sense. So are we okay with the businesses that you the BFSI businesses that you study? Are we strong on the fundamentals, or we have reasons to worry? Because if we are not strong on those, then the sector is not going to grow. So any word on that? Anyone, Samir, Robin, Sanjay?
Maybe I can take a first stab at that. So from my perspective, I think, so I've had the benefit of, working for many years in the UK as well. And when I compare the sectors here and there, for me, the core difference is the sort of professionalism with in the approach of doing business. All right. A lot of the NPA issues and other issues that you're talking about are because of lack of professionalism in the way we manage things, whether it's risk management, whether it is underwriting, making decisions, etc. I think, and even regulation. Right. So I think if we can build more professionalism in that, and I think there is no reason to worry. India is a sufficiently large market. The banking sector is very large, very deep pockets. There are some very large banks. I think there is space for maybe 2-3. Let's say if there are 15-20 large banks in India today, I think there's space for 40-50 more large banks in the country in the next few years. And I think all of them can be built on very strong foundations. But I think we have to let go of some of our sort of, how should I say, legacy issues, especially when it comes to making decisions more professionally.
NPAs is one thing, but in terms of interest rates, in terms of revenue, the source of revenue that banking has, Sanjay, you had a long run in banking. Robin, you study banks, you obviously study how they're going to be doing their businesses. So Sanjay, maybe you can tell us whether business-wise, the fundamentals are strong.
Yes, in a way, I agree with what Samir said, that the Indian market is very large. And that's why even if you are not as efficient, you are not penalized for it. And I think the banks have benefited from that. I think to answer your question straight away, the answer is that I believe that the banking industry in India is extremely strong.
Okay.
Because whatever we may say about the NPAs going up, etc., at least there is a lot of safety in those banks. And I'm talking of typically the mainline banks. I'm not talking of the corporate banks where you've seen a lot of banks folding up. But most of the mainline banks, public sector banks or private sector banks, are well capitalized and I think are quite well run. They understand the industry and the market quite well. They know where money can be made. And leaving aside few anecdotal events where someone was in cahoots with someone and took some loan which went bad, in general, the lending is quite good. In general, the liability space is well managed. So I don't see that there's a problem of banks going down and therefore facing an existential threat that they need to change, they need to become more professional, or they need to go digital. In fact, that's one of the things that holds them from becoming aggressive on the digital space. Because if they were worried that they would lose their business, etc., they would probably move a lot quicker. But having said that, they bring in tremendous amount of stability to the financial market. And I think the best outcomes from the fintech revolution, I believe now, will be that a lot of people will realize that hybrid models are probably quite underrated. A lot of fintechs thought that we can go out, and when you talk of lending, when you talk of insurance, where you have to collect money back, in insurance you have to actually investigate claims, whether it's general insurance or life insurance. In these sort of businesses, you need field presence. And many of the fintechs which went in and said we'll lend and our underwriting model is so good that we'll not need to collect are realizing the reality. And that's why I said that 2020 has been a reset button, because many have realized that either you need to have some field presence or you need to tie up with a bank or have a cooperation with some bank, whether it's co-lending or any other arrangement where you can be a face to the bank or the customer service face to banks, etc. So a lot of hybrid models will come up, but it is because banks have a tremendous strength, and in banking and in finance, being large is a very big asset. Whether you like it or not, a large balance sheet does wonders to the confidence of borrowers, confidence of customers, and so on. So I think banks are in good shape.
Yeah. In fact, Robin, that probably explains when you said, banks are still thinking of branches and having physical presence and more, and hundreds of such places, not just one or two or, tiny ones, like large numbers. And so the same question to you, Robin, you see a business fundamentals to be strong with all the banks?
Absolutely. And Sunil, I largely agree with Samir and Sanjay. If you look at the Q3 results that have been pouring out, you look at net interest income that's going up. Most of the Q3, let's say profits going down is largely balance sheet, provisioning. So one good change that I see is that pragmatism has come in at a very deep level in most of the banks. So they do realize that there are bad loans, there will be bad loans going forward. There isn't a lot that you can do about it. It's just because of the sheer volume of the economy, right? And I think bankers have started thinking like venture capitalists, right? So out of 10 investments, 8 will go bad. As long as you make money on the balance too, you're fine. And that's, in my opinion, that's a right way to look at it, because when you're making millions of loans, and look at the microfinance industry, right? How will you justify otherwise, and especially there's so much regulation around collections these days. So you can't even go in and send people to go in and collect your money. So I think highly pragmatic approach, a lot of very, very strong governance coming in, which is very heartening to see. I think the PMCs of the world that happened, in my opinion, they're probably good because some of those decisions had to be taken, and obviously some banks had to be shut down. And also, I think with the recent budget announcements, the formation of a bad bank, etc. It actually takes a lot of guts to do stuff like that, right? I mean, you're operating in an extremely diverse country, huge population, massive number of people who are still not in the core banking framework. So while financial inclusion on the one hand continues to be the bottom line agenda, but at the same time, you also got to make money and make sure you don't have cash sitting on your books, you've got to lend. So it's a very interesting problem to solve. A lot of my close friends are also within the banking sector, and we keep talking. When you have 8 lakh crore, 10 lakh crore kind of asset books, AUM, I mean, you obviously are not worried about whether the small loans go bad. I think you're really worried as long as the overall numbers look good and you are able to take some hard decisions early on, which the bankers today are doing. I think you should be all right. The fundamentals look really good in my mind.
Sure. So, going by, taking off from one point that Robin mentioned, that, government and regulators are certainly paying attention to what needs to be done, and they're doing their bit. Let's be, fair to them. So our subject remains, how we can take things towards 2025, make them bigger. So we don't need to kind of critique as to what the government is doing, how much it's doing, right, wrong. We can have a separate session on that. But if there were certain things which, if you were asked what is that the government could do and should be done, and why I ask this is when I ask you, it'll be carried in the magazine and it'll reach the people it has to reach. So it's a very editorial kind of a question. Please see it like that. That what is it that you think one or two things that the government could do, right? You could talk about your own business from the point of view of your own business, or overall banking, financial services and insurance sector. Maybe one or two. We don't have the time for too much more because I want to touch upon your core area, which is technology. I want to come to that. But if we want to talk about policy support that the sector needs, what are the one or two things that you would want to mention, Sanjay?
Sunil, what I would say is that there's not much that the sector needs from the government per se. And I believe that, as far as the government stays away from business, so much the better. But I think I would say that there's one area where government can help, and that is in use of digital assets. And typically when you talk of the Aadhaar, the Jan Dhan accounts, etc., now there's a lot of debate on whether that can be used for identifying customers, etc., and whether it contravenes on the privacy. Government has to come and clarify that piece, because Aadhaar was started although with the objective of providing public support to the people at the bottom of the pyramid, but the fact is it is so useful to identify customers, identify individuals in India, because we don't have no other basis of identifying people. And I come from a time when we used to identify people by looking at their statements and their school certificates. So I think this is far more efficient way of doing business, and it adds to the speed. And I think a lot of fintechs which came in and started using Aadhaar suddenly got a big surprise when the Supreme Court ruling came in and said that you can't use this. Now, someone has to clarify, and that is the structure that the government should clean up. Government is quite proactive, I think, the fact that we have the Aadhaar and the GEM trinity. And also now they've started talking of having a data aggregator. Recently, I think there was the RBI government policies that said that they want to have data aggregators, which will be neutral, which will provide data which can be used for various digital purposes. So government has done enough in terms of setting the foundation, but clarity in terms of what can be used and how it can be used effectively is important. And I think that's about all that we really need the government to do.
Samir, policy support, any one or two things that really would help the business? It's, good news for anyone who's getting into it.
Yeah, I completely agree with what Sanjay said. I think beyond that, there are maybe a couple of things. One is that I think there is a lot of loss of trust in this segment, right? That a lot of bad activities have happened, or anecdotally bad activities have happened. And I think we have to go beyond that. And I think government needs to play a bit of a role over there in terms of, ensuring that the sector as a whole doesn't get a bad name, or because of a few bad incidents, the whole sector doesn't get impacted. So that's one area. The second is, I think on the policy side, I think there are, how should I say, I think some proactive measures have to be taken, especially when we talk about digital lending, fintechs, etc. I know there's a lot of discussion, debate happening now, post again, certain bad events that have happened recently. But I think a little bit of proactivity in that sense would be really good, because everybody knows this is a booming sector, not in India, but everywhere else in the world. I know regulators everywhere in the world are kind of, thinking of what they can do. The players in the segment are working a lot with regulators to, bring more regulation. So I think that's a little bit of proactivity on the regulation side would also be very beneficial for the segment.
On that count, Samir, I saw Sanjay's website, and it says clearly how much where we steal. I think it's 14%. We'll never charge more than 14%, right? You make that clear what your structures are, how you work, and how, and all FAQs answered to a point that anyone, of course, I mean, I'm sure when you meet your customers, you explain to them in their language. But I was very impressed to see, you're talking about disclaiming all those things up front, which is fantastic. So, Robin, again, you would know what would make this industry grow, BFSI. So, what are one or two things that you would? So, Sanjay and Samir both talked about, what would be good from the business point of view. Any other thing that you think government needs to do?
Yeah, I think it's always a tricky thing to talk about.
I know. Which is what I said, what you desire. I don't want to say what right or wrong they've done.
Absolutely. I completely agree with my fellow panelists. I think at a very macro level, I did feel for a very long time that, the government was not focused on infrastructure as an issue, which did get addressed in this year's budget. So I'm really keenly watching how that goes. Because if you look at all the large banks, IDBI, ICICI, once they stopped being an infrastructure bank, that affected the economy at various levels, right? We have enough good retail banks out there. So, and to Sanjay's point, I think the less the government does, the better, right? You need to kind of let water find its own level. Public sector banks are a classic example. Right. I mean, I don't think banking should be left to the government. That time is probably over. My only, again, possible thought or concern would be that I really don't think the government has done enough to support either the insurance industry or the NBFC industry. I think these are two areas where insurance continues to be very highly regulated. I think with the slight opening up of FDI going forward, that might bring in, or attract some investors from a cash flow perspective, but it still is a very, very regulated industry. And somehow I think insurance in India, we are at what, 3 to 4% penetration, lowest in the world. That's really something which we need to address at a macro level, at a very large scale. I think that's a huge area of support, which I'm sure a lot of the insurance providers are looking for. And the other area, I think NBFCs, again, NBFCs in their earlier avatars, if you look at the ones that are really doing well now, they are extremely diversified, right? So you don't have, the small NBFCs are all struggling. I mean, even at the post-COVID, most of them are going to shut shop. So how many of you are part of a conglomerate like a Bajaj or a Sundaram, right, or a Chola? So what about those NBFCs which had an extremely, critical task of driving financial inclusion in a sense, right? And their ability to structure products which was very close to the consumer and look at Kerala as a model. I mean, Kerala has largely become what it has thanks to the large NBFCs. So I think these two industry sectors overall have not got too much attention from the government. And it continues to be very highly regulated. I think that's my sense that, those are the two areas where possibly the government can do a little bit more.
Thank you, Robin. That was wonderful. I think we have time just about one more aspect which we can cover, and we must cover that because it's essentially a fintech event. And I'll start with Robin on this because Robin has to draw curriculum to know the things for the future, right? So to that extent, Robin, tell us what technologies are going to be driving the growth. We heard in last session also, I also heard about blockchain. We hear about AI. We hear about robotics. What all, I mean, you can just give us an overview that these 1, 2, 3, 4, 5 are going to be critical to the sector.
Sure. So I will first start with the simplest ABCD, as it's called: analytics, blockchain, cyber, and data.
Thank you.
So without going into or kind of talking more about that, I think that's a given. But more importantly, the way we look at it, and typically the way most of our clients also look at the skills they are building, I think the technology part is just one part of the overall problem to solve for. The second, which is really around the use cases within areas such as lending, for example. Or there is a whole new area that we are now building capability around for our clients in the wealth tech area, right? So when you talk wealth tech, when you talk lending, when you talk payments, for example, it's not good enough just to have an understanding of, let's say, open source or full stack, right? It's a lot more than that. The third area is really around the role. So what happens typically is, most of the and we are in the for simple terms, we run the largest finishing school in the world for the BFSI sector. Now, one of the reasons why you need a finishing school is really because the graduates who come out of most of our academies are not prepared to face what industry throws at them. Right? They don't understand the job roles. They don't understand the function. They don't understand, for example, what is the real meaning of problem solving. They don't understand teamwork. They don't understand the ability to translate a use case into a technology-based solution. So for us, while we do a lot of the core technology, the ABCD, as I mentioned, but we are equally focused on the role definitions, on the functional outputs that are required for each of these roles.
How they will operate.
Absolutely. And they're very critical, right? And the third part, by the way, is, again, we say, for example, most of our graduates are first day, first hour productive. What does that mean? That, it essentially means that not only do you know your role, not only do you know the product or the technology on which you're supposed to work on, but you also understand what is the outcome that's expected and what role that you are supposed to play in the overall scheme of things, right? So things like problem solving, softer skills, the ability to communicate with your peers and all of that. So it's a bit of a well-rounded, intervention that's required to get
Yeah,
through.
sure. That's the kind of talent you're going to need. So Sanjay, in terms of pure play technology, what are the technologies that you see getting into the sector, which may not be there now, but since we're talking 2025, you would know from various researches that are happening, you hear from your, technology suppliers, technology providers. What do you see to be coming in?
Sunil, I think on technology, the biggest mover will continue to be the good old artificial intelligence, machine learning, and the cloud infrastructure. So the machine learning model, the analytics, or the artificial intelligence is the key mover. Whether whatever we may say, it may sound unsexy, but that's what it is.
No, absolutely.
On the blockchain, my view is a little contrary. And I believe that blockchain, while it is very useful, a distributed ledger can be extremely useful, but for some reason, it has not picked up and it has not taken off. We've been talking of it for the last many years. So there's obviously a complexity which is difficult to overcome. And my sense is that blockchain will play only a limited role in the next 5 years if you're looking at it. I think there'll be a lot of play on the security, biometrics, even the, I would say, IoT, Internet of Things. So these are the pieces that I think will now start developing. And I think also on regulatory technology, RegTech, which is to say that from a data science perspective, how do you identify a fraud? Or how do you identify high risk cases? Or how do you identify a money laundering situation? These sort of things, instead of people waiting for an audit, if the transactions are to become fast, we need to have online capability to detect. So I think that's the another piece that will probably play out in the next 5 years is my view.
Sure. Samir, you've done a lot of work in this area in any case, with your psychometrics and several other factors. So you also, I'm sure, look at newer technologies that could be playing a role. We may not be using them, but like one day we are going to have some such technologies which are going to get into sectors. I mean,
yeah. So I think in a way all technologies are being used, but I think the way they will be used in future will be slightly different. Okay. Right. So let me take an example. Let me start with when we think about a user from a front end perspective. I think we're going to see a lot more of video and voice happening, and that too in vernacular languages. Right. Even if we spoke about having branches earlier, I think it would be spectacular to walk into a branch in a village where instead of putting people, you have tablets everywhere and you just connect to person sitting somewhere centrally, right? And that kind of brings the cost down, but also gives access, right? It's very difficult to hire and skill up people and train people to kind of have everywhere, right? So I think we'll see a lot of voice and video, and it'll kind of in my opinion, it'll almost be seamless between bot or virtual to reality, right? So you may at one point be speaking to a bot, and then suddenly that transforms to talking to a person, depending on the complexity of the case. So that's from a front-end perspective. I think from a back-end perspective, all of these things, artificial intelligence, machine learning, etc., will keep happening. There'll be a lot more evolution in that. I think one thing Sanjay mentioned on biometrics, I think biometrics is something that we're going to see a lot more of. And I mean, I always think of it like this, right? If somebody can actually just look at their phone and talk to the phone, and the phone being sort of the assistant or the tradition, in the traditional sense, the bank manager, and you talk to them and they kind of make a decision by just looking at your face, how you move your facial expression, pupil dilation, and things like that. I think that tells you a lot about people. Of course, when you chat face to face, I know whether you're being evasive about answering questions, how upfront, honest you are, etc. It would be wonderful if your phone could do that for you instead of an individual sitting over there in a way that is sort of more consistent than what human beings would do. I think that's the kind of technology we need to be seeing in future.
Thank you so much, gentlemen. This is all the time we have for. I'm getting messages to close now because people have to move to the next thing. Thank you so much. I think it's going to be wonderful. What said augurs so well for the sector, and I'm sure all of you in your own areas of work are going to be doing fantastically well. Thank you so much for joining us this afternoon.
Thank you, Sunil.
All right, so that was the last session for you all, ladies and gentlemen, and we hope you enjoyed the day one of Festival of Fintech, Conclave, plus the awards that we have for you. That will happen tomorrow. You have the link. Please make sure that you join in tomorrow as well. We'll have some amazing conversations and, of course, the awards. If you want to know more, if you want to access the data of this day's amazing conversations, our social media handles, BW Businessworld. You can go and check out on all the social medias, and we'll be very happy to have a conversation with you. I would like to thank all our partners from Jaggle, Angel Broking, Cambridge Center for Alternative Finance, and, of course, BW Businessworld. Is really happy to bring forth this first edition of Festival of Fintech, Conclave and Awards. We'll see you tomorrow. My name is Robin. It was a pleasure to be a host, and looking forward to seeing you again. Cheers.